cryptos or whatever. I mean, that's something I've heard, I read in the newspapers, but I'm not an expert. And therefore, I asked my colleague who organized this conference to, write my speech because I shouldn't look stupid. And yesterday, when I was reading through the script, I figured out that I'll probably do injustice to all of you and your intellect if I kind of read out this speech and pretend to be knowing stuff I don't know. So I'll move away from my prepared script and I'll talk about things I know. And what I know is, with my experience of 30 years in the industry, that new sectors, when they start with a lot of hype. They start with a lot of promise, and there's a lot of interest. A lot of players jump in, and then they splutter, they fail, they change course, they pivot. The people with short-term interest fall off, and those who see it as in a strategic manner basically continue and win the game. So I'll talk about a couple of examples which I have seen in my career, where I've seen this happen. And I think that will help you understand where blockchain is today. But when private sector came in, the regulation was still what was there for the PSUs were at play. And they were lacuna. And a lot of people started exploiting those lacuna. There was lacuna in calculation of the NAV. So you could inflate your NAV or deflate your NAV. NAV is net asset value of the units that you invested in. There was, but when private sector came in, to calculate the regulation was still what was there for the PSUs. If SEBI had prescribed were at play, which you could not exceed. And they were lacuna. By altering the formula, and a lot of people started exploiting those lacuna. There was lacuna in calculation of the NAV. So you could inflate your NAV or deflate your NAV. NAV is net asset value of the units that you invested in. For debt instruments, there was no norm. There was highly liquid. But when private sector came in, to calculate the regulation was still what was there for the PSUs. If SEBI had interest rates were at play, which you could not exceed. And they were lacuna. By altering the formula, and a lot of people started exploiting those lacuna. There was lacuna in calculation of the NAV. So you could inflate your NAV or deflate your NAV. NAV is net asset value of the units that you invested in. For debt instruments, there was no norm. There was highly liquid. But when private sector came in, to calculate the regulation was still what was there for the PSUs. If SEBI had interest rates were at play, which you could not exceed. And they were lacuna. By altering the formula, and a lot of people started exploiting those lacuna. There was lacuna in calculation of the NAV. So you could inflate your NAV or deflate your NAV. NAV is net asset value of the units that you invested in. For debt instruments, there was no norm. There was highly liquid. But when private sector came in, to calculate the regulation was still what was there for the PSUs. If SEBI had interest rates were at play, which you could not exceed. That's how you behave when you're young. And then 99 internet happened. I said, oh, wow, this is great. This is the future. I need to jump. So I jumped to internet very fast. At a time where your modem would take 5 minutes to connect to the internet, and you were lucky if you were able to open one email and respond to it in 1 hour. That is how internet used to work in 1999. I'm talking from home. Office still had a good connection, but at home, that is how the situation was. You need a 40,000 machine to connect to the net. You had to pay almost 1,000 rupees every month, and this is like 1,000 rupees not today, 1,000 rupees way back. That was almost, I think, 10% of my salary at that point of time. So imagine 10% of your salary going on an internet connection, 4 months of salary to get a device to connect, and what was available, the content available was very, very limited. There was hardly any content on the net, very limited content. But the hype was massive. And in 2000, we had a big boom. You know, Yahoo and this thing, and everybody's talking about my own company, Times Internet. There was an article somebody published and said, you know, Times Internet is a great company. Its valuation is almost $5 billion. And you know, one of our managers, she launched a women's portal because there was a iVillage in America which was launched, and it got a valuation of some $200 million. So we bought some books, we dug out some old content, created a website, and somebody said, look, I've created 100 million value. Right? Just like that. What? Uploaded 100 articles about women, created a website, created a design and template, and I've created 100 million value. I think that's where we are today when we talk about this industry. But that's not the point. The point is, in 20 years, look where internet's come. Right? Today, all of us, the device cost has come down, the connectivity cost has gone down, the speed has gone up, and today everything, you can't imagine life without internet. So I think anybody who's looking at blockchain, cryptos, and the associated technologies from a short-term perspective, I think you should prepare yourself for a long-term perspective. The long-term may not be 20 years like in earlier years, because the pace of change is now very different. So maybe a 5-year, 7-year scenario is something when this will become a very serious business, right? And my 2 cents is just about that if you believe in something, stay put with it. Don't fear regulation, because regulation plays a very important part, because it actually prevents bad actors from disrupting the sector in the wrong way. And for anybody who's serious, they should try and welcome regulation. Yes, of course, we know that there's a challenge that the government of India is not very keen on cryptocurrency in the private hands, so they're taking upon themselves to launch their own digital currency. So it will be like a fiat currency. And I think governments have their own reasons why they want to do this. So I'll not get into that. But I think the use cases are tremendous. I was just discussing with our guest here that land records could be a very interesting area. Look at the number of court cases around property disputes that we have in this country, especially with title, related to title and title transfer. So there's a lot of opportunity, and I will not take any more time to keep you from the people who really know this subject to tell us what it's all about. And thank you for coming here. Thank you.
Thank you, sir. That was indeed an interesting and insightful address. We now move on to the keynote address of the day, titled Unraveling Web 3.0 Blockchain Technology. In this session, the panelists will discuss if Web 3.0 blockchain will be the base of all the innovations and how it can be implemented in businesses. For this session, we would like to welcome Alexander Schul, co-founder, Benki and Rome Blockchain Labs. Please join me in welcoming him up on the stage. Over to you.
Thank you. Hello, everyone, and thank you for attending the India Blockchain Conclave. And also thank you to the Financial Express team for hosting me here. So in today's conversation, I really want to begin, like the title says, unraveling Web 3.0 blockchain technology. So the conversation today is going to be pretty straightforward. Essentially, we're going to look at what exactly my company, Rome Blockchain, is. We're going to then have a brief understanding of the evolution of the internet over the years. So that way we can come from a generalized concept of what the internet started as, like Mr. Sinvali spoke about, into what it's developed of today. And then we're going to define Web3. With this definition, we'll have a standardized platform from which we can understand business innovations utilizing blockchain in the Web3 space, primarily consumer advancements, healthcare, and government operations in the educational space. And then from that, we're going to look at the future of society in a Web3 world by answering a couple questions around how this technology can create successful businesses. So at a high level, what exactly is Rome Blockchain Labs? We're a global private blockchain research and development laboratory. We create abundance by hiring experts in the space of cybersecurity, blockchain engineering, financial systems, data management, and more. We were talking earlier, and actually the CTO of Rome Blockchain Labs, Anna Makitalo, is one of the inventors of internet banking. Back in the 90s, he worked for a company that was bought out by IBM and formed the basis of internet banking as we understand it today. If you participate in the decentralized finance space at all, we're most known for our money markets, which are decentralized lending and borrowing platforms. In addition, we have liquid staking services, informatics, but beyond that, we act as consultants for both private industries as well as government entities. So, because this isn't a presentation about Rome Blockchain Labs, let's move on to Web3. So, we're going to begin by understanding what Web 1 was, the early days of the internet. And there's really a couple key points you can understand to grasp all of Web 1. It was basically read only. That means you could extract information from the internet, but you couldn't append or add any information if you wanted to. It was primarily simple web pages curated by a few centralized authorities and mostly corporate or government focused. So it's
And
kind
there's
of
really
like
a
an
couple key
encyclopedia,
points you can understand
where an encyclopedia
to
is
grasp
published by
all
a
of
small
Web3.
group of
It would
individuals
basically
and then
read
disseminated to a
only.
large amount of
That
people
means
to
you could
reference.
extract information from the
Web
internet,
2
but you couldn't
changed
append
that
or
paradigm
add any
by
information
including
you wanted.
writing permissions
It was
onto the internet.
primarily simple
With
web
Web 2,
pages
anybody
curated
with
by
an
a
internet
few
connection
centralized
can now
authorities,
append data in a
and
dynamic
mostly
manner,
corporate or government
which
focused.
allows
So
for
it's kind of like
community-ran
an
networks
encyclopedia.
as
When
opposed
an
to curated
encyclopedia
services.
is published by a
This
small
is the
group of
internet as we
individuals
understand it today.
and then
So
disseminated to a large amount of
chat
people
rooms,
to reference.
forums, message
Web 2,
boards, social media
changed
networks
that paradigm
all came about
by
because
including
of this writing permission.
permissions onto the internet.
So
With Web
now
2,
we understand
anybody
the
with an internet
basics
connection can now
of
append
Internet
data
1,
in a
Web 1,
dynamic
Web 2.
manner,
Let's look at
which
Web
allows
3.0
for
and
community-ran
how exactly
networks
should we
as opposed to
understand
curated
what
services.
Web 3 is.
This is the internet
So
as
from
we
a very
understand
high
it.
level, we
So,
can look at Web 3
chat
as a
rooms,
highly individualized,
forums, message
disintermediated
boards, social
web
media
support,
networks
web experience
all came
supported
about
by
because of this
semantic
writing
languaging,
permission.
user feedback, and
now we
novel data
understand
morphologies.
the basics
Now, this
of
isn't a university
Internet
lecture,
1,
so
Web
we're
1,
not
Web
going
2.
we're not going to
Let's look
run
at Web
with that
3.0
definition in
and
perpetuity.
how exactly
Let's
should
go ahead
we
and take some time
understand
and break
what
apart
Web3
this
is?
definition to better
So from a
understand
very high
on a
level,
more
we can
practical
look at
level
Web3 as
what
a highly
is this new web experience that we're all going to be walking into over the coming years.
supported by
So the
semantic
first concept to
languaging,
understand is
user
that it's
feedback,
highly
and novel data
individualized.
morphologies.
Another word for high
Now, this isn't a
individualization
university
is
lecture,
targeting.
so we're not going to.
So if you think about pop-up ads back in the mid-2000s, right?
Let's
You go
go
into a
ahead and take some
website,
time
an ad
and
pops
break
up,
apart this
and it really shows
definition
you
to better
something you're probably not interested
on a
in,
more
something you really
practical
wouldn't buy.
level, what
That's an
is
example of a
this new web
non-targeted
experience that we're all
advertisement.
going to be walking
But go onto
into
Google
over the coming
nowadays and
years.
search up a specific
So the first
car or
concept to
truck,
understand is
and
that
what do
it's
you
highly
see?
individualized.
On your advertisements,
Another word for
that
high
car or truck is being
individualization
shown to
is
you.
targeting.
That's targeting.
So if you think
That
about
feature-
pop-up ads back in the mid-2000s, right? You go into a website, an ad pops up, and it really shows you something you're probably not interested in, something you really wouldn't buy. That's an example of a non-targeted advertisement. But go onto Google nowadays and search up a specific car or truck, and what do you see? On your advertisements, that car or truck is being shown to you. That's targeting. That feature of individualization of content is an aspect of the emerging Web 3.0 space. The next major concept is disintermediation. A more common term is decentralization. Essentially, we're beginning to see networks that are emerging that actually have no centralized authority. So cloud computing would be a pretty basic understanding of that, where there can be one portion of a cloud service can go down and the rest can pick up the slack. But it's not really decentralized because you have Google or Amazon or some other communications or telecom company or tech company running that platform. The Tor network, the TOR network, which is a peer-to-peer internet system, is a better representation of this disintermediation. We're also seeing the emergence of what's called semantic languaging. Now, I'm not a semantic languaging or AI expert, but fundamentally what it is it's a recategorization of words to better extract and understand meaning or value. So, for example, if you take the word computer, today almost every utilization of the word computer means the hardware, the technology. But if you go back to the 1920s or the 1910s, a computer was a person who computed math. So if I, for example, write a story about a computer that's based in the 20s, typically linguistic analysis software won't know that I'm talking about the person and not the hardware computer. Artificial intelligence is able to actually look at the context of a post and extract the deeper meaning behind that. So this level of differentiation is emerging in the internet. The last two are user feedback and data morphologies. User feedback is essentially meaning that whatever you do on the internet shapes how you experience it. So if you look at Twitter or Instagram or Facebook and you like something, you downvote something, you share something, that's actually kept and stored, and then that reshapes what you see in your content stream. So like if you watch, for example, that you upvote or like something on Facebook or on a different platform, you'll begin to see more of that as you use the platform increasingly. It actually curates what you want to see. And the last is novel data morphologies. Morphology is just a term that refers to the study of some structure. So minerals have morphology, organic compounds have morphology. Data also has a morphology. It has a structure to it. An example would be a blockchain. A blockchain is a structured manner for storing data. That's an example of the new data system that's emerging in the Web3 space. So if we reanalyze this definition that we started with, Web3 is a highly individualized or targeted disintermediated web experience or decentralized web experience supported by semantic languaging, meaning deeper meaning, with user feedback, which is pretty self-explanatory, and novel data morphologies, or advanced data structures. Basically, we're creating a personalized internet in the Web3 space, and blockchain is one part of that. So let's go ahead a little bit and understand what role can blockchain play in the business sector. So we can begin by looking at blockchain in the consumer sector specifically. Now, there's the idea that blockchain offers trustless, immutable, and persistent data access. Taking this idea in mind, I want you to hold on to the concepts of disintermediation and user feedback as we look at an example, mainly the music industry. The music industry being the record labels, the artists, everybody involved in the dissemination of this content. So just this year, the global music industry had about $27 billion in revenue in US dollars. Of that, artists kept approximately 10 to 15% of the record sales that they generated. At least in the US, it's actually quite lower. Record labels are pretty strong in their negotiating tactics, which actually offers an option for the innovative entrepreneur. They have a demand from the artists to gather more returns off of their sales while also being able to disrupt a $27 billion industry. How do you do that? What you can do is you can actually utilize Web3 technology to reshape the way that music distribution and royalty payments are handled, both automatically and in a decentralized manner. Some of the technology that allows this are smart contracts, NFTs, and AI-generated artist recommendations. That's great, but what does this actually look like? If I want to build a business and I want to utilize Web3 to make it successful, how can I use that? Well, you can use smart contracts, which are just packets of code programming on a blockchain, to create a decentralized music marketplace where anybody who accesses the blockchain can then upload their content on an NFT, which is basically a non-fungible token. Think of it kind of like a stock certificate. There's a specific address or number for a stock certificate. It's unique in the world. Same idea for an NFT. As an artist, I can upload my album or a couple tracks that are linked to my account. Then anytime that is sold on the blockchain, I automatically receive royalty from that. So I can sell it for $10,000 if it's a limited edition. I get 90% of that. I get 95% of that. The remaining amount goes to the platform to maintain its operations. However, because of tremendously low overhead, it's a blockchain smart contract, I pay almost nothing to run that. So I can run a highly profitable business while still maintaining very good margins for my customers. In conjunction, I can utilize AI-generated artist recommendations, the user feedback, to actually accelerate the consumption rate of music on that platform. I can analyze the content, analyze the beats per minute, the rhythm, to see what buyers like, and then begin targeting more music that they might like based off those recommendations. So now we understand at a high level how Web3 is beginning to crystallize in business practice. Let's go ahead and look at healthcare. So blockchain technology can actually increase quality of care and reduce strain on healthcare systems. The main concepts we're going to pull from our Web3 definition are semantic languaging, so basically deeper meaning, and novel data morphologies, or blockchains. So the World Health Organization estimates that in 2020, can take data, healthcare records, and store them on-chain. So we can encrypt them and then securely analyze that to detect possible complications before they happen. So how exactly would you do this? How can I create a business around this? Well, I can take a blockchain, I can upload patient healthcare records, and I can encrypt them such that nobody has access to that data except for pre-approved individuals, say doctors' offices, researchers, the patients themselves. And then I can utilize an aspect of blockchain technology called zero-knowledge proofs, or ZK proofs. And a ZK proof is a fascinating decryption method that is actually getting in popularity. Think about if, for example, you want to buy a bottle of liquor. In the US, you have to be 21 years old to purchase alcohol in most states. You take your driver's license, you give it to the clerk, he checks your birthday and says, yep, you're of age, you can buy your bottle and leave, right? But what happens in that transaction? You give a stranger all of your personal information. They know your height, they know your weight, they know your home address, things that a random person really should know. Imagine for ZK proofs that in between yourself and the clerk is a black screen that you can't see through. where on one side you take your driver's license and you press it up against the screen and all that data is read. On the clerk's side of this experience, they see that a driver's license was added, but they can't read the name, they can't read the address, but they see that is there. And for this transaction, they have to know, is this person born at or before a certain date to make sure they're 21 years old? They press a button, the computer decrypts the information, checks it, says, yep, this person's over 21. All the clerk sees is a green check mark. The computer has securely checked the information, it's verified it with zero knowledge to ensure that the information is accurate. So finally, we can utilize AI technology to take this process of securely de-anonymizing healthcare data and look for trends and patterns. If you say, for example, 10,000 people who were born in this location at this age with these pre-existing conditions all had Alzheimer's, I can take that structure and apply it to a data set of other healthcare records. And if I find people who match all three criteria, I can recommend that they're pre-screened. I don't have to know who they are. I don't have to know where they're at. If they fit the pattern, they can get pre-screened. And we can save an untold amount of money through that process, utilizing blockchain and Web3 technology. Finally, let's look at blockchain education, the government side of things. So blockchain technology can actually expand accessibility and the education of a nation's citizens. So Statista estimates that over 6.6 billion people on Earth have access to a smartphone. So the majority of people in the world can access the internet from a mobile device, essentially. However, only 66% of children receive a secondary education, meaning that around the age of 10 to 12, most children stop learning. They could be for cost, it could be for needs at the home, whatever it is. That's a lot of kids not gaining a better understanding of the world every day, which impacts a nation's competitiveness on the global scale. So how can we solve that? What you can do is you can take structured educational content and upload it to a blockchain system and then connect a student identification system to that blockchain. So for example, using ZK proofs, you can anonymize a child's information and attach it to a public record. And then as the student walks through that educational platform, as they learn about math, linguistics, chemistry, whatever they're studying, English, it could be any topic, artificial intelligence systems can actually analyze and see how they're performing on the blockchain. So for example, if you take the same exact question and then you break it up into a long answer form and then a multiple choice form, and you see they're excelling at the long answer form, but they're struggling at the multiple choice, you can adapt the way the information is communicated to the child to encourage them and challenge them to grow while offsetting that challenge with progressively easier or perhaps even harder question formats in a different manner. So you can actively intelligently adapt education for children on a blockchain using Web 3.0 technology. In fact, this layout can utilize everything that we spoke about with our definition. That educational system would be highly individualized. On a blockchain, it can be disintermediated. So that way you're not dependent if there's a rolling outage somewhere for a server in a certain state or in a certain country, the entire system doesn't come down. So you retain secure access to educational content. You can adapt the content via semantic languaging, and then you can also utilize the feedback of the student to better understand their learning process. And then you can store it on a blockchain for easy access and immutability. That way the information can never be changed. So we've gone ahead and looked at 3 examples in the consumer sector, in the healthcare sector, and in the educational sector to see how Web 3.0 technology can be utilized to better serve customers and clients and build a successful business. So overall though, what exactly is success in Web 3? You know, business success is its own animal. You can spend 3 hours talking on that, and I got about 4 minutes left, so I'll keep it short. But one thing to understand about Web3, and this is something that you won't see very much of in a lot of outlets, it's that not all of Web3 is blockchain, and not all of blockchain is cryptocurrency. Cryptocurrency is a very valuable tool. The majority of the platforms that we build at Rome Blockchain Labs utilize a cryptocurrency, but some don't. A lot of the companies that come to us and want to talk about their new invention or looking for consulting advice on a Web3 project want to launch a token. But when we do the economics, we realize it actually makes more sense to not tokenize. So a successful Web3 initiative will answer these questions. First, it'll answer, why would an individual feel compelled to use my system? You have to think, you're not competing against necessarily just an existing Web 2 market actor. You're competing with an experience. TikTok, Twitter, Reddit, those are all highly, highly individualized and curated experiences. People spend a lot of time on social media. That's what they expect in platforms going forward. Web3 technology allows you to have a social media-esque experience, but in a way that can actually function in a profitable business. Next, we have to look at how exactly can I build my service that isn't reliant upon one centralized system. Redundancy as a concept is an absolute given in technology. I mean, redundancy, redundancy, redundancy. The interesting aspect of decentralization is that redundancy is built into the system. It's baked in there. If a certain node or if a certain computer goes down, you have the entire other part of the network that can pick up that load. So you have to begin to think to how your platform can adapt to that type of network. Next, we have to understand what deeper meaning can my solution bring to the user. We can't give people blank data, blank words, blank sentences, and expect them to necessarily immediately grasp everything that they're saying. People probably, I would have to imagine, based on the amount of content they get in a day, see more differentiated opinions, viewpoints, and ideas than they ever have in the history of humankind. There has to be a way that we can deliver meaning in a much more rapid fashion. This is where the semantic languaging comes in. How can I adapt my platform's experience to a client as it's being used? So what does this mean for my company? Well, if you think about how most companies gather user feedback, what is it? It's at the end of utilizing it, it's a survey. It's a 1 to 10 rating on how was a website experience. How often does that actually get a response, if ever? Very rarely. Very few people, for their own goodwill, are going to take the time out of their day to answer random questions. I mean, it's not very effective. What's more effective is to be able to gather data actively based on utilization and then adapt the experience to that so I can shift and guide users through my platform in an intelligent manner. And then finally, what types of data structures will best answer these above questions? In some instances, blockchain isn't the best solution. Sometimes it's more complicated. It might get you, fundraising easier because you're using blockchain, but that goes back to the problem of valuations. Just because it's novel doesn't mean it's necessary. What's necessary is value. So is a traditional SQL database more viable? Potentially. Is a blockchain or directed acyclic graph or some other fancy morphology better? It might very well be. But with this in mind, as you're paying attention to the wonderful speakers we're going to have later today, ask yourself this question. What can Web3 do for me? Thank you.
Alexander, I request you to please stay with us for a little more moment. Okay. If anyone has any questions, feel free to ask. If not, we proceed to the next session. Okay, all right. Thanks a lot, Alexander, for the insightful session. Thanks a lot. We now move on to our first fireside chat of the day, titled Digital Assets and Its Growing Relevance. In this session, panelists will discuss the growing role of digital currencies and how transactions are expected to evolve in the future. For this session, we would like to invite Naveen Gupta, Managing Director, South Asia and MENA, Ripple; Nanjunda Palekanda, Founder, Nija Venture Impacts; Vikram R. Singh, Chief Executive Officer, Antia Solutions; and to moderate this session, we have Ritoshi Banerjee, Correspondent, FE Digital. Please join me in welcoming our esteemed guests on the stage.
Thank you, Vaibhav. Hello and welcome to the panel. So, as the name suggests, we'll be discussing about how digital assets can play a part in the global monetary landscape. To give you a bit more context, even as cryptocurrencies continue to face challenges, there is no doubt that gradually many governments across the world have warmed up to the idea through the introduction of central bank digital currencies, also known as CBDCs. So my first question is for Naveen. So, can you please elaborate on the differences between stable coins, which is the dollar-pegged form of cryptocurrency, CBDCs, which is a central bank backed form of currency, and cryptocurrencies, which includes Bitcoin and Ethereum.
So we'll be happy to do that. First of all, thank you very much for inviting me, and keeping in spirit of the topic, at least one person needed to be digital. So I'm digital and everybody else is physical, right? So then we get the best of both worlds. Right? So what I'll do is you would have of course heard all the acronyms, but I'll just try to simplify it so that we can just comprehend and put our arms around sometimes simple things being made complicated, right? So think about if Reserve Bank of India was an issuer of a digital currency. So the easiest way to think about it, all of us may have 100 rupees in our pocket, and Reserve Bank of India decides, hey, instead of giving you a physical rupee, they will have the photo of that rupee on your phone, which you can essentially is being issued. So you're taking the risk on State Bank of India in this case, or for example, if Tata Group was ever to issue a stable coin, then you're taking a risk on Tata Group and their word that they're holding the assets that they claim to be, right? The third one is cryptocurrency. So the easiest way to think about cryptocurrency is, let's assume India Blockchain Conclave was to start an airline. Let's call it IBC. That's the airline that they're starting, and that airline was issuing airline miles, right? So everybody who essentially rides on the airlines gets issued airline miles. Now this could be a cryptocurrency. You can almost think of it that way, a benefit that you're getting from IBC airlines, and these airline miles later on can use for redeeming tickets and other things, right? And because IBC flies in 50 countries around the world, it flies to Germany, it flies to London, it flies to Singapore. What it would say is that these airline miles can then be essentially traded against GBP, against INR, against Singapore dollar. So in a sense, that becomes a cryptocurrency, because you could essentially use airline miles not only to fly, but also convert them into a local currency, or directly pay for goods and services using that. So just to make things simple, so in that case, this particular IBC Airlines becomes issuer of a cryptocurrency, which essentially gives you a benefit of airline miles, and the use cases that you're able to earn by flying, and then you're able to spend on goods and services that are built in this ecosystem. So these are three things, but the commonality is the blockchain. So the blockchain is nothing but a ledger in which the debit and credits can be recorded and make sure that there is no double spend, which means, let's assume I claim that I have an Indian rupee in my pocket, the number is 123, and Sanjeev in this room also has, when I transfer this money to him, then only one of that can be transferred to him, and if I've done two transactions, then one transaction will get rejected and one will be accepted. So it's as simple as that, built on the blockchain technology, but three different, you can call it use cases of the same technology.
Right. So my next question is for Nanjunda. So do you think there are gaps that CBDCs can fill which has been left by the fall of cryptocurrency? And when I talk about the fall of cryptocurrency, I mean the fall in valuation, like how cryptocurrency like Bitcoin used to be valued a couple of months back and how it is being valued in the current context.
Good morning and thank you for having me here. There are two questions. One is from a point of how the CBDC is going to fill the gap that cryptocurrency is supposedly left, right? So right now in the current context, our e-rupee, that's the Indian CBDCs, right? Right now it's just a digital rupee which is still in test, but even as of now, the indication from the government is that this is not even an instrument of investment, right? There are no interests. So clearly, it is still a mile to go before it can potentially be compared in terms of replacing or filling a gap of cryptocurrency. See, this is essentially comes down to three things, right? Value creation, and value realization. So right now, CBDC in its visualization is just a value. So I think it has to go that mile of value creation and value realization. And coming to, that kind of answers your question, but you want me to comment on the valuation of crypto?
Sure, you can go ahead.
Okay, so see, I think essentially now whatever the cryptocurrency valuation which can be triggered by a tweet of a person, right? Essentially is so because these are all utility tokens and pegged against nothing, so to speak. And of course the volume today, so at least it gives some base to some coins. But irrespective of it, it's a perceptional value, and my take is in its current approach, yes, that is where the whole argument for CBDC kicks in. So, so I think I'm one of those who, for a securitization of tokens. So I don't really see this can keep happening, and it can be triggered by institutions, nation states, and also individuals' tweets. So.
Right. So my next question is for Vikram. So Vikram, can you see a prospect where cryptocurrencies can be aligned with CBDCs? Like for example, one exchange versus multiple exchanges. And with CBDCs being rolled out, does it mean it is the end of the road for multiple exchanges?
Hello. Good morning, everyone, and thanks for having me here. I would put a couple of context over here, actually. First, we need to understand why the need for CBDC, even when we as an organization started working on in blockchain space. So our belief was on to the technology, not on to the cryptocurrency, because why crypto was invented? Because people wanted to have full control over their assets, ease of sending money across the borders, right, and financial inclusion per se. And why, if we understand why CBDC, then the CBDC is trying to fill those gaps, like I would say the left by, maybe which are existing in the current system, because sending money is still a problem, I would say, like so many questions to be asked. So in my opinion, CBDC, which is a legal tender, there is no correlation between crypto and CBDC. Basically, the why behind CBDC is trying to fill the gap, left by, or maybe the feature which are provided by the cryptocurrencies, right? And so both can coexist in a, I would say, in an ideal scenario. There can be exchanges looking after or maybe trading into the cryptocurrencies only. There can be exchanges like trading into the CBDCs only, because CBDC, the mandate before all the governments are to zero impact to the current system while they are rolling out the CBDC. So that is what they have to look into. So it will definitely take 3 to 5 years time actually to for the CBDC to start creating an impact into the system, but they will be equivalent to the cash, and with some sort of I would say the features which attracts people towards the cryptocurrencies. So this is my point of view over here.
Right. So Naveen, my next question is, from a financial inclusion perspective, how do you think that the introduction of CBDCs will give a refined definition to online payment and transaction mechanisms?
So I think let's again take an example because then it becomes easier for us to visualize. So for example, we are working in Bhutan along with the Central Bank of Bhutan on some of the financial inclusion agenda. But let's take the Indian context itself, right? So we all know that we have a scheme called as Nagera, under which, I mean, there's 100 days of work that's guaranteed to a large population of India, right? So now when the government pays out the money that is meant for that work, because CBDC is a programmable money, let's assume that money was not physical, but it was paid out as programmable money, which is CBDC, then you could actually restrict its usage. So you could restrict its usage to say, hey, it can only be used at food shops, at kiranas, it can be used only to pay hospital bills, and it can only be used to pay education, right? So then it can be, the current programs of the government could be very purposeful. So you essentially can limit the ecosystem for the usage of that CBDC being accepted at certain outlets only. Now that creates an advantage in terms of leakage on the usage of the money for the purpose which the government issued it for, right? And sometimes this money could also be kept for a certain period of time, that within 6 months you have to use it, otherwise it becomes nullified or it reduces in value. So a lot of those things can be programmed. So I always wanted to make a joke, but it may not go very well, is that demonetization will be very easy. You just need to press the button and everything can be demonetized. The 500 rupees note in everybody's pocket, you really don't need to do much, and it can be achieved by a stroke of one button itself, right? So what I mean to say is that programmable money essentially creates a tool for the Reserve Bank of India to essentially build purpose into the use cases and then be able to monitor or push the usage and the acceptance in a particular ecosystem itself. And to me, that can be very powerful because there must be, in all countries around the world, a huge amount of leakage, and CBDC then is able to stop it. But I would again also say that CBDC is in earlier phases of evolution in almost every country in the world, and depending upon the use cases. So I'll give you a use case in Palau, another country that we're working with, which has got a distributed islands, almost like Lakshadweep or Andaman Nicobar. And what the government there wants to do is, for payroll to government employees, they want to use CBDC so that people don't have to travel to ATMs to the next island, sometimes for a day, to essentially withdraw money. And now they will have money on the phone, which is legal tender by the government, for them to be able to use it in any shop that they would want to. The shopkeeper who accepts this money is guaranteed that they will essentially, that money will be accepted and will hold value. So depending on the country, there will be different use cases, but the programmability of it creates opportunities for use cases to be visualized and used.
Right. So, Nanjunda, with financial uncertainties still prevailing and how it is being predicted that 2023 will be a recessive year, do you think CBDCs carry the potential to ensure protection against global financial emergencies or catastrophes?
That's a question for an economist. I'll try to handle in a way I can best do it. Coming back again, that one, we don't have most of the countries adopting CBDC. We have very few adopting CBDC, and again, it's at a very early stage. And traditionally, the countries have responded to recession by printing more money. So at least some of them, and some of the big ones also have traditionally responded by printing more money. So what could CBDC do in its current tunnel vision, if I can say that, is that it becomes much easier, like what he was talking about, that it's programmed, so you just make everybody's 500 become 5,000 in their pockets, in their phones. But in the current scenario, it's still not possible. And only thing I see that the current perception of or potential reality of recession, whichever the school of thought people belong to, that one thing is, from a case for CBDC, this makes a good case for countries to adopt CBDC, considering this scenario that it is a lot cheaper to print, mint, move money versus program money. So from that respect, it gives perhaps far more confidence for governments to adopt it. But will this help handle in the current scenario? I don't think any country is ready to roll with handling or facing a catastrophe if assuming that we are running into one in 23, that this could be a potential savior. So I don't think we are in anywhere near that situation.
So Vikram, in the next couple of years, can you envision the prospect of CBDC being a legal tender?
So I would say CBDC in itself will be a legal tender when rolled out by any country. And if we scan the online data, 105 countries are already kind of have started contemplating on launching, coming up there with their own CBDCs, and I think 10 to 11 are already into the experimental phase, like beta phase, and another 15 to 17 countries are close to that. So 105 means like 95% of global GDP is already kind of like have started moving towards this direction. And however, it will take some time because again, as I said, like the mandate before every country, the challenge before every country is to have zero disturbance to the existing system while rolling out the CBDCs. And there are multiple challenges other than that also involved, like the level of anonymity which will be there, the kind of programmability which will be built in the CBDC. So it will take some time, but definitely will be there, I would say.
Just to, it is a legal tender.
So Naveen, in terms of creating awareness around CBDCs, how important it is, do you think, for global platforms such as the International Monetary Fund and the Financial Action Task Force to take up an active role in this context?
Absolutely. So first of all, if you look at FATF, if you look at IMF or even BIS, right? So what's the purpose of it? So if you can think about rollout of CBDC in any country, the first is just advisory, consultation, education, so that the regulators themselves and of course the infrastructure, the government infrastructure understands what is the purpose of CBDC, why they are doing it, and what are the use cases that they want to apply it to, right? So if there is a clear use case, there is a clear benefit, then they can go behind it a lot more purposefully, right? So there is a education and a consultation piece, which instead of every country figuring it out themselves, some of these multilateral organizations like World Bank can take on their own and provide that to the governments like they do today on a number of other aspects, right? Then the second part is tech, right? And if you look at, of course, keeping India aside, having been a board member at NPCI, I've seen India could do a terrific job, but most countries, and particularly the central banks, don't have the tech infrastructure, right? So when you are issuing money digitally and tomorrow it gets hacked, it's a big problem for that particular institution. So they need to make sure that everything is robust. So it requires significant amount of technical chops to make sure that whatever they're building is non-failable, right? It's almost as simple as that, right? And the third thing is among countries, because most of the CBDCs are domestic in nature, to be able to learn from the successes and the failures from another country. So whatever you learn from China, whatever you learn from Bhutan, can essentially be incorporated in India. India doesn't need to rediscover all the mistakes or all the successes that either one of these countries have had, right? And then the last aspect that I would say is this something called a special drawing rights, right? SDR, if you would remember, then when Facebook's or Meta's currency was going to get issued, it was going to be almost like an SDR, right? It could have been a basket of currencies. So what is still going to happen is, let's assume e-rupee gets issued, and let's assume in the UK e-GBP gets issued. Whenever you will move from INR to GBP, still you will need a currency in the middle, right? So this could be, for example, US dollar, right? Which essentially plays the part where INR converts to US dollar gets converted to GBP. Or the reverse, GBP gets converted to US dollar into INR, right? So that's how the money moves around the world. So still you need a bridge, right? And that bridge could be our digital assets. For example, in our case, we do it using XRP, or it could be the US dollar, a digital US dollar. So then there could be a fast and instant movement from hop, almost like ledger hops, from e-rupee or INR to US dollar to GBP and the reverse, right? And what one can build is one can build optionality in that case to say, hey, whichever is the cheapest, whatever gives you the most amount of GBP, you essentially use that route. So CBDC in itself, but this is of course a few years out, can create a platform where not only just domestic but cross-border trade can also be frictionless the way some of the local payments are there today. Like we use GPay, so GPay could be used in an international setting as well through this mechanism. But of course, those things are yet to come, and people like IMF, BIS can play a significant role so that that happens as well. As you know, India is the largest recipient of remittances in the world, and this year we may touch about 100 billion US dollars. And that's a lot of money if we are able to reduce the friction there.
Right. So Nanjunda, upon full-scale introduction of a CBDC, like in the next couple of years, it is expected that many other countries will be rolling out their own CBDCs. So how do you think that will have an impact on the global monetary policy?
Well, at a policy level, again, a question on economists. Just one disagreement with Naveen's thought that we will still have a dollar potentially being a bridge. I think that is where the CBDC will perhaps allow us not to entertain a bridge of sorts from USD or anything of that sort. So that is what is going to be significant in my opinion, where a CBDC is potentially going to weaken dollar, and we will obviously everybody will have their own fight to play that dominant role, but I think CBDC is going to make it a lot more even playground is my take. So Naveen perhaps disagrees, or maybe some of you, but that's my take. So that is going to be the significant change in the in the near future as how the world operates.
On that point, since you mentioned that CBDC will be weakening dollar, like, can you elaborate, like, why do you think will be the reasons behind it?
So one, essentially on the same argument that we will no longer be trying to transfer, change of rupee to pound, we will not be going via dollar. So see, globally, a lot of money dollar is making, a lot of value dollar is getting is in playing this bridge. So that's going to take away. Already, it sounds very mean to say that thanks to the war, but already rupee is getting paid for the petroleum or paid for a lot of these things. So we are already started bypassing the dollar, which is not going to strengthen dollar, and it's a different argument as why dollar is still strong. But with CBDC, this is going to become far more a bigger phenomenon. So that's primarily my argument on why dollar will be further weakened.
Right, of course. So my last question is for Vikram. So what do you think can be the potential alternatives to a CBDC? Like, for example, there are certain financial institutions that are rolling out their own form of currencies, which is not necessarily a CBDC. So on that basis, do you think that there can be potential alternatives to a CBDC that can be rolled out in the near future?
See, again, I would say like CBDCs are legal tenders. So, maybe in other words, you are asking like what can be alternative to a legal tender, which I believe will never exist actually. So, both cryptocurrencies and CBDCs will coexist because there are countries where people have lost trust on their own currencies, and Bitcoin is a legal tender, right? So, and at the same time, CBDCs which are trying to fill the gap, or maybe they adding the features which the cryptocurrencies provide. So, both will coexist in a, I would say, kind of like ideal scenario. Adding on to the last question as well, like it depends, like, because when we design, it's very important to understand the kind of design, how we are going to design our CBDCs, right? The country is going to design their CBDC, the level of transparencies, the level of like, because ultimately at the end of the day, they are going to be the liabilities on the books of the central bank, right? So if we are able to design, the countries are able to design in a way where it provides complete transparency and even kind of like provide the data analytics in a very measured context of anonymity, then it can provide a very good analytic, the data insights. So for the policymaker to come up with their, own kind of like strengthen their own, policies. So both will coexist. This is my opinion.
Sorry, if you can just add to it. I think CBDC carries a potential like, in early 1900s, almost a dozen countries had rupee as their currency. The Indian rupee was the currency of almost a dozen countries. So what would potentially make an alternate to CBDC from a CBDC of a particular nation is that strength of the CBDC, right? Apart from the potential threat, and obviously whatever the money governments save from print, mint, and move to has to go into the cyber security and every day the threat is getting so higher. So how safe and secure a government is able to make their CBDC? And two, I think potentially we might start seeing down the line that some of the countries CBDC may align, and probably a rupee could be back in a dozen countries as a CBDC of it. So that's how I view it, corresponding to your question. Thank you.
So you mentioned the point where you think that cryptocurrencies like Bitcoin and CBDCs can coexist. In a country like India, cryptocurrencies are not recognized either as an asset class or as a currency. So do you think that prospect is still, that prospect can still happen for a country like India?
I would say again it boils down to like government's kind of like attitude towards like rolling out the regulations around the cryptocurrencies, where I don't foresee much interest, right? Because at the end of the day it loses the control, because there are potential threats, allowing the cryptocurrencies as an asset class. So which I would say like government is taking a very like calculated kind of like risk, and also very cautious steps as well. But again, my stand will be like, whether the Bitcoin or maybe per se any other cryptocurrency will be able to make it through the government regulation across the globe. But what will happen is like, that is our belief which we have always carried forward, that they will force the governments to come up with their own CBDCs, right? Again, the argument remains the same, because people want to have full control over their money. People want to leverage the kind of like ease of use and the international cross-border transfers as well, which again itself is a even when you visualize the CBDC, the second biggest challenge will be like how you ensure the interoperability between different countries' central bank CBDCs, right? Although there are initiatives which are already in place, like the Australia with like Singapore, Malaysia, and South African Bank, and then on the other hand side there is China, Hong Kong, and some other countries, like they are creating those bridges to provide those, create those interoperability, because there is a parallel system has to come up with along with the SWIFT mechanism, or maybe you can say the existing infrastructure has to allow the integration of the CBDCs in a way like which is secure, which is efficient, and even if in an unfortunate scenario there is a mishap, like then there has to be a way to call back all these the assets which have been released. So my take will be like it's again on the technology side, and making the money more I would say like kind of like handy, or maybe like in order to live up to the expectation of the future generation, like how they want to use the money, how they want to exert control over their own assets. That is what is important. That's why government cannot kind of like ignore the potential benefits which the cryptocurrencies provide, and they would like to ensure the same kind of things are embedded into the kind of like their own kind of legal tenders as well, like digital currencies like the CBDCs. And at the same time, it also provide a very good platform for like people, the innovators to build new business model and use cases when this money becomes problem, because that's where the real kind of like use cases around the blockchain will start happening. When the official money, when the legal tender becomes programmable, when we are able to like lock a escrow a CBDC to a smart contract and enter into a kind of a transaction with a third party, right? And once those conditions are met, and the assets changes hands without the any intermediate person, So that's where the real use case and the real, the ultimate, the scenario we are trying to achieve through CBDCs and technology, I would say.
So with this, we come to the end of the session. Thank you so much, panelists. And can we please have a huge round of applause for them? Yeah, over to you, Vaibhav.
Ladies and gentlemen, if anyone has any questions for the panel, please feel free to go ahead. Yes, sir. May we please have a mic for sir.
Thank you. I would like to know your thoughts on like how do you foresee essentially the payment portals like Paytm, PhonePe, all this came because to replace the cash, but now CBDC is already coming in the electronic form. So how do you foresee the existence of payment portals in the coming future? So will the government be releasing APIs in the technical sense to make the integrations happen, or will the use of payment portals be reduced? The government will be coming up with their own applications. Maybe Naveen would be able to provide on how this thing is happening in Bhutan, how the government is responding to that, and other panelists as well. Thank you.
So I think I'll just quickly add. So firstly, I would say a lot of these questions have not been worked out. Right? So it's very early in terms of how the rest of the ecosystem will evolve, because fundamentally a CBDC allows you to have an account with the bank, right? In this case, the Reserve Bank of India. I think the bigger question for Reserve Bank of India, when it makes it bigger, is so today the physical money that you have in your pocket, you don't get any interest. Right? So it doesn't earn any interest, it's just lying in your pocket. Once the money is programmable, then technically Reserve Bank of India should pay you interest. Right? Because they are essentially using that money for infrastructure development of India. Right? So now suddenly billions of dollars, which is currently on RBI's balance sheet, needs to get transferred to your pocket. So the 100 rupees that you have should become 104 after a year, just looking at 4% basic interest rate that you get in SBI, for example, right? So there are a lot of bigger questions that need to be worked out to say, hey, should we just keep still hoodwinking everybody and then say not pay them any interest because they physical currency they never used to get any interest? Or now it's electronic and the money with the Reserve Bank of India and RBI security, say a 30-day security, would trade at X%, and then we need to, let's assume, Jayant in this room keeps that money for 30 days with RBI because now they're holding a CBDC. Should we pay them on 30-day rate, right? So again, lots of these things need to work out, which will have a big impact on the balance sheet of the country and the balance sheet of the way the central bank has been run. So, and then how the ecosystem needs to get involved. And I think it'll take a few years for this to get worked out.
Well, my take is yes, it's a natural evolution. Most of these guys will start adopting, and government has to make it make APIs available. Otherwise, there's no meaning in doing it and saying that okay, it has to work only through things. So I think it's a natural evolution.
Yes, sir.
Yeah. Shall I go?
Sir, you already have the mic. So after this, for sure. Yeah.
Hello. My question is regarding the channel. When we talk about CDBC in country like India and CDBC in country like Bhutan and all these kind of countries, how the movement of this money will happen if there is no central, you can say, pipeline to move the money from one country to another country? Is it going to adopt a existing blockchain network, or it is going to create its own blockchain network? Say if India is creating its own CDBC, is it going to issue a platform for USD so that they can host their currency on Indian blockchain? So that's where my concern is. How these currency will transact between each other if there is no central platform?
Right. So technologically, like I think one of my fellow panelists were essentially mentioning, so there will need to be bridges between the two currencies, right? So what that bridge would be, so and the bridges will need to be two kinds, right? So one is that bridge needs to be a liquid bridge, which essentially US dollar plays that part. And the question that you're asking is, from a technology perspective, how we are going to do it. So let's look at three scenarios. So the first scenario is CBDC A needs to get transferred to CBDC B, right? So there needs to be two challenges that need to be solved for. There needs to be either liquidity between A and B. That means somebody wants to give me $100 for 8,000 INR, and I should be willing to give 8,000 INR for that $100, right? So there needs to be liquidity on the both sides for a party A to send money and for party B to receive money. So that challenge needs to be solved between currency A and currency B, which needs to be solved today as well. And then, like you might mention, there needs to be a technological challenge where essentially in an atomic swap, both the ledgers need to be updated and A gets debited, B gets credited, and the reverse, right? So that you're able to swap the asset of A and B simultaneously. But this could be done with the middleman. So let's take another example. In this case, US dollar is also in CBDC, so it can happen between A, B, C, or A1 and B, just in a simultaneous fashion. Or cryptocurrencies like XRP, which we essentially use to do cross-border, but essentially fill that gap. Or there could be a fourth digital asset or a cryptocurrency or a stable coin could fill that task, right? So there is a liquidity side. The liquidity side, and like what was already being discussed in the panel, depends upon who gives me the maximum amount of the currency B for the currency A I'm giving them. So if I'm giving them 8,000 rupees, which liquidity path gives me the more amount of US dollar as an output, that is the currency, right? And this could happen through a digital asset, this can happen through a CBDC, this can happen through a traditional method. And then, of course, the second question is the technology question. Optimally, in an atomic swap, without any intermediary in the middle, how can I do this conversion? And I think there are already multiple paths that are available, and then there will be more and more paths as CBDCs essentially become available, because like you do Amazon-based shopping, where you can do comparison shopping, going on a website to say, is it cheaper to buy on Flipkart, it's cheaper to buy on Amazon, or it is cheaper to buy from the local kirana, and then you choose the optimal liquidity path for your shopping. You will be able to choose your optimal liquidity path for transferring money as well. We see that world definitely, where you would have the optionality of going through multiple paths, and these multiple paths will offer you different features. Somebody will offer you 2-day shipping. That means it will be delivered in currency B after 2 days for a particular price, and in some cases it will be instant.
I will come back to the question. So when we say that it is CDBC, central bank is in US, central bank in India, they should provide the liquidity. So you consider that if I want to transfer some money from here to US, right, and I want to send INR to them, right? So when I'm sending INR, the Reserve Bank in US should receive that money, and they should decide that what is the conversion in USD, and they should release the money in USD to their local, you can say, citizens and all, wherever it is going. So it should be a platform, a single pipeline where the conversion is not in hand of any other entity other than the central bank, right? It should not be decided.
That's not the way the markets work today, right? So today the banks do that conversion. So for example, let's assume you're sending your 8,000 rupees and your bank is HSBC. HSBC also, just hypothetically, right, has a branch in the US as well. So the bank does the netting, right? So the FX markets are not run by central bankers. They're run by large major banks who essentially do trading, which is called a liquidity venue. And some way it is like the share market, right? So when you sell and buy ITC share, right, in the Indian stock market, it's not the government that does the conversion. The conversion is done by NSE based on the demand and supply, right? So those pools itself, now instead of doing the conversion in a traditional method, will essentially do in a lot more, let's say, a CBDC-enabled method over blockchain.
Yeah, thank you.
Thank you. Since we're already crunch on time, Sir had one question. We'll just take one last question, and we'll proceed further.
Vaibhav, would you like to add to that, Vikram?
Yeah, so just a couple of points actually. I believe the IMF has rolled out certain protocols, the parameters which every country has to follow while they are designing their own CBDCs. And as I mentioned in my earlier kind of question, already there are some initiatives which are going on, like the projects, the bridging projects which are going on, the consortium of the countries getting together and creating, experimenting on how these, the exchange will happen between the different CBDCs. Yeah.
Okay, sure.
Yeah. So my question to Naveen again. So I could say like the UPI has changed the face of the digital transaction in India. So when you say CBDC is a legal tender, a remote villager should also able to transact through this legal tender. So what do you think, like what kind of infrastructure India need to develop to a remote person to also use this as a legal tender? At the same time, when you say a click of button for demonetization, again for hackers, it's a click of button to hack this blockchain technology, what government might be using, and then, or maybe alter the smart contracts. So what do you see like the cyber security need to be, how it need to be evolved?
So let me answer the first part first, right? So firstly, for something to be a legal tender, let's assume you wanted to accept money and you were that villager in that village, the first thing you need to have trust, right? To say, hey, is this currency backed by the government? And it's backed by the government in the case of CBDC. It's a legal tender, RBI essentially writes there, and the RBI governor puts the signature. So we'll have to figure out how he puts the signature in the CBDC. But let's assume that can be figured out. So then you're confident, hey, you know what, this is government issued money, the governor of RBI is standing behind it, and it has the full faith of the Indian government. So you would feel confident, right? Then the second thing is, like you rightly said, as merchant acceptance infrastructure is being developed in India, just even anyway for credit card, debit cards, and other things, this will require the acceptance infrastructure at a high scale as well. Because issuing CBDC is one, but accepting CBDC becomes very important as well, right? Important at individual level, so peer-to-peer, right? You should be able to transfer, give that money to your wife, to your children, to your friends, whomever you want to at an individual basis, like you give physical rupees, and also to any merchant for buying and selling of any goods and services, right? So acceptance infrastructure takes time, and that's the reason if you look at China, they initially issued it in a small physical geography, and then they slowly keep increasing in number of mostly urban cities, right? And similar evolution will have to happen in India as well in terms of acceptance infrastructure at peer-to-peer level and also at the merchant level. And the last point that you make is absolutely right, right? Security is a key concern, and that's the reason the governments will move slowly. And personally, that's the reason companies like us, for example, are closely working with the governments, because we have had this experience of this technology for the last 10 years, and we've already transacted tens of millions of transactions, and they need to work with, again, large technology companies to make sure it's hacker resistant, and all the modern security features are essentially built in on day one itself, because there's no way that CBDC should be hacked, because it will be quite complicated to unlock.
So
Can I,
please.
1 minute?
Yes,
Well, I think that India is still a majority cash economy. So I think we are perhaps going to get into a multiple token economy that we were, like gold, silver, copper. You know, we used to have multiple token economy. I think CBDC is kind of taking us into an era of multiple token economy. It's going to be a long time before it's just not about technology. It's like you said, right? The trust and also our lifestyle and all that. So we may create whole India can be 5G ready and perhaps 6G, but it's just not about technology, and it's also about behavior, and it's also about people's acceptance to that level. So I think we are getting into a multiple token economy. So I don't think CBDC will just eliminate all the cash out of the market or out of our pockets. We can choose to be without it in Bangalore, but we may not be able to do with when we go somewhere not too interior also. Even a tier 2 city or within Bangalore, there will be people who would still trust and deal with money as cash.
Thanks a lot. Thanks a lot. Ladies and gentlemen, if you have any further questions, I would request you to please note them down and share them with us, and you'll surely get your answers later. Thank you so much to the panelists. That was indeed a very thought-provoking session. Thank you so much. Esteemed guests, we now break for tea, and we'll resume with the session in 15 minutes. Thank you so much. Ladies and gentlemen, we're resuming with the sessions. I request you all to kindly be seated. I repeat, I request you all to kindly be seated. We're starting off with the sessions again. Ladies and gentlemen, we're resuming with the sessions. I request you all to please kindly be seated. Ladies and gentlemen, I request you to kindly be seated. We're resuming with the sessions. Please be seated. Ladies and gentlemen, I please request you to kindly be seated as soon as possible. We're beginning with the sessions right away. Thank you. Welcome back, everyone. Without any further ado, we shall start with our first panel discussion titled The Curious Case of Decentralized Technology. The panelists will discuss in depth about how the Web 3.0 blockchain will bring forth changes which are expected to allow merging of cryptography and consensus algorithms, scale systems of decentralization among the large population, and replace the traditional databases. For this session, we would like to invite Karan Amwani, India Lead, DYDX Foundation, Sankalp Sharma, Co-founder and VP, Engineering, ZV, Prasanna Lohar, Chief Executive Officer, Blockstack, and Tanvi Ratna, Founder and CEO, Policy 4.0. The session will be moderated by Vivek Belgavi, Partner and FinTech Leader, PwC India. Please join me in welcoming them up on the stage.
Waiting for Prasanna.
Ladies and gentlemen, we'll be starting off in a while. Please give us a few moments. Over to you, Vivek.
Thank you so much. Good morning, everyone. Fantastic to see this gathering after a while, and so happy to have my fellow panelists. It should be a very interesting conversation because all of them represent all critical pegs of what will require for a blockchain Web3 ecosystem to work. The topic we have today is a curious case of decentralized technology. The curious case caught my attention. It's, I think, fairly apt because at least I have been in PwC, we've been tracking emerging technology. I have focused so much on fintech, and this is one space which has showed so much promise over the last couple of years. Whereas gone its own ups and downs, I do think we are on a bit of a positive wave again, and we'll talk through that in our conversation. But to kick it off, let's understand our panelists a little better. Prasanna, I'll start with you. A bit of your intro of your organization and your point of view of what we'll discuss today.
Yeah, good morning, everyone, and great to be here. Thank you, Vivek, for initial remarks. So I'm Prasanna Lohar. Today, I work with the company Blockstack as a CEO and founder of India Blockchain Forum. Earlier, many of those roles I have represented bank and as well as worked for almost all banks in India. Coming back, carrying all that experience, looking forward, how can we do a lot of decentralized innovations with Blockstack? We work locally in India as well as multiple territories in US, UA, and Swiss. So look forward how my experience will help all of our friends out here. Thank you.
Thanks. Sankalp?
Yeah. Hi, everyone. So I'm Sankalp. I'm co-founder, VP Engineering of Zeek. And while I've been working in the space of blockchain tech for the last 6-7 years, working in application of P2P invoice discounting, supply chain, insurance, co-insurance, reinsurance, intellectual property rights and such, we came about to a problem which was about infrastructure management of Web3 applications, and that's where we came from. Zeek, trying to provide infrastructure solutions to Web3 applications of today. So we look towards innovation to enable your blockchain curiosity and convert it into something that is of material.
Thanks, Sankalp. Karan, you're remotely, but over to you for your intros and what your org does.
Yeah, thanks, Vivek, and hello, everyone. I can hear my own voice, so I believe I'm audible over there.
You are.
Cool. So I'm Karan Amwani. I'm leading the India market for DYDX Foundation. Those of you who don't know about DYDX is the leading decentralized protocol for perpetual trading, and DYDX Foundation is essentially built to support the growth of the protocol and also improve the governance of the protocol. So
Thanks, Karan. So if we go back, so I thought we'll do a discussion into 3 segments, the past, the present, and the future. So it's important to learn from the past a little bit. So thinking about the past, and especially last 5 years, there has been a fair bit of promise, both in terms of its applications and the technology platforms which were made available. The existing big OEMs, whether they are the IBMs of the world, AWS, cloud, everyone, Microsoft, they came up with their application. It has also been a space which has been rife with many of the startups. Some of them India-born, like Polygon, have done fairly well. And when you look at the sectors, government got very excited by it. Financial services industry was excited by it. Some segments like supply chain, logistics have looked at it quite deeply. But really, let's go around the room and see what experiences we have had in last 5 years and what can we learn from it. Again, Prasanna, starting with you, what do you think have been the experiences and what have we learned from it?
I think if you look back, year 2016, so I think that was a lot of wave has happened, at least Indian context. And that moment, I would say Asia or Asian adoption could be around 8 to 9% around Web3 or blockchain. And imagine how much could be around India. Still, I think it's not a great picture all about for enterprise blockchain, but there are a lot of experiments are happening. If you talk about banking experience all about, I think we started a bank chain kind of a consortium back in 2017 February with almost 36 members. So alignment of like-minded parties coming together to form a bank chain around 21 plus use cases, that was a good momentum. Although what blockchain needs is all about like-minded parties coming together and having a consensus not inside the blockchain but outside of the blockchain to build that. That is what we understood during that momentum. And we have seen EBIC, which is a Indian banking blockchain infrastructure company, has come up with a 15 plus bank ahead of doing trade finance, LCBG kind of a use cases. So by the time, I think on education side also, we have seen a lot of engineering colleges, Amities and Kerala Blockchain Academy and many more have started adopting blockchain as a additional course in engineering or business. I think that has become a business model for many companies. Example, Web3 University, which is a new model. We're talking to almost 100 plus IITs, IIMs to incorporate blockchain as education. On the government side, we have seen the national strategy of India come up in late 2019, and we had IDRBT coming up with the blueprints of how blockchain ecosystem can be adopted at the banks. So I think governance side also we have seen governments like Telangana, Andhra, Kerala, Maharashtra, Rajasthan, UP have done on the blockchain side. So I think awareness that blockchain is necessary as a foundational technology, it is being solved. Now, how do we really go into the next steps? With the help of partners. I think I have 4 partners back in 2016, and I think today we have at least 200 plus mature partners. We have Zeev here, and we have seen the journey from how Sophocles has become an infrastructure company to build blockchain use cases on so likewise, we have seen how AWS or Microsoft, as you said, Google's, they are now creating a lot of platforms. And in a parallelly, these communities like Hyperledger, Ethereum, you spoke about layer 2 platforms like Polygon, Solana, giving a lot of a kick to the actual blockchain adoption ahead of not only blockchain, but there are new things are coming with the DAOs or NFTs or tokenization. So I think, or DeFi's, but what is needed from a regulatory angle, how do you really create very good use cases for a common citizen out here, right? Blockchain is there, cryptos are very there, but how they are going to use actual use case, right? That's going to start. I think on furthermore, so I think very good things on technology maturity. Today, we can say that India's digital rupee, which being launched yesterday, we will have a larger curve on blockchain itself. Not only India, but I think 100 plus countries are experimenting around this decentralized. I think being blockchain is a foundational technology, inherently will not talk about blockchain after 3-4 years. It will go inherently as a intelligent platform in the backend, along with the AI ML, wherein a very good experience in a Metaverse as an interface or a web or mobile as an interface will keep on happening in many segments. So people today have understood blockchain is a necessity. Only thing, how do we create better use cases at the enterprise level and consortium level will give larger adoption on these technologies. So companies like we have started India Blockchain Forum with the same attention. How do you create a policy governance? How do you create awareness programs? How do you create own ledger ecosystems and some kind of a COEs at corporates who are all the members. So I think today, Vivek, what I say that blockchain was something like a dream in 2016-17. Today it is becoming reality. We have seen such a good companies out there, and I think there are larger number of events are happening on blockchain and Web3 now. And it's not only events, but lot of adoption is happening. Countries like Estonia is built on blockchain, or Dubai is looking at their Vision 2021, which is a bit prolonged, but they understood a lot of use cases on a blockchain. Not only these countries, every country is looking at how blockchain can inherently go into financial ecosystem, healthcare ecosystem, and many more other ecosystems. So good to see that now the overall ecosystem is equipped with a better awareness, with a very good academia and education. Governments are aware this is a need of a time. There are good partners, and existing partners are learning or relearning on a blockchain side. And there is a customer also who is really looking for a larger use case. So I think we are sitting on a good ecosystem to take it to the next level. So today, in a nutshell, today we are on digital era. Tomorrow it's going to be intelligent and autonomous era. It will be always backed by a smart ecosystem, by blockchain, AI, ML. Yeah.
Great initial comments. Sankal, coming to you, your experience.
So my experience, so we've been working into a lot of domains, and that's how we started off, right? So 2016, 17, and much of 18 as well was much about POCs and pilots, right? And what I personally faced into all of this was mostly failure, right? We were trying to overcome a lot of obstacles that we were not really prepared for them. And blockchain was termed very hyped at that very time, right? But I would somewhat disagree with it, looking at it now, because it was all of that hype that actually gave way to where we are right now, right? So that's a big thing. And what we're looking at into it, so from the infrastructure side, we have a clear insight of what people are doing in this space. What are the big companies doing? What are the medium-sized companies doing? What are the customers, the developers, DevOps engineers? How are they coming about to all of these things? So what we are seeing is the trend where a lot of projects are now going into production. We ourselves are trying to make it so. And I think it will only go beyond more and more this. So one thing I'd like to say is that blockchain is still only one of the ways that you can come out to decentralization, right? And while it was inherited from Bitcoin, a lot of its concepts, a lot of its implementation, I think we'll be looking towards implementations which will be much beyond a distributed ledger. It'll be more peer-to-peer, and it will disrupt the industry once more. So that's where we'll end up with, because blockchain can only still tap a percentage of the market, a percentage of the potential, while we have to go much, much beyond that, actually. So, yeah.
I think you tantalizingly left it there, but as we come into the present and future, we'll go deeper into that and probably explore creator economy and a few other stories which can come out of it. Karan, coming to you, your learnings in the last 5 years of this journey.
Yeah, I think in my personal view, or how I've experienced the space in the last 5-6 years, starting with 2016, I actually entered the space as a research analyst. I was looking at many public blockchains during that time, EOS, NEO, Ethereum. Ethereum was also very new back then, and this ICO era was just coming up in 2016, 2017, right? So that's how I've experienced this last few years in Web3. There have been ups and downs, these cycles, and it has been driven by a lot of market movement. And of course, I spent some time with Consensus where I was looking at enterprise use cases as well, and I believe Prasanna and Sankal, you guys have covered it a lot. And in 2018, 2019, we were looking at land registry, education certification, and many other banking sort of use cases on enterprise blockchain. And Microsoft, Amazon, they were just entering the space. They were building these software development kits for essentially spinning your own blockchain, right? So all that was very nascent. Now it has, as Sankal and Prasanna saying, has started giving some more production level sort of use cases. But more than that, on the public blockchain side, there has been a lot of evolution as well. Things have started looking very different than where we were in the ICO boom. So a lot of companies actually came out of it and gave some very high quality products. We saw in 2020, right after when COVID hit, we saw this DeFi summer where a lot of value started getting locked on these DeFi protocols like Aave, Uniswap, DYDX, all started seeing a lot of transactions, a lot of volume, which led to this movement of layer 2s that we see because of high transactions that were happening cross-chain sort of use cases where many different networks are connected with bridges. All that came up, of course, like with NFT, a lot of adoption came in from the retail, even the media celebrity sector, they started like adopting these NFTs, which kind of gave it more mainstream, the entire Web3 space, I would say, in 2021. And since then, yeah, of course, like now we are again in a different sort of cycle, without calling it a name, but it would be a sort of a downward trend where you'll see more evolution, building, development on the technology side of things, and then we will be like sort of ready for the next sort of use cases for mass adoption. So that's how I've seen this space evolve.
Very nice, Karan. I think probably let me juggle up the sequence of a conversation also a little bit, and it's been set up nicely for moving on to the present segment. Really, summarizing what we heard, there have been a lot of use cases which have got tried. From a technology infrastructure perspective, from scarcity, we have moved into a bit of an abundance right now. There have been questions on cost, there have been questions on performance. More importantly, we could see this journey where we were trying to think about blockchain like a hammer and figuring out now which is the nail we want to wrap it against, right? As opposed to NFTs and other Web3 use cases that are coming up, which are creating the pull factor. Like those are the use cases which will drive adoption, and they are not sold as blockchain, they will be sold as use cases which will be powered by decentralized. And probably let me start with Sankalp, you, because you left your previous comment tantalizingly at not getting stuck with blockchain, but really looking at a broad swath of decentralized. So moving on to present, what has changed? And whether it's from an infra side or from a use case side, what is powering adoption?
So what has changed, I think, is a very good question to ask. Let's take it back, a couple of even decades, right? So if you go and talk to a person, an innovator, 2 decades back, and you'll say that, okay, I'll create this solution, I'll decentralize in this way, that way, and it will give these benefits. The person would nod and probably say, this looks pretty solid, but maybe you can also think of it in this way, you can implement it this way, you can have this kind of framework, which could allow the same benefits, perhaps even more. That kind of conversation is something that I would imagine, right? But how did we come to where we are right now is with blockchain, with Bitcoin being the first leader in terms of showcasing what distributed ledger can actually do, right? So a lot of our innovators started aligning with Bitcoin, what it was achieving, and what they can change, what they can play around with in order to provide solutions, in order to tap into that decentralization space more and more. But we have to understand that, that Bitcoin itself was targeted onto a very specific niche use case, which was about cryptocurrency in itself, right? It cannot cover, I would say, even the 99% of applications that one needs to decentralize our Ola and Ubers and Facebooks of today. So right now we've got technology, we've got innovation that is happening. L2 protocols have come up. We've been looking onto privacy and also the performance challenges, trying to get collaboration, trying to do onboarding of the customers in a very seamless way. So these are some things that we've been able to master, but we still haven't stepped out of the box yet. And we'll come to that step as well. That's when a big change will happen, is what I believe. So from what we actually do is, we come from infrastructure side, right? And we came to a conclusion that development and management of your application solution is quite easy. There's no difficulty in that. Is the infrastructure and the security side of the things where things become impractical, they become too costly, you're talking about too much of time and investment into any solution. And that's what we try to automate, and that's a service in itself, is what we realize, right? So these kind of innovations, enablers, is something that I would say ecosystem needs more of. And of course, disruptive minds, So like Prasanna Lohar here is one of the people I would say that would choose disruption over tradition, right? And that's kind of thing that will motivate and everything in this ecosystem. But yeah, that's my personal opinion in all this matter.
Sure. Prasanna, I'm bringing you to the conversation. On the present, I'll recap my query, which is, what is now driving it? What are the use cases and what are the technology innovations which are driving the current wave?
I think more of as I earlier said, right? People have understood this is a need of a time. How can we use blockchain or relevant other accessories to create a much more impact on a internet world what we have seen, right? What is being changed now? Let's take example of a banking ecosystem. Now all banks, including regulator, RBI has understood it's a need of a time. So they have done a lot of hackathons under Harbinger, or they have run some of the cohorts like regulatory sandbox, which was not the wave in 2016-17. Right, so they are open to understand which are the tech companies can build a better cross-border payment or a better SME or a better payment experience backed by any of those Web3 ecosystems. And at the same time, they are willing to give, impart that knowledge around compliance, security, how applications will be adopted at a banking ecosystem. So I think that has changed, right? So that has changed. Like say example, I had my first session at RBI back in 2019 mid on CBDCs. And imagine like in 2020 February bulletin, they said we are going to come up with a CBDC almost 2.5 years back. And since then, although it was in news after February India's digital rupee is going to come. So I think apart from adoption, now things are getting real, right? So that has really changed heavily on adoption curve. On a blockchain is not something for one enterprise to build a one use case the way we have done an ATM opening on blockchain or a mortgage ecosystem surveillance on a blockchain. It is to be done on for one enterprise to understand what is blockchain, to understand how internal stakeholders will align or give a sign off at various stages, security, compliance, so that this is how we go ahead. But a larger impact is how network or a consortium come together and give a good use case like digital rupee or decentralized KYC, which we are talking with 11 banks and under guidance of METI, IIT, Bhilai. So I think now we are moving towards actual larger use cases on a blockchain side. Going back again 2016 or 17, people used to talk more of a crypto or Bitcoin ICOs. Now that picture has changed. I have seen smaller companies doing hackathons or participating in hackathons by NASSCOMs or DCB Bank. Now they are becoming larger companies, and people are looking at those companies as infrastructure companies. So Zeev is one of the examples, right? I have seen that curve of last 5-6 years, and there are many more who has really done use cases at a government level. Right, West Bengal healthcare ecosystem, birth records on a blockchain, or Maharashtra government has started putting COVID certificates with the help of print to block. So now larger use cases are coming. So adoption curve is there. Now at the same time, the way we have seen Hyperledger or Ethereum or any of those layer 1 protocols, they have also changed heavily. Right? Within Hyperledger, there are many more ecosystems are coming based upon problem statement, like how do you handle scalability or interoperability? So we have a Hyperledger Cactus projects. Or within Ethereum, we have seen how they have come up with a recent change to Ethereum 2.0 for a larger vision. It is just a start of a new Ethereum, where there will be some challenge around the layer 2 existing protocol, but they will also adopt. And like I have seen somebody said, we are building now from scratch layer protocols or layer 1 protocol. So it's good to see that this is a time for now to do a lot of research and be ready for those ecosystems which are going to come up with the 5G or devices, where we need more trust than what we need today. Right? I think that is changed, that mindset is there at a partner level also. I have seen Oracle, which is our Oracle database company. Without no blockchain, now they are looking at how they can build a blockchain within their relational database ecosystem to make it more Red Hat is adopting into their whole CI/CD pipeline, how they can, blockchain can come in as a DevOps, right? So I think it's going more into foundational. I will not be surprised Intel will come up and say that we are building a blockchain within chip, just to see, track what's really happening on their devices. So I think apart from device level, larger use cases where every citizen will be benefited out of it, where Protean has come up with, coming up with their own platforms, right? Under NOD architecture, National Open Development Ecosystem. Protean is a NSDL's arm with a vision that the way we have seen UPI impact or a payments impact in UPI, how can we have a similar kind of a use case for citizens in India on a government side, right? So I think everywhere we'll see adoption of this intelligent system, but blockchain will not go single-handedly. It has to go along with AI, ML, it has to go along with IoTs, wearable, it has to go with the mobile and web app, and it has to keep on improvising its own, wherein these partners are really doing good job. So as of now, I think we can say that we are sitting on a huge set of use case vision. Now here onwards, it's an interesting journey. Who will grab that and who will really make it happen? Example, digital rupee. Who will make it happen that 25,000 TPS? Today, that's a vision. But tomorrow, a lot of use cases are going to come, not only payment, but DBT, direct benefit transfer, or having some XYZ coin in a commodity, in a, like say example, wheat coin for Punjab, right? And backed by digital rupee. So when that comes, more scalability, more security, more compliance picture comes into the picture. So I think this collaboration between governments or companies who are armed by RBI or regulators, along with the right set of tech partners, right, will give a lot of education to how do we really adopt. So today we are sitting on lot of use cases, but here onwards the journey is beautiful to see how we adopt those use cases.
Super. As you're speaking, I was just reflecting that a lot of blockchain use cases would be visible, a lot of them would be invisible. And it would be interesting exercise for us to think through on, as an individual, do we have ownership of some part of blockchain? Like anyone who has invested in some crypto assets has. Anyone would start using CBDC would. So today that personal population would be only a fraction.
Yeah.
But that share of wallet or share of use is the one way we could figure the adoption. Sorry, you wanted to respond quickly? Okay. And also, you mentioned Bengal, so it was a privilege for us to be involved in that
absolutely.
project.
That's,
so it was an interesting experience.
And I think PwC has presented in 2017 one paper on how government should adopt blockchain. And any of the state governments go through that whole paper, they can really understand why they are late at adopting blockchain. So,
and the reason for thinking on it, and we're still on that journey, is many times when you look, adoption can come from very different angles, right? So much of, for example, Uber adoption really came in because Google Maps did exist. Otherwise, it may not have happened. So it is interesting to see when you want to drive adoption. So our thesis was, at least in India, where government does touch so many lives. Like in CBDC could be an example. The purist might say that it truly is not decentralized, it's ABC. But if it is getting your peg there, then it is still a layer. On top of the layer, other stuff could happen. So where you can drive adoption is, where you can trigger an ecosystem is a more complex one. We can just do something and hope for the best, but that's the journey. Karan, bringing you into the conversation, really, we want to build on what are the use cases that you're seeing, or what are the technology changes you are seeing which is driving the current wave of adoption?
Yeah, sure. So I think we started with the topic of how initially some of the use cases that were being developed were more like people just wanted to introduce blockchain as an idea or a word in whatever they were building, right, to make it look like they were following some new trend. So that's how like the use cases are defined, either like a technology push or a market pull. So whether they were like just trying to introduce a particular set of technology, or whether there was a need for this particular technology from the market side, from the user side to actually build on top of, right? So now that there are more and more use cases coming in real life, there would be more adoption of it, and there would be more market requirement, because people will understand, okay, this we can apply in more different places as a retail user, as someone who is not like super aware of what the technology is. They just want to use it for their own benefit, or even like, let's say a government organization wants to use blockchain for a particular thing, they will see it being applied on a different use case, and they'll simply adopt it because that's kind of being requested by the user base or requested by their problem statement. Right? So there has been a lot of development from that side, but then from more of a bias viewpoint and understanding that I'm coming from this DeFi or open finance sort of sector in the last few years, I would say there has been massive adoption on the public blockchain side of things as well. We have seen growth on every metric, whether it's like download of wallets, amount of like money that is invested in crypto assets, utilization, number of transactions, the different like protocols that have evolved. On the DeFi side or open finance side, we have seen so many different use cases. Like for example, you must have heard about like Uniswap, AMMs, which are essentially a very unique sort of model for simple trade, like the spot trade for like asset A to asset B. So it's a totally unique idea which has seen right now adoption with, let's say, very early adopters, very small fraction of the digital users. But in the future, we will see more and more transactions happening in this sort of manner, in an open sort of financial protocol, you can say, right? Then also on the lending and borrowing side in DeFi, we digital protocols have seen massive growth. Like people are actually using them for like just like simple like borrowing some assets for utilizing on different platforms. And apart from that, of course, like there has been huge adoption on NFTs, Metaverse side. So one of the points I wanted to highlight was like blockchain or Web3 space has not remained at a very niche or very small segment anymore. Back in like let's say 2017, 2016 when we were talking about like 5 years ago, you could actually see or you can actually understand what is happening pretty much across the ecosystem. Maybe you didn't have like a deep insight on each and everything, but you had a fair bit of understanding, okay, this is what has been evolved. But right now, this has expanded a lot, and everyone sort of who's working in this space or companies that are building are focusing on very niche segments. So, for example, I'm like deep into DeFi last couple of years, but then there's entire NFT space, Metaverse space that is evolving rapidly. So it is utilizing all the digital like, aspects of Web2, whether like that's gaming or whether that's like social media, all that has been incorporated. Use cases are being built. For example, Let's protocol is a social media sort of protocol for Web3. So all that is being built, and it's very hard to keep a track on all that is happening, right? So that kind of gives a sign of adoption, that gives a sign of a maturing ecosystem, and that's where we are. We will start, like we have started from this technology push sort of way of like putting blockchain to everything to a point where now blockchain would be utilized in many different digital protocols that we use on a day-to-day basis. And few years down the line, it will simply become like just hidden in the background. We would improve the user experience, it will improve the product flow so much that we would not be able to like comprehend that that's a blockchain-based application, and we won't even bother because we just at the end of the day want to utilize the benefits of the technology.
Great points, Karan. So to baseline this conversation, starting from in the present segment, whether availability of infrastructure companies which have made adoption or application easier, talking about government interventions which have really created their own nudge models for availability, whether it's CBDC or government programs, or the whole space around NFTs to Metaverse. I'm glad, Karan, you touched upon Metaverse because it again is an emerging world, but it's really creating a de facto business case for blockchain as opposed to a transformation use case for blockchain. So all these are great pegs for us to understand why the present is quite attractive. Last segment, the time has really flown fast, but really we've got only a couple of minutes. Last segment, quick remarks from everyone on going to future. What would be the top 2 or 3 things? Maybe we will pick up top 2. Prasanna, starting with you. Top 2 things which you think will help spur the adoption.
I think when you say top 2, it's all aligned with the whole world all about, right? When we are talking about Industry 4.0 adoption, where we are talking how do we remove those intermediate so-called MasterCard, Visas and XYZ, or how do we really fight against unwanted, unethical business models all around? How do we secure them? Or there we talk about how do we create a better model ahead of a GAFA monopoly? And finally, the larger vision of the world, better financial inclusion, where we have a BIS, banking international settlement, creating the whole adoption of CBDCs across the world, and SDGs, 70 Sustainable Goals or ESGs. So when we are sitting on this curve, I think blockchain comes and says that I am the one radical change agent will going to create a massive impact across the globe, where we need to create at every country level a digital identity ecosystem. The countries who will not have identity ecosystem, or even if countries like us, we have identity systems, it will go on a better consensus mechanism. So wherein we know how my identity ecosystem will be used, not only one use case, but larger use cases everywhere in payments, healthcare, governments, and so on. So I think identity is going to play a major role, and the identity will be backed by intelligent ecosystems, will give mass impact on adoption of any use case. You talk about the challenge we had during COVID, or the payment ecosystem we are talking, or there are in Indian ecosystems we are coming up with account aggregator or PCR, lot of laws on, lot of guidelines through DPSCs by RBI. So everything will be come down with a better adoption of a blockchain kind of ecosystem. Example, one bank want to report their fraud, and another bank want to see that fraud. The whole timeline is in between 45 days. Right? Say example, one fraud happened today, it is available to another bank under regulatory guidelines. Tomorrow, that adoption we are bringing with RBI Innovation Hub, how can we reduce it to fraction of a few minutes? One bank has reported the fraud, it is immediately available so that that bank knows that who is that a fraudulent customer want to open account. Now, this is one use case. Now, imagine the whole world and everything becomes more autonomous and more seamless, gives lot of adoption of a blockchain kind of.
Super, Prasanna. Shankar?
I think to enable it further, what we need to have is the leaders into different domains coming together and really picking it up, because blockchain is one space where business and tech goes very much hand to hand, or it doesn't go at all. So they really need to make use of our country's youth and their potential and tap into something which is something of a big value. So that's one point I'd say is the most important one according to me.
Super. Karan?
I think digitalization of our lives overall is anyways like expediting the blockchain adoption or like Web3 adoption in general. Also, another point is, which we didn't touch upon, is regulatory clarity. So the more defined some of the things are around how to innovate in this space and how to like make it a more sort of like favorable ground for people to come up with solutions which are like also safe, secure, and efficient for like the future of our digital lives. I think that would definitely expedite it.
Fantastic, Karan. I don't think I have anything else to add. You all panelists have ably covered all the critical points which are needed. I think it was a fantastic conversation. We have also run out of time. I don't think we have too much time for Q&A, but I think all of us would be around. Feel free to just catch up with us, and happy to catch up on few conversations along with you. Thank you so much. Thanks, Prasanna. Thanks, Sankalp. Thanks, Karan. And I hope everyone enjoyed it.
Thank you.
Thank you, esteemed speakers, for your inputs on the topic. Moving forward to our next panel discussion of the day, titled The Metaverse Land. In this session, the speakers will explore, but will not be only limited to the transactional details in the virtual world, and how virtual real estate NFT ensures your ownership and enables you to sell the property to a different owner. For this session, we have Supreet Raju, co-founder OneRare, Tanay Pratap, founder and CEO Invact, Nipun Shah, Chief Metaverse Officer, Shoppertainment, and Prashant K. Singh, Consulting Manager, Digital TX and Customer Experience, Deloitte Digital. The session will be moderated by Ashutosh Chand, Partner, Digital and Emerging Technologies, PwC India. Please join me in welcoming the speakers up on the stage. Speakers will be joining us virtually as well. Please give us a few moments. We'll be starting off in a while. Okay, here they are. Okay, over to you, sir.
Good afternoon, everyone. And I think we have got a very interesting topic today. And before I start, I just want to give a quick introduction about myself, and I would request my esteemed panel to do a same thing. I'm Ashutosh, and I lead the emerging tech practice at PwC. And I do many things, and one of the things that I do is NFTs, Metaverse, and blockchain. And it's great to see such a large audience here today talking about, here to listen about what we are going to talk about. Can you introduce yourself?
Thank you. Hi everyone, this is Prashant. I am part of Deloitte Digital. I work in the space of digital transformation and customer experience. And within Deloitte and in my previous organizations like Wipro and Atos, I have been working in the space and in the space of blockchain and metaverse as well. Have been part of certain center of excellence where have contributed to development of these COEs, etc. And yeah, I'm happy to be sharing this platform with you. We'll be discussing a very interesting topic. Over to you, Nipin.
Hi, everyone. I'm Nipun. I'm the CTO at Shoppertainment. I've been involved with emerging tech and Metaverse spectrum technologies for over a decade now. And we've also had the privilege of implementing a couple of private metaverses for enterprises over the last 6 months, sorry. And we've been working closely with brands. Thank you.
Suprit.
Hi, I'm Suprit Raju. I'm the co-founder at OneWeb. We're building the world's first food metaverse, which we call the Foodverse. I'm very happy to be here today to have a discussion on Metaverse plan.
Great. Tanay.
Hi, I'm Tanay. I'm the founder and CEO of Impact. We are building a Metaverse city, a university where students from all across India can access and learn together. We believe a lot in community learning, which has been missing in the online learning piece for a very long time. I think Metaverse is the answer to that. Happy to discuss about all of this here today.
I'm sure everybody would like to hear both of you. First thing, when we talk about Metaverse land, what is this land and why do we need land in the Metaverse? The first thing that comes to mind is AR and VR has been around for a long time. But suddenly there is this talk about land. And I just want to understand from you, Nipun, why do we need land for Metaverse and what is it offering that it was not available earlier?
So I would say land are these digital spaces that which have always been available in the Web 2 world as well. But now what is happening is that with Web 3, these lands, there's actually a sense of ownership that can be assigned to people by leveraging the blockchain. So now we have moved from Web 2 centralized spaces to Web 3 decentralized spaces, which are called these meta lands, so as to speak. And I think everyone today wants to have a land, like I interact closely with brands, for example. So as we are all aware, there are multiple metaverses that are coming up around us. Some of them have been able to attract a lot of users, have good amount of MAUs as well. So if brands want to be present in such spaces, they need to own a piece of land or rent it out. It is only then that they can be a part of that metaverse. It is unlike 2.0 where we could just fire up X number of servers and keep expanding things. Land is a limited piece of commodity right now in Web3. And you can kind of invest and have your presence in certain metaverses through these lands.
Interesting, it bringing some amount of physical limitations into the online world. That's an interesting way to look at it. But when we talk about land, we talk about there is private land and public land, right? And there are likes of decentralized land, and there is a few others as well, like Sandbox and Horizon. So Prashant, what do you think is the difference between a private land and a public land, and what can users expect when they are building their metaverse?
Yeah, and I mean, I would take it from where Nipun ended. So the land is a limited commodity which everybody is owning. Everybody wants to own. Just like cryptocurrencies, certain cryptos which are limited. Cryptos are both certain public as well as privately owned by the organizations. Similarly, in the land space as well, certain organizations are community driven. Certain wants to be regulated or owned by certain entities. So, and all of this comes with has a different reason behind it, why they have come into existence. And as Nipun mentioned, there is no dearth of certain such applications in Web 2.0 as well. But in Web 3, there are these applications which have come up like row of blocks, Decentralized, Sandbox, etc., which are open for anybody to use, anybody to own.
Okay. Now, when we talk about land and we talk about ownership, NFTs is being talked about regularly. And Suprit, you talk about NFTs in your food startup. Can you touch on why do we need NFTs to have land, and can we have land without NFTs, or what are the advantages and disadvantages of not having an NFT?
So I think when we look at the metaverse and we use the word land, people tend to associate it very quickly with our concept of land in the real world. It's not exactly that. Land is kind of ownership in a space. So let's say it's a shared community. It's more of a membership token at this point of time, because if you're building something virtually, there is actually no limit to it. So a project is deciding that whether they have 10,000 parcels of land or whether they have 100 million parcels of land. All this ownership actually unlocks with the NFT, because we've been discussing about how you can trace the ownership of your land asset, or you can actually have the ownership of the plot you're building. All that starts with the NFT. So anything that a community owns in that space, it could be the building that they're creating, it could be a farm that they're creating, it could be a simple event attendance, ticket. All those come in with the NFT, because an NFT would basically be the digital asset that allows you to control that. But yeah, in a larger picture, with the Metaverse land, essentially, the NFT will act as an access token, as a token for you to just be a part of that community.
Very interesting. So basically what we can hear from this order, the answers is that you need land, you need to bring in a physical aspect into the digital world. And NFT is a means of establishing ownership and transferring that ownership if required, so people can trade on it. But now that we have got some inputs on this, so here is a question for you, Tane. So you have been building a university on the Metaverse. So what does it take to build something on the Metaverse on a piece of land? And how do people come in and how do they leverage it to get the maximum benefit relative to the physical world?
Thank you for the question. So we are not building the Metaversity on Decentralized or one of these public spaces. We are building our own Metaverse as to speak. And the way I think about it, and again this is very personal, is I think about Metaverse separated from the whole blockchain initiative, right? These are two different identities. What I think, or what we think at Impact Metaverse unlocks is the potential for people to hang out together, people to learn together, people to experience community together, right? A lot of students have access to tier 1 cities, tier 1 colleges, tier 1 infrastructure, but the bigger part of India is still in tier 3 and they are still in in the villages of this country, and they should also have access to community. They should have this democratization of community, right? Why do you want them to stay alone? So I think the whole 2D interface doesn't give you the embodiment piece, doesn't give you the belonging piece, and that's what Metaverse is solving. To build it technically, you don't need a lot of things. It's like building a game. We have been building a game for a very long time. You can build it on any of the platforms. We have built it on web because we feel that web is easier to get into. You don't need to download like a 1 GB file or 2 GB file to get started. So we have built it in under 10 MB, and our efforts are to build this Metaverse experience, this embodiment learning experience for the India which does not have access, for the Bharat actually, which does not have access to or does not care about all of this technology, but they do care about studying together, learning together, hanging out together, having that college university experience which some of us had, we were privileged to have.
Interesting. So when you have Metaverse, you are really bringing out communities in ways that didn't exist in the digital world today, in Facebook or the WhatsApps of this world. So when you are having your meetings, what I hear is that you can be together and have that feeling of being that togetherness is there. Now, since we are talking about all this happening, can you tell me, Nipun, on where do you think are the sectors heading towards in building out their Metaverse, or what kind of sectors do you feel would be the early adopters, or what kind of use cases would they go for?
So right now, from what I've seen, most of the sectors are just testing out waters right now, trying to understand their audiences, how Metaverse would evolve. But some of the sectors that are forerunners in this race, I would say, are education, as he mentioned. Fashion also, a lot of brands ranging right from Louis Vuitton to the Zaras are all entering the Metaverse. So fashion and education, I think, are two brands. Entertainment would be another sector. A lot of concerts are happening there right now. And if I talk about utility point of view, anything where collaboration is required in any sector, they are willing to explore the metaverse as of now and current stage.
Metaverse is also a boardroom discussion today, and we are discussing today earlier in the day about how everybody wanted to have a play in the metaverse, wanted to have a press release. But you are in consulting, Prashant. So what do you advise your customers to go out and build the metaverse, or how do they discuss the scenarios they would like to adopt when you talk to them?
Yeah. So as we are discussing the very valid point that customers first of all come from different industries. They have different level of understanding and expectations. So as Nipun mentioned that there are certain industries which are front runners. I would add consumer industry at the top, which has a lot of examples out there, and we are seeing a lot of adoption from their side. So basis the requirements of these different industries, first of all, we help them understand in what exactly metaverse is. Why do you need metaverse to start with? And when that happens, we can help them or suggest that, okay, with metaverse, what is an end objective you want to end objective or return of investment you might want to have. Then if we segregate these initial outcomes, and then we can come down to the core applications, like for example, there have been certain examples which have been cited by our panel members, and similarly some of these applications across industries we can pick up, and to take those applications to bring them to reality, what would be the investments and commitments which would be required from the client or maybe third parties or technology providers, etc. So that's how, I mean, it goes a typical, it takes a typical roadmap or, innovation roadmap or implementation roadmap of a digital transformation piece at a high level.
Okay, very interesting. But in all of these things, NFTs are being used interchangeably with metaverse. And Suprit, since you have been talking about NFTs, what do you think all this is heading towards? We hear about the crypto markets crashing, and people are getting apprehensive about it. But what does it take to have an NFT in the metaverse, and how do you really transact using that? And how do you establish value?
It's been spoken of enough that Web3 is the next iteration of the internet. Everybody is building right now. Everybody in the room is here because they're looking to build in this space right now, and a lot of innovation is yet to happen. Crypto was spoken about initially because yes, it was one of the easiest things about blockchain to understand. People associated crypto with stocks, and they felt like they've understood this space entirely, which is not true because crypto is a very small component of blockchain. Similarly, NFTs became the second kind of more popular thing because it was easy to understand what a digital asset can be. Going forward, I think NFTs will basically be a part of our lives in a way which we are yet to grasp, to be honest. So, for example, the previous panelist, Karan, also spoke about Lens Protocol, which is a new social media platform coming up on the blockchain. And similarly, there are so many projects that are going to, and so many businesses. We may tomorrow have our, rent deeds and rent agreements on as NFTs on the blockchain. You may have your society that is being built out, let's say, have a a metaverse presence, and you can actually go select the house you want to buy there. Or similarly, in our case, for example, in food, you can actually go to a virtual restaurant and select a table for your reservation where you feel the view is what you want it to be. So NFTs will basically be unlocking the potential for businesses to not just market but monetize their land as well. So we're in the phase where people are kind of creating these metaverse experiences to come and dance, to come and learn, to come and enjoy. NFTs is what is going to take it a step further, because then you can also monetize the experience, saying, hi there, you can come in and join this members club that gives you certain benefits. And tomorrow, let's say you want to sell this membership, you can sell it to another person. So the power stays with the community now rather than the project. So I think NFTs are going to be a very important part going forward, because they will kind of ownership for all these lands in the case of blockchain at least.
And do you think ownership is going to be a critical component? Because if you look at the Web 2.0, there's no concept of ownership. There's no concept of data. It's so held by centralized this thing. So when do you see that happening?
That is definitely going to happen because right now, if you see, there are influencers that suddenly lose access to their Instagram profile or Facebook profile, and that kind of tells them how, fickle their position is, even though they may be an influencer with millions of followers. But if the platform decides to take down their profile, there's not much they can do about it. So in these cases, up till now, people didn't know it could be an option. But it's one of those things that once you realize you have an option to actually own your profile, to own your position, or to own assets that you've created in a game, let's say, people who are going up the levels of PUBG and, having access to all their assets, it's something that people will now realize is an option. So you don't explore what you don't realize. Now it's the stage when people realize it is an option for them.
Interesting. And Tanay, one more question, since you're building out a complete experience around education, what is the device penetration and connectivity requirements you have? And what do you see, that's more from your company perspective, but generically where we see metaverse happening, right? We talk about head-mounted devices, we talk about experiences on laptop and mobile, and there are different layers of experience. Now, where do you see all of this heading towards?
See, our metaverse is not primarily built for the VR devices. So the reason we built on WebXR is that it can run on laptop, it can run on phone, it can run on web XR as well. But when we thought of one thing which we strongly believe in is that students don't care about the technology, they care about the problem which we are solving, whether it's being solved by metaverse or it's solved by blockchain. They don't care about it. They care about, hey, will this experience get me an employment, get me a job, get me educated? And for that, we needed maximum penetration. And today, laptops have that, right? Almost every student in India has a laptop. It's easier to get a grant from somewhere and buy 25,000 rupees, 30,000 rupees laptop in India. And network penetration has become really, really good. On 4G, you can see a YouTube video, you can stream a YouTube video without having to stop, except for the ads. So you have all of that already, and we thought of first building on that because somewhere, Roblox, Fortnite, and even, I keep forgetting the name of that game, the chicken, winner, chicken dinner, which was banned in India, has penetrated in the Indian space a lot. People know that there is an embodiment experience, there's a community experience, there's this, you're buying outfits, you're exchanging coins. So you know that, you can hang out in these 3D spaces as well without having the head-mounted device, because we bought a lot of head-mounted device for ourselves, for our team. We tested it thoroughly, we built everything. But what we realized is it's 20 minutes to 30 minutes, it starts becoming nauseating. And the bigger problem with the head-mounted device right now is that it's good for consumption, but not good for creation. And education is a creation exercise, right? You have to submit exercises, you have to participate in the class, you have to solve questions. So you can't do that. You can't type in a metaverse, in a VR device. Like you can, but you can't type as good as you can type on a laptop. So that's where we pivoted towards building laptop first, mobile second, and VR third. And when we showed it to our students, we have now a few batches running on the metaverse. They were quite excited about it. They showed it to their parents, their uncle, auntie, chacha, everyone. Look, this is the college I'm going to. So there's a lot of brag factor, a lot of community factor in it, and we got some really good response in the first one because it's also very light, so people were not able to believe, oh my god, it loaded so fast, it's running smoothly. So those are the factors where we double, triple down on, making the whole experience as smooth as possible on a laptop, on a 30,000 rupees laptop, than going towards the top 1% crowd which uses the head-mounted device.
Interesting. So, Nipun, he has made an interesting point. Suprit, you wanted to add in something?
Yeah, I just wanted to add to Tanya's point with the software. 10 years ago, we were buying a mobile phone because of the call we wanted to make. And today, people don't even bother asking. They're looking at the camera pixel because the social media photo is more important. So in all these scenarios, the hardware is in the process of catching up to the new tech coming out. So I completely agree with his point that today it is web and the laptop that is going to offer the best experience. And then 5 years down the line, headsets as cheap as 200 rupees, 500 rupees will come up for people to have that more immersive experience as well.
Completely agree on that one.
I'm sorry to cut. So whenever I have an investor presentation around this, I always say this, that we believe in Moore's law. We are programmers and engineers. We believe in Moore's law. It will take care of itself. We just need to make sure that the experience which we are giving is useful at the end user level rather than at the technical level. That's what we are doing.
Yeah, that's the right thought to have. And people, as is rightly said, Tanay mentioned, that people don't care about the device as much as they care about the experience and the problem they want to solve. Now, when you go to enterprises and building to help them build their metaverse experience, what kind of ROIs are they looking at? And are they getting the ROIs as of now?
So actually, every brand that we work with, the first question is like, everyone wants to kind of, before entering the metaverse, deduce what is the ROI, because that is what everyone has been used to. But unfortunately, I would say a metaverse strategy, if you're looking for a short-term gain in the metaverse, that is going to be really difficult. And only brands that are kind of, planning this on the long term, just like you mentioned in your previous question, where right now, metaverse is at a nascent stage, and though we are experiencing it on the keyboard mouse, the devices are definitely going to make the entire experience much better. And, the devices have to catch up with the metaverse right now. If I just kind of, build on a phone example that one of my fellow panelists mentioned, if we all remember earlier, phones were expensive and the adoption was very less. But back in 2007, if you remember, once the iPhone came in, everyone was like, loving how the phone worked, the access to things. And that tipping point is going to eventually come in the metaverse as well, I feel.
So what kind of near-term KPIs do companies look for when they're launching their enterprises applications on the metaverse?
I would say the number of active users is one of the parameters that they measure. But again, metaverse hosting right now is quite expensive. So the investment that goes into kind of building something in the metaverse versus maybe the actual returns that you're expecting on the financial front might not make sense right now. But yeah, if you are able to kind of, get your brand out there, PR value is great when you do your metaverse campaign, so as to speak. So MAUs, I would say, would be the parameter right now that people look at as far as an investment in the metaverse goes.
I have one more question before I open it up for the audience. I believe you might have some questions to ask the panelists. So where do you think these things are going to head in the next couple of years? And this is for all of you.
Maybe I can take a short from at a high level. That this technology, or be it any other emerging technologies, takes its own good time. It has its own hype cycle. It has its own ups and downs. There was a time, I can relate it with an example or analogy people can also connect with, is with blockchain and cryptocurrencies, where at the start we were confused with cryptocurrencies versus blockchain applications. There was a time where cryptocurrencies took a high, and we were not sure about the quality blockchain applications which were out there working in the background and building themselves. We were looking at the media, marketing and all those news. But in the hindsight, there were certain very sincere quality applications which people were building, enterprises were building, like CBDCs, supply chain applications, and many more. So as the time passes, we build capability both from a technology perspective, infrastructure perspective, and the quality applications would come out. I know the time at which this conference is we are having, it's not a great time in the metaverse or cryptocurrency space, but it's a time which will pass by. I'm sure, as we are from the industry, we know that there will be a crunch time where from a interest and investment perspective, in a short-term future, we might see a low, but I'm very positive about the coming 2 years where we'll see some of our panelists leading their metaverse applications go full scale and go to the next level. So that's I'm seeing at a high level.
Suprit?
I think for the next 2 to 3 years, the metaverse as a concept will largely be more about bringing content creation from 2D to 3D. So everything that we see today in terms of a social media team in a company, in an organization, is going to strategically move into being about 3D content and metaverse creation. So you're seeing the positions of a metaverse officer, you're seeing the positions open up for people who can kind of come in as a Unity designer into the team. And I think that is going to be the key shift for the metaverse first to turn into a marketing opportunity. Like my panelist said, it is right now a big PR buzz to have a metaverse space. And after a few years, this will turn into a complete monetization opportunity as well. So we are already in a digital movement. A lot of people think that we're very far away from this, but we are having this meeting today with us joining in. We are having a lot of people on their phones today. We spend a chunk of our lives, looking up, whether it's our banking services, whether it's to order food, whether it's to check out the live stream of a YouTuber we like. Our lives are already digital. We are in the metaverse in a way, and the idea is just to keep improving that experience. So that is going to happen with the metaverse going forward, where the social media, every person is going to be streaming in a 3D space. Education is going to come into a 3D learning environment. People will be able to maybe learn how to do surgeries and study medicine, for example, in the space of a metaverse, hospital world. So that is going to happen gradually, but the start will be through content creators, I feel.
Tanay?
I have a different thesis on this. I remember when I was 10-year-old, I'm 32 right now, and the first time I saw my first computer was in my dad's office, and then I interacted with computers in school. And mostly technology, whenever there's a new technology, right, it enters your life either through education, through school, or through work, because these are first early adopters of technology, because you start getting these pieces quite in. So right now, see again, I'll go back to the problem, right? The problem which Metaverse can solve is a problem of collaboration. And education is a collaboration problem. I had to leave my small town Bokaro, which I love, to go to a college 3 days away. My mother couldn't visit me for all 4 years of my engineering. And that was something because of compulsion, right? It was not a choice. I had to study, I wanted to study engineering, I had to leave my house. A lot of students in India have to do that. And same way for work, right? For work, I have to stay in Bangalore, and I wanted to stay in Rishikesh actually, but then the collaboration which you can do in person, whether it's about education or it's about work, you can't have it online right now. Yes, you can talk, you can have meetings, but that in-person experience, that serendipity is always missing. I think Metaverse will solve that problem in the next 5 years on both fronts. And I think, Mark and Satya, these guys are working towards solving this on the work front, on the employment front, while some folks like me are working on solving this on education front. And I think these are the two places where Metaverse will prevail, because these are some real world user problems where we have to move because of compulsion and not because of choice. And I think that's where we should focus our energies on.
Nipun, you get to go now.
So I think in the next 2 years, if again I talk from the brand's perspective, it's going to be more about, more and more brands trying to kind of, while Metaverse is evolving, test waters, as I mentioned, try to understand, what are the kind of engagements that they could maybe explore going forward. so that when the time is ripe to grasp this opportunity, they are all prepared. And instead of being reactive at that time and trying to just follow everyone else. And I think on the hardware front, again, on the device front, something that we discussed, it's really important. I think I remember the first VR experience I had back in 2012 versus what we have now. We've made a lot of ground, but this is going to grow, I think, multi-folds over the next 2 years, and just the experience that is going to actually, the way the metaverse is meant to be experienced, hopefully we would have all those devices with us, like to a good extent in the next 2 years.
Interesting. So we are almost at the end of the time, but we have time for a question or two if anybody is interested. We have two. There's a hand.
Yeah, my question is to Tanay. So I see you are building a metaverse university, what you have mentioned. But the current alternatives I see for the metaverse universe, I go physically into a class or I go online through a Zoom class. Right. And the pricing of those two options and then the cost of infrastructure what you are building is maybe 10, 20 folds high. So how are you planning to convince the people based on these intangible benefits? Because this is only the benefit is only intangible, so I can still live with the alternate options. So how is your revenue channel?
Right. So I think it's a myth that building a metaverse is too costly or running it is too costly. Because as an engineer who has worked for Microsoft Teams, I know that building a collaborative platform isn't too costly right now at this stage. Costs are as low as possible because web streaming, these APIs have become quite commonplace. These are easier to do. So cost is nothing. You would be surprised that the cost is no more than Zoom actually. If you switch on a Zoom call for 3-4 hours and you switch on your metaverse for 3-4 hours, that would be the same cost. Because a metaverse is nothing but a 3D meeting. It's actually, that's how we have built it, right? We have used the same APIs which you would use to build a Zoom to build a metaverse. And the whole metaverse, the 10 MB, the 20 MB which we talk about, it's actually very small and that works on the client. So we don't have to engage our servers every time to spawn the metaverse. So cost-wise, there's no difference. Now that there's no difference cost-wise, when a student experiences metaverse versus they experience a Zoom call, everyone knows there is a Zoom fatigue, and there's zero chances of serendipity in Zoom. So students do understand that, and we have all experienced this, someone having a tea on a Nukkad, and then you run into that person and you say, hey, what are you working on? And suddenly 3-4 more people, those in-office chats, water cooler chats. So we know what serendipity is. It's not that hard to sell, especially when there's no added cost to it.
So we have run out of time, but I guess Metaverse is here to stay, it's here to grow. We are all going to be here around. We can have the discussions after this meeting. Thank you so much.
Absolutely. Thank you so much. Thank you so much to the panelists for such a thought-provoking session. Thank you so much. Can we please have a huge round of applause for our panelists. Thank you. We now proceed towards the next fireside chat of the day, titled Brands Hop On to Metaverse and NFT. The panelists will discuss how brands today are using Metaverse and NFTs for marketing their products. For this, we have Manasa Rajan, CEO, Jupiter Meta, Nirupam Srivastav, VP Strategy, M&A and AI Digital, Hero Group, and the session will be moderated by Siddharth Durba, Director, KPMG India. Can we have a huge round of applause for the respected panelists? Over to you.
Good afternoon, everyone. I know it's almost lunchtime, so we'll probably keep it interactive and interesting. We do have Nirupam who's joining us remotely, so we wish you could have been here in person meeting this great crowd that we have here, Nirupam. But nevertheless, I think Manasa is here. We're lucky to have you here on the stage. You don't get her time that often, as well as yours, Nirupam. So great to have you here. You've had a couple of sessions on Metaverse sometime back and others as well. But this is an interesting one, specifically because it relates to you. Brands, consumers, it's all about consumers. If you look at Metaverse per se, it's again, it's a new channel which has come up. So I would probably like to start off maybe asking Manasa in terms of, it's again all about user experience. It's always about in terms of how do you explore a new channel. The point that brands are hopping on, it's not just brands, people, content producers, as well as everybody's excited about it, because the amount of innovation that you can probably do in the space, right? In terms of how do you collaborate, how do you interact with your customers, is something which is absolutely brilliant. So I probably want to start off with you, Mansa, in terms of you've been at the forefront in terms of working with different types of brands, working with people, creating content. You built your own Metaverse platform as well. So probably a little bit about the ecosystem and what is your thoughts in terms of what's happening in this space?
Thank you. Thank you, Siddharth. I'll take a slightly specific approach here. I want to talk about what is it that brands are doing in a very meaningful, focused manner. Sometimes when we think about these new emerging technologies, we think of it as an experiment that people are doing. But the potential and the way that brands are harnessing this technology is very specific and focused, in different ways. So number one, for instance, for a lot of legacy brands, luxury brands, they are speaking to a very young TG, which was almost impossible for them to do. Brands like Gucci or Dolce & Gabbana, they are entering the space and having a meaningful conversation with the Gen Zs in a space that is relevant to them, in a manner that is engaging and hugely satisfying for that group of people. Brands are able to really build community for their super fans, really create experiences for that top group of clients and customers who are engaging with them, who are brand loyalists, who are evangelists for the brand. Brands like Starbucks or Budweiser, Clinique, they are doing such a great job of using NFT and Metaverse as a platform to really create differentiated experiences and engagement with that group of people, which as a value to the brand is significant. Brands are also able to monetize their assets in a different way, in an additional way. Reddit, for instance, is really able to harness that community and create a way to monetize that. So Nike, in their association with Artifact, for instance, it's really another way of monetization, another business model that they're utilizing. E-commerce platforms, really have upgraded that experience and are continuing to do that in a meaningful way. It's like a hybrid way of meeting the online and offline experiences for the user and solving user journeys, user problems in such a beautiful way. If I can try on makeup, if I can try on some cosmetics companies are doing it, fashion brands are doing it, IKEA has done it brilliantly. If I can place an expensive sofa in my home, I would, it makes my job so much easier as a customer. But also in the education space, I think Minecraft and their Metaverse has been such a great platform in terms of immersive gamified learning. Like, games are easy to play, but education is a hard, problem to solve. If the barriers are, crossed and it's the same thing. If learning is as fun as gaming, then the future of education and children is substantially different.
No, I think you made some great points, and also probably you've taken names of global brands.
Yes.
Probably I would love to know from you in terms of what does it mean for some of the smaller brands. How does a startup, let's say somebody who's a SME or an MSME, reach out to the mass market?
Yes.
And what does it mean for somebody who's from the smaller towns or the smaller markets? Because it's not only about brands, etc., which what I believe is it's definitely a channel that's opened up. And probably this is where I would love to bring in Nirupam, because he's a practitioner. He's working on emerging tech, AI, blockchain, more, and he's also part of the Hero Group. But probably I would like to have a wider perspective in terms of what you have seen in the world, in terms of the marketplace. How is this evolving? Because what we believe is, as Mans has mentioned, a lot of innovative brands are coming in. They would like to work with their super fans, or trying to help them to monetize it and as well as explore it as a channel. Would love to have your views in terms of how do you see this?
Sure. Thank you, Siddharth. And let me know if I am audible.
Loud and clear.
Okay, wonderful. Thanks. So I think the way I see it from marketeers and brands perspective, there are three key ways by which brands can leverage Metaverse. The first one is to understand customer need and customer behavior. So when we talk of Metaverse, so let's look at the web 2.0, I mean to say. So in web 2.0, what's the differentiation besides other things is that if you have proper tools, you can actually understand what the customer is looking for based on where the mouse is, which web page he is on, in your product portfolio, and a lot of stuff you can understand, in terms of customer preference. When we go to a metaverse, it goes to a next level altogether. Because in metaverse, the user can interact with that activity. Okay, so if you want to see a shoe from a particular angle, you can change that angle and want to see that. If you want to see a shoe with a particular color, you can do that. Similarly, there is eyeball tracking in systems built in right now. So as a brand, you already know what the customer is looking for. Whether on a web page you don't really get to see that unless the mouse is moved or the page is moved. But here you actually, from eyeball tracking, you can actually understand whether the focus is on the color or the price tag. What is the focus here, right? So understanding customer behavior and understanding customer need is the first use case I see. The second use case I see is creating a preference in the mind of the consumer. So as Mansa already mentioned, that there is a lot of gamification, a lot of stuff already happening. So how you can put your brand in that content which customer is already consuming, is already engaged with, and build a preference and build for your brand or for your product that automatically registers in the customer mind. So whenever next he goes into the market, online or offline, and he wants to purchase, you have a first preference automatically. And the third factor I see is what I call as co-creation. So in terms, for example, the NFTs and other things come into play. For example, if you want to see a design and you want to just figure out what the designs customers are preferring, So, for example, just roll out NFTs of all the designs and see which designs are most popular, right? Which designs have the most value, which people want to either retain or, are getting sold for the highest value. So there are ways by which, brands can understand and co-create with the consumer. I'm just giving one example. There are many examples by which brands can work with. And the good part, since you talked about the big company versus the SME segment, so it actually levels the playing field currently, or it may change. But currently, it actually levels the playing field. So SME has equal access as a big company, because it's a relatively new field for both of them. Of course, we'll have to put resources to understand and make a play in that space, and that's where the opportunity lies. So for SMEs also, this is a good opportunity, especially if they're targeting Gen Zs and others, because they have a very different need, and a lot of companies today are coming with products targeted at them, and that's where Metaverse is a very good option to be there. For other brands, it is as a multi-channel, as a multi-channel strategy. You also have to cover that market, so you cannot ignore it. So that's where I stop, but these are the main use cases I see from our perspective.
No, you made a couple of great points, and probably coming over to Mansa again. Mansa, you did mention specifically in terms of the leveling of the playing field, and also in terms of how it's actually making customer interaction a lot more personalized. It's let's say hyper personalization to a certain extent as well. But people do have concerns around, let's say, their IP, as well as in terms of protecting the brand image, whether it's on any other channel vis-a-vis Metaverse, in terms of some of these areas. And also, we have seen incidents where somebody had actually walked into the digital store of a major retailer, there was incidents of cyberbullying as well as shaming, a lot of things which happened there as well. From a perspective of user experience, protecting the customer in terms of what they're exposed to, as well as how are you supporting clients and how do you see the entire journey evolving, and how difficult or how easy is it for a brand or an organization to actually come on board or probably leverage this new channel to the best of its capabilities?
I think that's a great question, because it's also a challenge that most brands and companies deal with. So I'll just break down the previous question and answer this as well. So in terms of any brand to enter this space, their focus on what problem they're trying to solve or what is it that they're trying to achieve through this needs to be very clear. A solution-based approach is more important than jumping on the bandwagon from a technology implementation standpoint. So if, on the training side, let's assume that the goal is creating a training module in the metaverse for risk and safety kind of training. It's a very, very impactful way to deliver that training because of the platform or because of the way this technology can help this. And that's a great way to enter this space. Similarly, if somebody has a digital implementation to kind of set the goal of by what metric you're trying to improve the customer's experience, that needs to be clearly defined for the creative vision to then play out. So to the examples that you spoke about, I think this is an emerging space. There is going to be a learning curve for brands, for platforms to do better. And yes, I think that's something that we have to be very mindful of. On that line, it's an interesting take that we have. We have a product that is called the Incognito Room. And it's the other side of the equation. This technology also offers a great way to create solutions that are much ahead, in the sense that, there is a learning curve for each of us to be more bias-free, more equal in the workplace. But this technology offers us a way to fast-track that learning curve. Just creating a space that is safe, bias-free for a lot of people to interact, especially around POSH or sensitive issues.
No, absolutely, and thanks for sharing that. And from a practitioner's perspective, so I come in from a cyber background, so I definitely need to ask you questions from a risk and enterprise perspective as well to Nirupam. But before that, in terms of protecting user privacy, so we still are a little bit away in terms of looking at digital self-sovereign identity. How do you actually log in? How do you interact? It will not be the same as a user ID or password-based approach, right? Given that people are creating digital avatars, how do you, and there's a topic of interoperability across platforms. Being a large corporate customer, you don't want to build only once and use it only one platform. You would definitely want to port it. So when you're looking at it from a implementation perspective, as well as from a security, privacy perspective, what goes into your mind when you're actually working with startups or when you're evaluating certain projects, or when you, let's say, take to your CIO or to your head of sales in terms of what goes ahead and what goes in terms of doing it? I know that you have definitely set up a Metaverse lab as well. You were telling me sometime earlier. Probably you want to share a few snippets on that, as well as what's your approach been in terms of looking at projects when you evaluate. What are some of the security and privacy considerations which go in your mind when you're dealing with your customer information and data there?
Sure. So that again, good theory you raised around privacy points. Again, looks like my connection is unstable.
You're back.
Okay, I'm back.
Probably while Nirupam joins back, probably I'll...
Great points on all the 3 points. The privacy of the lab that we have set up. We have set up a Metaverse lab, and again, we have brought in all kind of platforms that are available right now. We are building applications not only for the consumer side, but also for the industrial side. Again, training workers for hazardous situations, training workers for situations which they have not seen earlier, where the infrastructure is still coming up for those kind of stuff. So that is very much possible, and that is being done. Coming to the point on, okay, so I'm coming from a philosophical standpoint. The philosophical standpoint here is Metaverse and the devices and the platforms are still new and evolving. and we do not have a very clear global leader. Of course, there are many people in the race, and there are different types of model, both centralized and decentralized models in play. And from a brand perspective, obviously, both give their own advantages and disadvantages. So, from a brand perspective, if I have a centralized model, then I control the data and then I can better protect it from privacy and other perspectives. But if it's a decentralized model, then it also has a better transparency for the users and create many more applications which are include third party and other interoperability is slightly better from that perspective. So that's where the question is. So we are still, I think most of the players are experimenting. So we are again looking at multiple platforms as there is no one Google here, like search engine. So we have to critically experiment it. The second point around data privacy, I definitely agree that's a pretty serious matter, not just from a metaverse perspective, but I think some of the previous speakers also talked about leveraging data from metaverse for AI. So once you integrate and you actually build in a profile and a persona, it's a serious behavioral profiling, I would call it. And I'm sure the new data privacy bill is on the table, and it's trying to balance. It's not a straight answer. It's trying to balance the need of user privacy and also the need of the businesses and technical people to have data to analyze data. So both are required in a way, and there has to be balancing out. Security, for sure, is an ever evolving game. We have few incidents in the recent past, and I don't think anybody is fully secure, but yes, it's a very, very important thing to keep in mind. And as far as interoperability is concerned, yes, we are looking at interoperability in terms of how we can create our presence, which is at all the platforms without actually reinventing the wheel every time. So it's more like, in the mobile landscape, mobile operating.
I think we might have
One from Nokia, one from Samsung, and we try to figure out which app they're importing. So we are again, in that space right now.
Right.
Once it settles out.
And probably just again, moving away from some of the other use cases, if you look at in the industrial metaverse, you're talking about cloud, IoT, AI, all coming in together. So how do you see the space sector or the space evolving over the next 2 to 3 years? We do have a small snippet and a video that we'll be showcasing as well in terms of what does it mean from a brand perspective, or what does it mean for brands to be on Metaverse that Mansa's team has put up. We'll probably come up to that, and we'll also take questions from you. But a quick 2-minute recap in terms of what you see the future as with all of these technologies bringing in, what's the future of Meta and brands working together?
I'm very excited about it as a customer and as a user first. I think the extended reality is going to make every experience more immersive, more engaging, more valuable to us as a user. So I'm very excited about that, whether it's a e-commerce experience, a learning experience. I see the future of our children in schools having a exciting educational experience first. So that's one. Second is, I think it's also equalizing the world. The decentralized nature. Also for creators of intellectual property, I think there is going to be more control over monetization opportunities. The world will have more newer business models, whether it is consuming any kind of content, whether it is participating in your creation, and also across data, having more control as a creator to have access to data would be a game changer.
More power to the consumer.
Yes.
Probably a couple of last thoughts from your side as well, Nirupam, in terms of where do you see moving in? Because industrial metaverse, being an engineering hub, you've been associated with a lot of manufacturing processes, plants and others. And also from a perspective of where do you see your customer interaction? It's a new and exciting channel to work with, but there are a lot of industrial use cases, enterprise use cases as well. So how do you see this evolving?
Also from a consumer perspective, if I look the retail market space, physical and metaverse integrating. world will have a corresponding action or reaction in the metaverse world and vice versa. So that the people can, so now already we are talking of things like robotic surgery, so this is essentially a combination of physical place and metaverse virtually, where we are connected, the doctor is connected and he can do and the robot can operate on the other side. So these kind of things we will see more and more integration, including in India, so not India is not just behind in this space, so there are big advertisements in some newspapers on the robotic surgery. So these are examples which will continue to evolve, and a lot of businesses and consumers will find newer and newer applications. I should say, co-create those applications and be a winner.
Awesome. I think we'll show the brief video and we'll probably then open up for questions. No, I think thanks for that lovely view in terms of what is some of the art of the possible with these videos, Mans. I think you guys are doing some amazing work. Probably we'll open up for questions from the audience as well, if there is any questions. I think we have a very knowledgeable team here between Mansa and Nirupam. Any questions from anyone? Sorry, yeah, go ahead, Nirupam. Sorry, you wanted to make a point?
Yes, exactly.
Yes, please.
Yeah, hi, this is Urvesh Mehta. So I have one question related to the pertinent problems which are there when we interact with the platforms like this, right? So, the metaverse is going to be far more intimate than any Web 2.0 any application or platform. So when the customers are interacting with it, their actions should be tracked and it should be properly monitored. So from that point of view, do you see that financial institutions and big corporates will jump into these kind of solutions? And if they do, will the identity management and those kind of third-party solutions will also come to the picture, like OFAC or WorldCheck One, or if there will be different kind of identity registers which will be brought in, to check which all or who all are logging into the metaverse applications. Yeah.
So probably I'll just give you my take on it, because I'm a practitioner from a perspective of cybersecurity and risk. So typically with all the financial institutions that I'm working on, whatever we have seen is there'll be new forms of identity, as I was mentioning about digital self-sovereign identity, as well as pre-checks. You will be holding your own identity in the form of a wallet. So typically if you believe that you're not tracked, for example, MetaMask has already started tracking your IP, right? Because it was forced by the US regulators and the US Federal Reserve. Now specifically what we do believe is every action that you have, if you're wearing, let's say, devices which are connected, IoT devices which are connected to the metaverse, end of the day, the data would be collected, but it will be depending upon the end user. The end user will have more power to see whether he wants to share that information or not. So let's say that if you physically allow someone to track your session, for example, if you log into the metaverse branch of a bank, you have your digital wallet. You'll hold your multi-currency CBDC, you'll have digital assets, you'll have your digital ID all on top of it. And when you go to brands which are connected, you can get offers. So typically, similar to the way you actually click on everything, accept, 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 without reading whatever is there in the Play Store, just because you want to leverage an app, I think it will be the same, but it will give you more power. If you learn in terms of whether it can be tracked, yes, it is. It will be tracked. Can it be misused? The answer is yes, but that's where the platform, in terms of where the bank is actually willing to host. Is it on a private metaverse? Is it on a standard or a public metaverse platform? What are the end user agreements? Because if you look at it, these are all third-party applications. So specifically from a regulator's perspective, in terms of how do you interact with your third party, it's not only vendors, so that's where third-party risk and others in terms of from a privacy consideration and others come in. But I would probably want to have Mansa and Nirupam's views on that as well.
From a brand's perspective and from a company's perspective who's creating a unique experience, I think there is growth happening and learning happening on different fronts, which is not consistent. So there is value in the fact that all the metaverses are not linked together at this point, and it's not a multiverse experience, because the potential and the promise of each platform and each service provider or platform provider is different. And there is a lot of collective learning yet to happen for us to build an ideal solution across the board. So as a user, there needs to be there is a big need to educate ourselves in a meaningful way, because the service provider is as new in this space as anybody else. So I think there's a lot of collective learning, but the future is very bright. At the same time, it's good that the regulators are coming into the picture as quickly as they are today.
And before going on to Nirupam, just one point, there are regulators coming into the space. If you look at UAE, right, you have the virtual regulatory authority which has come in. Other regulators in the region are coming up. They're all thinking of actually having their own presence on Metaverse, trying to see how do they control the Wild West which is there today. So it is evolving, but probably Nirupam, last thoughts from you.
Sure. So very good point, identity. In fact, identity is critical part, and I think that's where NFTs started playing a lot of role, where NFTs became kind of an access token for different services. So if you have a particular NFT, you are part of a particular community or a part of a particular group, and you have access to certain applications which you can leverage, and that's where a lot of data comes in. But not just data. The nature of the beast is the DAOs, DAOs, the decentralized autonomous organizations. So you can also have governance tokens, and as a person holding governance token, you can decide how the metaverse or the DAO that is the organization it uses that information. So you actually have a role in deciding how that data is collected, how the data is used, and what kind of protocols you want to follow. So there are, it's not completely closed box, because the decentralized nature makes it slightly open box. And that's what the difference between virtually private metaverse versus open source metaverse. So you have both the options, and that will determine how the data is being used. And of course, there is lots of uses of data, and people in data science are very, very excited about it.
Thanks for that, and thanks to the lovely audience. I think you have time for a last question, otherwise we'll close it. Sure.
Hi, question for Mansa actually. Just out of curiosity, how much of this entire phenomenon is driven by preferences of Gen Z? I know you mentioned Gen Z. This whole attachment to the brand, building community, wanting to be out there associating. I don't recall my generation going so gaga over, wanting to be visiting all these brands. So is Gen Z really a driving force behind all this? Would you say that much?
It's a great question. I think they are the starting point. They're leading the movement, but it's certainly not restricted to them. As somebody who's not Gen Z, I do have my preferences, and I am a super fan of certain brands. And if there is a specific experience that is customized and personalized for me, it's relevant to me. Similarly, let's take a person who is having a spiritual or a religious experience and is in the 70s. If it is a experience that they can have in the privacy of their homes, where they don't have to have a physical commute. And you're limiting the barriers to entry for that person to have an experience that is relevant to them because of their attachment to an idea. It becomes relevant, and the technology can enable that. So I think why we talk about Gen Z so much is that they are present in the gaming space, they're present and attracted to the metaverse space, they spend a lot of time on digital mediums, so they drive the movement for the most part, but it's going to impact all of us and make it better for all of us.
Thanks for the answer. Thank you for your time, for your great questions and great answers, equally great answers from the panel here. Pleasure being here, and thanks for having us.
Please join me in thanking our panelists for this session. It was full of valuable points. Thanks a lot, esteemed speakers. Thanks a lot. With this, we now break for lunch. I would request you all to please collect your food coupons from the registration desk. Please note that we would resume at 2 p.m. sharp. Before we move, I would again like to thank our supporting partner, Asset Mantle, and exhibitors, ZV, Mudrex, Metaverse Blockchain Solutions, and Param Network. Thank you. Ladies and gentlemen, this is a reminder that we'll be resuming with the session in 2 minutes. I urge you all to please kindly be seated. I repeat again, we'll be starting off with the session in 2 minutes. I urge you all to please kindly be seated. Ladies and gentlemen, we are running a little short on time, so I would request you all to please kindly request your colleagues, friends, and everyone to please join us as soon as possible so that we can start off with the session and resume the online sessions. Thank you. Welcome back, everyone. It's time for our first standalone session of the day, titled Building a Human-centric Metaverse, the future of a citizen-focused decentralized economy. For this session, we have Naseem Naqvi, President, the British Blockchain Association, who would be joining us virtually. Please join me in welcoming Naseem Naqvi.
Thank you very much.
Over to you, sir. Over to you. Yes, you're audible, sir.
Okay, excellent. BBA's Metaverse Now, most of you may have seen this, the Metaverse's impact on India's economy by 20. Protocol, also called POAPs, for our events. And we also published our journal, a scientific journal, in the Metaverse recently. This is our Metaverse headquarters. The place where I'm standing is Ethereum blockchain. Now you may be surprised to hear this, those of you who are not well familiar with decentralized metaverses, that this platform is built on Ethereum, and every plot of land, this virtual land, is an NFT on its own. So anywhere you stand in Decentraland, you are actually standing on the blockchain, which is kind of interesting, but that's what it is. So this is not owned by a company. This is not owned by a CEO. These are decentralized metaverses, and they are run by communities, or also called DAOs, decentralized autonomous organizations. This is us hosting events in the metaverse. So this is not something that's just a dystopian dream. This is happening. We have already hosted events in the metaverse, and we have had quite good attendance. And it's much more interactive, it's much more immersive, and we regularly host events now in the metaverse. So talking about Web3 in the Web3. This is another view of our headquarters. It looks very real. You can see the big around, and it's just a 3D rendered metaverse, and these are our members. This is our journal, which is the world's first scientific journal to be published in the metaverse. These are various issues that we have published over the years, and we have a separate gallery in the metaverse for the journal. And by the way, this is fully open access. There is no fee to go or visit there. It's available 24/7 online. It's persistent. You can visit any time of the day. And to enter this gallery and have a look around, just go to the BBA website, and on the home page you will find access to all the links. We have also displayed all the research infographics there. So this is something that's not in 10 years' time. This is already happening. A scientific journal has already been published in the metaverse. This is already happening. These are some of the research infographics about United Nations Sustainability Development Goals and others. These are all research papers, peer-reviewed research papers that have been published in the metaverse. Now, what's happening around the globe, as you may have seen already, Dubai, UAE, earlier this year, they published their national national metaverse strategy, a 5-year national metaverse plan, and I'm sure they won't be the first country to end there. There will be more, and I'm sure countries are already working on this. And the numbers are optimistic, but I think they'll probably achieve this and maybe more. 40,000 jobs, new jobs, and that's a fairly decent sized company on its own. I mean, LinkedIn has about 25,000 employees. So and they're planning to add about 4 billion to the economy. These are some of the banks that have opened their virtual headquarters in the metaverse. Union Bank of India, CBI, JP Morgan, and others. These are all pictures from their metaverse headquarters. As we know, Interpol, the world's first law enforcement agency to open their virtual headquarters in the metaverse to provide training, information, education to their staff. And this is a view of their virtual headquarters in the metaverse. Governments have begun to take a serious interest in the metaverse. And this is French President Emmanuel Macron giving a talk in the metaverse in Decentralized, which was live streamed. And Saudi Arabia, they have celebrated their national day in the metaverse. This is the Decentralized. It was a 2 or 3 day event, and I went there myself. It was quite interesting to see how they showcase their culture, their tradition, in the form of various avatars which you can wear on the day. Their various initiatives, and this is a government-led initiative. This was on the Saudi government official website. So, and this is a small country, Tuvalu, in the Pacific Ocean near Australia. And due to the climate change and rising sea levels, the country is disappearing. The entire country is sinking because of the rising sea levels. And their plan is to upload, as you can see on the right, I don't know if you can see on the bottom right of my screen, it says now uploading. And what's uploading are the disappearing islands. And their country head recently at the COP27, he said that we have no other option but to upload our country on the metaverse as a digital nation, because sooner or later it is going to disappear because of the rising sea levels, and then we will have no option left but to show to our kids, our grandkids, that this is what the country was and how it existed, and the culture and tradition. At least people can interact with each other, if not physically, because the physical country doesn't exist, but at least digitally. So, and these are the various blockchain and crypto companies that are opening their headquarters in the metaverse consensus. Universities have started to deliver lectures about metaverse and also in metaverse. This is Singapore University of Social Sciences, China. So what is metaverse and why metaverse? come across these various terms. Is it Facebook's Meta? Is this a Web3? Is this DAO? Is this just virtual reality? And there are various ways you can define metaverse, but I would say that it is an experience about a Web3 experiment that is at various stages of development at this stage, in which you are required to have a presence in the metaverse, because if you are not in there, then it is a 2D, just a Zoom screen. So you have to be in there in the form of an avatar, and there has to be some virtual reality. Augmented reality may or may not be present, but some degree of virtual reality, a virtually rendered space with some spatial computing, and you are there. So Web3 is people, spaces, and assets connected together, and Metaverse is how we experience Web3. So this is what it is in a nutshell, and all of these components may or may not come into play in the development of Metaverse. I believe, as an open blockchain and open decentralization advocate, that it is far better for humanity, for citizens to have an open platform where the user data is not controlled by one company or one corporation. But there are trade-offs, as we know, with these platforms. But for more inclusion, for more diversity, for more accessibility, it is better if we build a decentralized metaverse, which are already there in various different shapes or forms. So what we have at the moment are metaverses, but when I talk about the metaverse, we're talking about the concept in general. And there are three enablers of Metaverse. And I'm sure all of you today in the audience are in some way or shape or form doing one of these three things. Either you are a technology person, or you are a creator, such as coder, builder, programmer, artist, developer, whatever, or you are in the finance side of things, which is the decentralized finance, crypto, NFTs. There are a few talks today. So you are in one of these three. And then we have obviously the various features of an open metaverse, that it is persistent. As I mentioned, it should be open 24/7. It doesn't go away when the participants leave, just like Zoom. So when Zoom participants leave, that call is gone. It's disconnected. There's nobody there. But it doesn't happen in Metaverse. So Metaverse will exist. It remains there. So you can come and go. Then there are some what we call some visions which have not materialized yet, such as interoperability. And BBA is working with Metaverse Standards Forum and other forums to have a discussion and debate on how we can interconnect these various platforms. So for example, if you have an asset in the Meta, you cannot move it to other decentralized platforms or Roblox or Decentraland or Sandbox. So how we can connect the various assets so we don't have to create the profiles every time we visit a new metaverse. This is a vision, and I'm sure organizations are working on it. But the fundamental to me is the control, is the user control, is the ownership, and is the self-sovereignty. Because one of the fundamental problems with Web 2 was that our data is being harvested, it's been monetized, it's been used, and even though the platforms such as Facebook, Twitter, Instagram are free to use, but they're not really free if you think about it, because we are the product. Our data is being used. So what a decentralized open Web3 based metaverse is going to hopefully achieve is giving us some control of our data, our ID, our activities, whom we interact, our finances, and so on. And this is not something that is new. This is a small island in the Pacific, island of Yap, and these are the Rai stones, and they are money. They're used for money for many, many centuries. They don't move, but people trade them with each other and say, okay, I own this stone, and now I'm giving it to you in return for some goods and services. So user ownership, whether it's gold coins or whether it is some other forms of currency or cryptocurrency. The finances have evolved over the years from barter system to stones to gold coins to crypto, and such as the other function of banks. We know that decentralized finance means you are using some kind of blockchain, Ethereum, or some other chains to enable peer-to-peer transactions, which was not previously possible in the digital space before the birth of Bitcoin or Ethereum. And traditionally, we have used banks, but now we have smart contracts, which they act as banks. So the reason I'm showing you this slide is to have this discussion on Metaverse is going to be a continuum. It's not something, it's not a technology. It is going to be a continuum, a combination of technologies which allow us to have this immersive Web3 experience. And finance is going to be one of the components of it. This is an ecosystem of non-fungible tokens, and I'm sure there will be more slides like that, but this is to give you an idea of various organizations that are involved in the development of these ecosystems. And all of us are builders, I believe. Whether you are in government, you are enabling innovation to take place, you're not stifling it, you are encouraging experiments, you are encouraging sandboxes of various sorts. You are a developer, you are coding programs. Today you code a program, in 50 years from now it will be used by children that are born today. So think about it. Think about how you are contributing to this amazing and exciting ecosystem that we are building. This is you may have seen this NFTs auctions of various sorts, players, cards, moments being used to share with others and with the community in terms of NFTs auctions. This is what an NFT is in a nutshell. You have a digital representation of an underlying asset, which contains all the details, the description, the name, the token, etc. And this is going to be, I believe, one of the key elements of Metaverse, as I've already explained in the beginning, that we have been using these NFTs as a form of proof of attendance protocols to issue digital certificates of attendance to our delegates, also called POAPs, and they are free to create POAP, proof of attendance protocols. What about our lives? I think our lives have been transformed by these various Web2 social media platforms over the last 1.5 decades, and they have given us amazing opportunities. They have built massive scalable businesses. They have transformed the way we interact with others. And these are some of the fascinating leaders who have helped us. And most of them are Indians, and that's quite remarkable, apart from Mark Zuckerberg, really, in this photo. But there have been challenges. There have been issues, and one of the big ones is we don't own the content there. When I post something on Medium or LinkedIn, I don't own the content. It can be deleted anytime. I can be banned from the platform. I can be disconnected from the platform for various reasons. And so there is no real complete autonomy in terms of my activities, my data, and my identity. So is decentralized universe a utopian dream? I think probably not. It's already here, and it is the metaverse. So the metaverse will allow the various decentralized infrastructures that we have built over the last 10, 12 years to come together, and then we experience it together. And this is happening. So this is another picture of our metaverse. And metaverse is predicted to be around 8 to 13 trillion market by 2030. This is one prediction from Citigroup, but there are more. But I don't really emphasize too much on predictions. I think these are just predictions, but things are happening. Things are happening very fast. So how and who will govern these metaverses? If we govern a metaverse through a centralized company, there's no point, because then why bother? Just have our Web2 platforms. So we need a governance structure that is also decentralized, and then here comes the DAO, the Decentralized Autonomous Organization. So the Decentraland, for example, where we have built our metaverse headquarters, is in itself a DAO. So it's not owned by one person or one company, but it is a foundation that operates the decentralized autonomous organization of Decentraland. So it is run by the community for the community. So there is no CEO. And that's quite interesting when you think about it. And again, this is an expensive DAO system which is expanding rapidly, and various organizations, whether they are educational organizations, grants, investments, finance, they are coming in, and these are all the various organizations. Now, just the last couple of slides before I finish. How would we build a inclusive, human-centric metaverse? So I'm sure 99% of people in the audience today will belong to one of these groups. Either you are from academia. In that case, you can contribute to the research, development, various knowledge networks, collaborations, and so on. Academics are going to play a huge part in Metaverse, I believe. Just as the internet was first a university network between 6 or 7 American universities, and then how it expanded. If you think about the DEPRA network, they were a connection between MIT, Harvard, Stanford. So internet itself was born through academia. So, and then you have the government, very, very important, that governments are supportive. They make policies that are conducive and helpful to people who are building. So they make regulations and benchmarks and frameworks and contribute to this development. This is called quadruple helix ecosystem, by the way. And this is not new, it's not devised by me. This is a framework for innovation, which takes into account 4 important players: government, academia, industry, and society. So government is on board, academia is on board, industry is building things, but society doesn't know what's going on. And that's how these innovations sometimes are slow to progress, because people don't know what is this all about. And this is why the seminars and conferences like these are important, to raise awareness so people can understand what is going on. Because at the end of the day, it will be public services, it will be the community, it will be people who will be using these platforms. And if they are not benefiting them, then what's the point? So how do we build those inclusive, human-centric metaverses? The first thing is education. Education, such as this Indian Express, India Blockchain Conclave, hosting these fantastic events, to raise awareness of what's happening in this space, to educate community, very important. User-friendly ecosystems are essential. It has to be evidence-based, and there is a lot of work which obviously, because of the lack of time, if anybody wants to learn more, they can get in touch with us. Universities and institutions are doing a lot of work and research to establish the foundations of metaverses, and various governance frameworks and standards are being put into place. And my last comment is impact. Think of impact. If at the end of the day, if your intervention is not making an impact, then what's the point? So you have to measure impact, you have to monitor for it, you have to strive for it, so that at the end of the day, you can show your results. If you're building something in the metaverse, NFT, blockchain, that it is actually making an impact. And the question is, who is going to be the next Sundar Pichai or Satya Nadella of the metaverse? And I'm sure somebody today in the audience might be the next Sundar Pichai or Satya Nadella of the metaverse. Yet to see. Things are happening. Thank you very much. If you want to learn more, I'm on LinkedIn. You will get in touch with us. And thank you very much again for inviting me. Thank you.
Thank you, Naseem, for that extremely insightful session. We now proceed towards the next panel discussion of the day, titled NFT and More NFTs. For this, we have Toshendra Sharma, founder and CEO, NFTically. Prashant Surana Jain, co-founder, Snapper Blockchain Technology and Innovations, co-founder, CryptoForce. Prakhar Sharma, co-founder, Metasky. And Naman Kabra, core business development and growth, Asset Mantle. The session will be moderated by Zubin Tafti, Managing Director, PwC. Please join me in welcoming our esteemed panelists on the stage. I would also like to announce that given the enthusiasm, we're also going to start with the hackathon soon. Thanks a lot. Over to you, Zubin.
Hello. Hey, good afternoon, everyone. Not the best place for a panel, just after lunch and after a presentation. But I hope we'll get this conversation going and get you excited. I think we'll spend the first few minutes just giving a quick introduction about each one, what you all do and what's the problem that you're trying to solve for with your companies. I can start with Naman.
Hi. Thank you, Zubin. Yeah, we'll just quickly start with my introduction as well. Firstly, talking about my journey. Have been into this space, majorly focused towards enterprise blockchains initially since 2017. That's when was core contributor towards enterprise suites such as Quorum and Hyperledger. Built out few applications, one of the first social payment applications, which was later acquired by Circle. And essentially started more focusing on real-world use cases and tokenization around it. And that's when NFTs kicked me 2020, 2021. And we essentially started working on something at Asset Mental. Asset Mental is essentially a layer 1 NFT infrastructure hub, which provides you an end-to-end stack for building your own customized assets and marketplaces at a no-code level. You could imagine it more from a Web 2.5 version, wherein the core focus is always going to be towards the user experience, and the use case has been built, and essentially eliminating all the nitty-gritties around the Web3 layers, all the dependencies across wallets and smart contract deployments and stuff. We kind of eliminate that and provide a service solution to all our partners.
Thanks, Naman. Prashant.
Hi, good afternoon, ladies and gentlemen. So I'm Prashant. I've started my entrepreneurship journey since I was 14 years old. Built an AI company, had a successful exit. Moved into blockchain and crypto way back in 2015 mid. We used to, how this whole thing started, being from like Hong Kong, China, over a poker game, Binance was formed. I have seen that. And also I started my enterprise blockchain practice in 2016. We were one of the first companies in India and in the world to do a blockchain-based land record transaction with government of Andhra Pradesh. The case study was also featured in Harvard Business Review, Ivy League publications, and everywhere. And today we are building enterprise-grade blockchain infrastructure. We work closely with Amazon, Oracle, Microsoft to bridge the gap, and also being an early stage investor, invested in Chingari and a lot of other companies. Also being crypto enthusiast since a long time. Started our exchange called CryptoForce, and today we serve over 1 million plus users, and survived the worst things which could happen in the crypto space, from the crash of Mt. Gox, 2017 crash, and today's crash of like FTX and everything. And I believe that this industry is just going to grow bigger and bigger, and decentralization is definitely the way forward, and specifically Web 3.0 going to be a game changer when it comes to privacy and everything. So thank you so much for having me here.
Prakar.
Hi, my name is Prakash Sharma. I'm engineer by profession, building in this space for 7 years now. Before starting Metasky, I was in the founding team of CoinSwitch, which is now called CoinSwitch Kuber. So the kind of technology that I work on is mostly focused on making a significant change by impacting millions of people to getting into it. So with CoinSwitch, we made cryptocurrency a talk of the home, especially in India. With Metasky, we are trying to do something similar for Web3, minus all the kind of gambling that happens in cryptocurrencies. So in Metasky, we are focused on building infrastructure for creators and brands. First, to recognize that who their core communities are, that is one. And second, to help them to monetize these communities, right? Because if we see the way in which the content is being consumed, there are so many options to each and every one of us individually to spend time maybe on watching Netflix or maybe scrolling Twitter and all those things. But when it comes to quality content, it is something which is missing. So the kind of narrative that we are seeing around the smart communities that are being formed, that are being formed in small buckets and living in servers of Discord and other places. So we are trying to make it more mainstream and done a couple of pilots across the world and seeing a good traction around it.
Tushendra, you're online. Sorry, we can't hear you.
Hi, sorry. Hi everyone. So my name is Tushendra Sharma. I'm the founder and CEO of NFTs. I've been an entrepreneur since last 13 years. Done my master's in computer science, specialized in application security from IIT Bombay. And 2016 is the time when I discovered blockchain and started my first company called Blockchain Council, which offer online certification in various technologies worldwide. It's a #1 company right now in the blockchain education and certification space. And then I started NFTically, which is a white label NFT marketplace. We help enterprises launch their own white label NFT marketplaces, just like OpenSea, but everything is owned by them under their own ownership. And recently we started exploring the e-commerce metaverse, where we are helping enterprises sell and engage in a gamified environment within metaverse, either NFTs or physical assets. So that's my background. Thank you.
Thanks, Toshendra. I'll go last. I have a lot of entrepreneurs next to me. Well, I'm a consultant. Been a consultant for over a decade, and predominantly I focus in the area of payments. Earlier it was moving fiat. Now I think we're moving a lot more stuff than tokens and assets and a lot of different things. Naman, let's get started. And I think if you could simplify what really is an NFT, I mean, in the layman term, right? And if you could give us an example of and define it for the audience in terms of what is an NFT.
Yep, sure. Essentially, you might have seen the last presentation as well. NFTs as a whole is nothing but a representation of any assets in the form of data on something called blockchain. The underlying asset can be anything. It can be a digital file, certificates, real estate, land property, music, or any underlying assets which you have the mechanism to be tokenized and put it on blockchain in an immutable manner. That is a simplistic way of NFTs. Few of the terms I think which would be essential to be, definitely to be understood as well from the non-fungible aspect of it. Basically, what you're trying to focus here is the ownership of the asset is kind of transferred and essentially immutable, the next term, which makes it that anything which goes on chain, there is no mechanism for you to edit it. You can append the data, but editing those data is kind of not possible when it goes on chain. I think, those are the simplistic terms and, a simple way to understand what NFTs are.
Okay, thank you. Tushendra, I'll come to you next. And usually we've seen NFTs, typically used in the area of, art or, some kind of a digital image, which then has certain value, right? And I think we've seen one of the most expensive ones I've heard of is some $69 million went for some, 5,000 pixels in a single art piece. But where does really these NFTs get value? I mean, how is it that they, accrue value, and how do you value it? In the physical world, physical assets, yes. People say, I own something that someone created. I can touch and feel it, right? But in the digital world, like, how does that, have value? And if you can help us, demystify that.
Right. So any asset, either physical or digital, actually they get the value based on the supply and demand. So it's still the same. Even if the gold, if you talk about the gold or company shares, they also acquire the value based on the how much supply is there, how much demand is there, right? So similarly, this happens with the NFT, which is a representation, as the previous speaker I just mentioned, that it is actually connected to an actual asset. It can be physical, it can be virtual, it can be digital. It can be just a thought as well. right? So once you connect it with that NFT or that token which is in the blockchain through a smart contract or a non-fungible token, so if there is a demand of that token, the value will go high, and there is no basis to measure the value. Right? Of course, there is a physical asset, and you can say if that physical asset is worth 1 crore rupees, then NFT is worth at least 1 crore rupees. But beyond that, there can be any premium that person can pay. So based on how much I am perceiving the value of that. So imagine there are particular unique kind of a plastic structure, which is not just unique, and there are only 10 structure in this planet, and nobody can, through a chemical process or any kind of process, can produce those structures. If only those structures will ever exist, and everybody want those structures, so imagine that price will go high. And what could be the upper limit? It depends on how much it is getting the attention among the billionaire community. If a billionaire say that I'm ready to pay $1 million, then it is a $1 million. But when the billionaire will start selling it, and then somebody will not accept it at that $1 million, which happened to the Jack Dorsey tweet, then the pricing will go down. So it is based on the supply and demand, similar to the cryptocurrency, similar to the NFT. So I think the real answer is that, if somebody is ready to pay something, it's valuable as that much. That's it. Simple as that.
Okay. Anybody in any other thoughts or any other inputs that you want to share?
Yeah, I share a different perspective altogether. So to understand, I think NFTs, the way I would look at is the history of human society, right? If you look at a lot of arts being lost in the entire human history. But just imagine if you would have just like had a blockchain or a protocol or an NFT. I think a lot of that would have been potentially preserved. Second thing is, when we value any asset, let it be art or any other asset, you would really don't know the potential supply side of it, right? Like we have been talking about, tokenization could potentially impact worth trillions of dollars in the coming next decade. But the real question is, how much is the supply, right? But with NFTs, wherever I'm investing potentially, the good side is I really know the supply side, and that supply is locked. That cannot be minted anymore. The third and the most interesting thing is governance. So if you bring like any real world assets on the blockchain, right, you could potentially use smart contracts to define how would this asset should work. Think of this at governance level, right? You have some XYZ laws, and tomorrow, like for example, our Digital Bill Act, which is coming up, right? The way government is, manipulating our privacy and digital rights, I think it's unconstitutional and unethical. Look at the telecom bill, right, where the next users would be forced to pay for using essential services, and that would be determined by the telecom companies. But imagine if all these things would have been on a blockchain, and as a citizens, we could potentially have the right and the voice to vote upon that. I think the world and everything would have been magical. So this technology, the way it has been used, I think most of the people and entrepreneurs as well in the space have used it for like wrong purposes. But given if it's used in a right purpose, I think this could solve a lot of real world problems beyond our imagination. And the value mechanics would be like quite straightforward, because the history and the provenance of every asset would be truthful. So as an investor, if you're buying anything, we would just have the complete transparency over the data. So I think that is something which never existed before, in the human investment history or like in the history of mankind. So I think it's like phenomenal, but if it's put to a right use case. And also the adoption, while like there are a lot of bad players in the space, I mean, including some of the actors who are worried about the loss of power, they would always be, quite resistant to, adopt it. But I think it can be like a world changer in a lot of aspects.
Thanks for that, Prashant. So what I hear is, one is, of course, the supply-demand, argument. The other is, I think you mentioned about the ability to program it, right? Or to be able to codify what you can do with that asset, possibly who would get the sales proceeds, a partial of it, and things like that is the other one. And I think finally the last one was the scarcity. I mean, you can uniquely prove that only so many of these exist, and therefore everything gets value through scarcity, right? There are only so many of these. So I think, I suppose, fundamentally, those same concepts apply here. I think the programmability piece is a little different here, which I think today in your real world assets, maybe it's tougher to do other than written contracts that are there. So I think let's move on to, further additional use cases. I think this part about, art and this part about, having, collectibles is one use case. But what are the other real world use cases? And maybe let me break that up. Let's look at the retail, the B2C or the, retail segment, and then maybe I can rope in someone else for the B2B segment, right? The business use cases for NFTs. Over to you.
So, one great thing about blockchain in general is that there are so many different angles to look at it, right? And we see representation of all sort of people into blockchain. They are traders, they are collectors, and all these things. So I'll just zoom out and redefine the way in which I understand what NFTs are. So one great thing that NFT has done is to define a global standard of how the ownership over the internet is maintained. So think of NFTs more like a PPT or a JPEG. So these were the extensions which in turn becomes a kind of a global communication language. If let's say I have to send a picture to anyone living in US or UK or any part of the globe, then a JPEG is something that each and every device understands. So NFTs has also brought two standards through which objects that live on internet can have a sense of, can define ownership to that particular object. Now, when I talk about this particular object, this object could be anything. Like one of the first use cases of NFTs were on images and other things. So that is why, when NFTs are being talked about, the first thing that pops up in all of us mind is a kind of a monkey who is getting sold for $1 million or so. But there is much more to it. If it is just an object on internet, it could be a song. It could be a line of code. It could be a kind of just a message that I want to store it on internet. And so that is the kind of extensibility in which NFTs can be used. And that is why when we talk about the use cases that NFTs have to offer, we are just scratching the surface at the moment. So now coming to some of the practical use cases that we are seeing right now in the market, apart from the trading of the art pieces, which in turn is currently just representing 5% of the total NFT market. The other 95% is mostly into some sort of collectibles, which in turn represents the idea and notion of a particular community. Right? To just give a practical example of this, we are seeing a couple of communities who want to do fundraise for a sort of social cause, or maybe they want to do a fundraise for building up a product that belongs to a community. Now, historically, we have seen that fundraising and the utilization of funds has been something which has been notorious around that how the funds are being allocated, who is using it, and who is responsible for what, right? So what NFTs and blockchain as a technology in tandem provides a kind of a very clear-cut view of where the funds are being flown. So essentially, it has built a kind of a trust in the community, and maybe further going down the line, the trust factor of a society where when the value in the form of money is flowing, it is much more clearer, right? So if let's say I want to give money to a charity, and if let's say the charity is giving me a kind of a ledger where each and every dollar or rupee is getting invested, then I as an investor has much more confidence going for it. So that is one of the use cases. Second thing.
Recording in progress.
Awesome. So second thing that we are seeing is that now, like across all of these entertainment channels where the artists are making communities, or maybe the brands are also making communities, it turns out that the cost of a particular follower to come in and hit a particular heart button to become a follower of that particular brand on an artist is very cheap. So because of that, just to recognize that who the true followers are. By true followers, the definition that I have in my mind are the followers that pays money to the artist or pays money to that particular brand. So out of, let's say, someone having 150,000 YouTube subscribers, who are the top 10,000 people who in turn are willing to pay money for maybe subscribing to your service, right? Because fundamentally, across Web 2, Web 3 businesses, we have seen that around top 20% of the customers in turn generate 80% of the revenue, which in turn starts going into the boundaries of loyalty programs where a lot of startups are working on. So essentially, NFT is more like a loyalty program on steroids, because loyalty programs initially by design were just being constrained by the borders in which a particular brand want to put on into it. But when it comes to Web3 domain, it becomes interoperable. So what interoperable means, I'll just take a very quick example. I think some months down the line, there was this particular announcement by Starbucks that, hey, that we are going to launch NFTs. Now, if you look at Starbucks, they already have a really good app, right, where you can, buy some cards, which in turn give discount on the purchases that you are making. They also give you some badges based on that, hey, you are a loyal customer and other things. But why Starbucks as a global brand took this particular call out that, hey, we want to launch NFTs? The reason being that as soon as the NFT is launched and NFT is being transferred to one of the Starbucks customer, that becomes a kind of a identity and a ownership thing that is being controlled by the user. So let's say in Indranagar, there is a new coffee shop that is coming up, and they put out a board outside saying that, hey, anyone who is holding a Starbucks NFT, they now have a 30% off. So just Starbucks dictating that where their customers should go in a way of designing a loyalty program in a centralized way. It is up to the customer who say that, hey, I like the coffee of Starbucks, but this new particular coffee shop that is coming in, I just want to try it, that one as well. So that is the power of interoperability, and that is just being possible because NFTs live on blockchain, and blockchain in turn provides the trust layer on internet through assigning an ownership to these digital assets.
Thanks, Prakash. And Naman, do you want to come in with more use cases and maybe the business side of it?
Yeah, definitely. I think the biggest problem which we're seeing right now is everything around NFTs has been seeing towards arts and collectibles, right? First thing which came out and stuck to your mind was also the Beeple sale, the monkey sale for 69 million. But you have to understand, as Prakhar mentioned the data, right? Majority of the use cases are actually around the utilities and the use cases around the real world enterprises as well. Even at Asset Mental as well, we did one of the first interchain transfer wherein oceanic bill of lading was tokenized and been traded across the 7 high seas commodities trading across APAC as well. Essentially, some of the use cases which I believe are already in the market but are going to see a huge adoptions are going to be towards the digital asset ownership of these assets around, certifications, identities playing one of the important role as well. Music and, the loyalty programs around it and creating that sub-community and the subculture have always seen a huge traction as well. Apart from this, I think real estate has seen a massive adoption as well. I think Prashant's use case was something which I followed as well way back. Christie's, one of the largest auction house who curated the Beeple sale, they are now getting into the real estate front with adoption as well towards selling off their real estate assets using NFTs. Apart from that, definitely few of the domains which are essentially going to be seeing a lot of adoptions are going to be all these incentive mechanisms which enterprises are going to look at. And I believe 2023 is just going to be to evaluate those, look at larger volume transactional based models where you see the real impact in terms of the volumes and the utilities and less in the dollar value or the price speculative value of it. That's where the real use cases are going to kick in.
Thanks, Naman. So I think we see that, across industries, across segments, I think some of the conversations that, our firm has been having with a lot of corporates, it includes, warranty terms codified into a, NFC, or let's say, of course, your degree certificates and any of the certificates or ownership or whatever is one area. I think an interesting one was also, I think the insurance. So I think your ability of what you will get, and that's codified within the NFT in terms of your benefits and all. So these are some, interesting use cases across financial services, across any digital credentials that confirm what you have and ownership, and also what is that benefit or what you can get out of it and what benefits you can get of it are the use cases. I think let's move on to the technology side of it, and maybe Toshendra, I'll bring you in on this. Is of course we all know that the base fundamental underlying is of course blockchain DLT. Would want to understand from you in terms of how do you think what is the future in terms of this technology on from an NFC standpoint, and more so could you touch upon the cross chain. So like if I have say an avatar NFT in one world, when will I be able to take it to another? Let's say I buy a weapon in some game and it's a similar game elsewhere. Can I take it across, right? I don't know. So, I mean, can you help me understand that how this cross-chain, is it possible today? If not, do you believe it's something going to be possible? And anything else on the technology side of NFT, and how do you think that's going to evolve going forward? Sorry, you're on mute again.
So I was saying that, by default, NFT belongs to a smart contract, right? And smart contracts are deployed on a blockchain, which is like a peer-to-peer network. So when the smart contract deployed on one blockchain, it actually remains on the one blockchain ledger. So if I'm deploying it on Ethereum and I'm trying to access that address on Polygon blockchain, which is a completely separate network or completely separate independent network, then we'll not be able to get that value out of it. So whatever information I'm trying to fetch from the Polygon, I'll not be able to get it because that Ethereum that smart contract has been deployed in the Ethereum blockchain. So interconnectivity of the NFTs are possible until and unless, are not possible until and unless there is an intermediary who says that, okay, if one asset is being moved or removed from this particular network, I will pop up that particular asset, a copy of that asset in another network. So then there will become an intermediary person who will be responsible for this. Creating it through a trustless bridge is very challenging because there are so many type of variety and there are different type of standards as well nowadays. Even you can customize your standards of your own NFT. So it's quite difficult. So that's the one thing. But considering if you are keeping Polygon NFTs in one network in Polygon only, and you are a game company, then there is another game company which is completely independent, one is in Bangalore, another is in Delhi, and they want to have a common ground where they can say, if you buy one weapon on that game, you can actually also use that weapon in this game. Then it is completely possible and very easily doable. It's just that, they have to share the address, and if there are certain standards, if they have created a custom standard, then they have to share it. So in that case, the interoperability of the game, of the assets within the game is very much doable. So technically, whoever is using Polygon chain can actually use that NFT without even seeking a permission, because NFT is just the information which is open in public domain. I can actually go and fetch that information, and I can, start supporting that, standard if I want. Obviously, it is the responsibility of the game owner to support that. The creator of the NFT cannot force that particular game owner that you have to use it. It's up to them. So if everybody, or let's say if all the gaming company in India agree to support a central or some common NFTs, then it will become a common universe. And I think that's the dream. That's where the industry wants to go, because one common standard and everybody supporting everyone's NFT will be actually empowering the entire community to all together.
Thanks for that, Toshendra. So interesting. So I think you're saying on the same layer one technology, if different companies have different, it's possible. Of course, commercial arrangements have to be made so that it's possibly interoperable. But I think the first point also you made, while it's a good problem to solve between different technologies, if there is a trusted way in which it could be transmitted, and maybe someone tomorrow could do that.
Trustless, actually.
Trustless, yeah. Trustless way to transition it between different technologies. I think that's a good problem to solve for, and maybe in the future that also is something that will be possible.
Some different opinion here as
Sure,
well. At the end, whatever goes on chain right now, right, it's more of a data, right? The metadata either been stored on chain or off chain. The underlying value or the utilities associated with it, I believe that it should not be restricted to a particular chain or a particular ecosystem, right? Think it from the retail perspective or someone from the application standpoint. What they're going to focus on is, the features which I'm able to enable or unlock for my users, right? If there is something possible for you at a native level to integrate with your existing applications, you have a mechanism in some sort, to kind of have more cross-chain utilities kicking in as well. That's where Cosmos have been kind of been tremendously successful to leverage something called IBC, inter-blockchain communication, where you have the possibility to have not just the liquidity of the tokens flowing across, but the core value, the core assets metadata, and the utilities around it going across the chains as well. You don't need a bridge for that, but essentially for the marketplaces, right? You might have seen all the major tier 1 marketplaces right now in the industry are across Ethereum, Polygon, and Uniswap a day before yesterday went out with an NFT trading platform as well. So it's more about the underlying ownership, the metadata where it's stored, and the utilities associated with can actually go multi-chain. Although the data is on a particular chain, but the underlying values and utilities can definitely be across the chains and leverage the features from each protocols.
Sure, thanks for that, Naman. So I think even interchange is not going to be a deal breaker, and that's going to be solved for, or it's already being solved for, but it'll become regular or more adopted soon. I think one more area that we've not touched upon is the regulations, and I think regulators have had varied views. Some countries are a little more matured and have done more regulations. Some have stayed away or not done enough. And the question I have is, what could the community do more of, or do differently, such that the right regulations do come in to support it? And Prashant, if you want to go first, and then I don't know if Prakar, you want to go next.
Yeah, I think my personal opinion is that, like, looking at the industrial revolution in the 1900s to internet revolution in 1990s, I think industry has grown bigger and bigger when it's been a lot of times like self-regulated. I mean, there's been a lot of scams and so many things which has actually happened, but it gives a lot of space to innovators and good entrepreneurs to kind of innovate in the space. That's one. The second thing is that with a lot of bad things happening in the space, it also clears a lot of mess. Because when we talk about digital assets and crypto, we are talking about the regulations at a very global level. I mean, just like one country, I do not feel can particularly solve this problem of regulations. Like, for example, with FTX, right? Though FTX was regulated in Bahamas, and then they also had a separate US entity, but the user who suffered was global. I mean, if you look at the traditional markets, if that was the same case with Enron or any other company, right? The investor would have been, or the community would have been limited. But with digital assets, we are actually looking at globalization of the entire world into one digital community. So the most important thing is that, like, we need to think of global regulations. The third and the most important thing, I think, the society or the governance is kind of moving towards more and more centralization. I think some people at the top are really, really hungry for power, and then we are seeing a lot of things which shouldn't have actually happened in the whole world. So people and the community, I also feel, should voice their opinion on what they actually really need. I mean, we should, like, I'm pretty sure that, like, very few of us would have just gone out to Twitter or any other platform and voiced our opinion on the new bills which are actually coming up. And if the people don't voice up their opinion, I think we could potentially end up in a regulation which is actually not in the favor of innovation. So overall, there has to be like a global regulatory support for this entire industry. And also, we should, I mean, as a community, we should be like really, really active in educating people and also voicing our opinion as and when we get the opportunity, and also encourage our peers to do that. And I think that is the only way forward.
Thanks Prashant for that. And I think we're almost running out of time. I know, even though there were a lot more other areas that we could discuss. But just as a closing question, and maybe I'll start with Tushendra, you online. If you had one wish, or say, you had a magic wand that you could change something today that would do better for the NFT community going forward, what would be that one change that you would like to see come about? Just one change, and then we'll do it for everyone.
I think the awareness, I think it's very much lacking. The education, obviously would be understanding it first, whether it can be used or not, then this would have been a very different game. They just get their order from the board that you have to do something NFT, school, everybody's talking about, and then they just try to, run after it. So I think the awareness is something that would help this whole NFT ecosystem very well, and will change our life altogether, and will accelerate the whole growth that we are expecting.
Thanks. So awareness and knowledge. Now, what do you?
Yeah, so I think just doubling down on what Toshendra pointed out, this awareness is not something which is for those people who don't know about blockchain, but those people who are also inside the industry, they should also recognize that Web3 is not a good solution for each and every use case which is out there, right? Because this technology is fairly young, like the scalable blockchains that are still not out, right? So anyone who is starting a company in this particular space or who is in turn advising the clients, they should very clear-cut point out that the kind of utility that the business or the customer should get after moving their tech stack to Web3, that should be something which should be at least 1000x more than what they are experiencing in Web2. So maybe those people who are building in DeFi space or maybe launching new cryptocurrencies and other things, they also have this responsibility to be very true to themselves and also the ecosystem that they are building about the utility that that they're putting out there. So yeah, more awareness on both the side. And one last thing is that cryptocurrencies and NFTs are very two different things. So there should be a separate set of regulations governing the two. Because putting NFTs into the same bucket as cryptocurrency will do much more harm to the whole ecosystem as opposed to, like saving customers and their interest around it.
Sure. So you used two. One, you leveraged him, but you said it, yes. I think people who are within the community who know should, use it wisely and use it in the right places is what you're saying. Yeah. Correct. Okay. Over to you, Prashant.
I think a protocol which is powered by karma and it could solve a lot of problems. Like I'm sure everyone as a human, we feel that our karma is not being fairly rewarded. So a protocol which could actually solve all the world problems and bridge a lot of equality across with something which I would love to do.
Global protocol.
Global protocol.
Tough one to achieve, but yes, good wish. Last one.
Yeah, for me, I would like to just time travel back to 2014, change that Kevin McAfee sale, the first one of the NFT, and remove all those speculations, hype, and just bring in some more use cases to those sales. Then move to 2017 with the people sale and just again remove all the speculation around it and just bring in some real world use cases kicking in that, and essentially definitely more focus towards utility and bring in all the enterprises together for the data provenance of these assets. Keep all the token aspect or the crypto aspect of these essential digital assets away from NFTs as much as you can, and globalize the standard and essentially improve the entire ecosystem around NFTs.
Okay. So delete all the hype that was created in real world use cases is what you want to see more talked about today, then reference to that. Okay, great one. I think we're at the end of the session, and thank you very much, fellow panelists, and thank you, Financial Express, for this session.
Thank you so much to our panelists. That was indeed an extremely interactive, interesting session. Thanks a lot. Without any further ado, we now move on to our next panel discussion, titled Blockchain in Media. In this session, panelists will talk about the role of blockchain technology that can be used to resolve many issues, including ad fraud in media space. For this session, we have Senthil Nayagam, CEO, Oracle Movies, Animesh Singh, co-founder and CEO, Silskill, Rahul Mishra, head 3.0 Initiatives, Shimaru, and Maru Gupta, blockchain advisor. This session will be moderated by Rahul Jagtiani, entrepreneur, blockchain marketing advisor, and media professional. Please join me in welcoming our esteemed panelists up on the stage. request Rahul to please take it over from here.
Hello, yeah. Thanks, guys. Thank you so much for the kind introduction, and it's great to be here. Without wasting too much time, since you guys have already introduced us, I want to start off with this really interesting session on blockchain and media. And I want to start off with Meru, who's been in this space for a while. And Meru, so NFTs have sort of become a much abused term as well for a lot of people, not within the industry, but at least outside the industry, especially during the last bull market. A lot of hype around JPEGs, $3 million JPEGs, but, and now we're sort of in a bear market, not sort of, we are in a bear market. So you want to tell us, to begin with, what are some of the use cases of NFTs in the media space? Just give us like a high-level overview.
Sure, thanks for having me here. Hello, everybody. I think as far as the media industry is concerned, there's a bunch of things, better now?
Yeah.
Okay. We can cover a few things. We can cover a little bit of music, film, and maybe events. But from my experience, when I was with Sony Music and heading their business here in India, what we realized was that a lot of value is locked in at a label/platform level, right? Spotify or the record label itself. And therefore, the narrative that's been on in the music industry for example, the last decade is that a lot of value is not given back to the artists. So I feel like how Spotify disrupted the music industry from Pirate Bay, if you guys have seen the Netflix documentary also, I feel like Web3 has got a strong chance to disrupt streaming, because streaming is also currently a broken model as far as artists and revenue in the music industry goes. And how that can happen is essentially, I feel, the value that's locked in with the label as of today is because music is an asset class. There's a lot of funds also in music that have started where people can simply, like shares, buy funds, shares of a fund, and then be able to monetize that, music from streaming revenue. So what the blockchain technology can essentially here do is bring that, the middleman and what the value that middleman is sort of taking, which is in this case majority revenue, 80%, and bring that on chain and allow the intermediaries to, have less control on the content and the monetization of it, and therefore more power and revenue back to the artists, right? So in short, for music like that, that's one use case. With film, there's right now with film rights, for example, in the media industry, there's a lot of trust, transparency, issues like, a lot of time that it takes to, for example, for somebody to license rights for a film, So if you're able to bring rights in a transparent, open way on the chain, then that's another, and I'm sure Senthil will speak more about that, And let's take one more use case, events, for example, like why does Book My Show need to be on the blockchain, right? It's because, just imagine there is a Taylor Swift concert happening in India and, there's 5,000 tickets available. And first come, first serve has happened and people have bought the tickets. And now in the black market, you're having to pay 10x the price or whatever anybody is asking, and you don't even know if the tickets are real or counterfeit half the times, right? So what ticketing on the blockchain solves is it balances supply and demand and pricing, market pricing in an automated way, and also solves for counterfeit tickets, for example, and sort of those use cases. So there's plenty of use cases in.
There's also community, right? Since you mentioned Book My Show, I mean, I'm going back to Willy Wonka and the Chocolate Factory and the concept of golden tickets. Book My Show could probably just release, at least mint 10 golden tickets, and that gives you access to a lot of activities that can happen during the concert or even, behind the scenes. So building community is probably another interesting use case in the media. And yes, coming to community and building in the metaverse and building, new use cases, I want to come to Rahul. You're with Shimaru, and when I think of Shimaru, I associate that with the 80s, the movies in the 80s and the 90s that are some of the songs that I used to dance to and still do today. But let's see some of that. Yeah, we'll get some moves out soon. But I want to talk to you about, what did you have in mind when you are launching Shimaru in the Metaverse? Because the target audience for a lot of those movies are, the 80s movies, they're probably a bit older and are not at the cutting edge of technology. So your core audience is probably Gen Z. So what did you guys have in mind when you decided to, make your play in the Metaverse? And you guys are one of the early movers in this space.
So, hi, good afternoon, everybody. Very happy to be here. Thanks, Rahul, for the introduction towards what Shimaru has been doing in the Metaverse. Just a quick context setting. Shimaru completes 60 years this year in October. So we've seen Web 0, 1, 1.5, 2, 2.5, and now the journey towards Web 3 has started. I've been in the media space for a very long time, and the term I used to use earlier was audience, which was television broadcast. You talk to a group of people. Then came the term consumers, because OTT platforms are subscribed by individuals, so you have consumers. Now the term community is coming into play. So it's been a journey. As a company, we've actually been seeing multiple trends happening over the years, and Web3 is a sure shot opportunity for an entertainment brand. As a matter of fact, we also feel that entertainment will popularize Web3. The opportunities of NFTs and Metaverse would be led by entertainment and gaming for mass adoption. And within that, what is our role we're going to play in that? So yes, while Shimaru Entertainment has a repository of close to 4,000 Bollywood films, 10,000 hours of Gujarati, Marathi, devotion, we are a large content repository. How do we make ourselves relevant to young audiences? Rahul, if you ask me, do I have an answer for that? I don't have an answer for that. But we will have to adapt. We will have to change. We will have to make ourselves present on platforms where the Gen Z and the younger audiences are moving towards, for which if we have to create newer content which appeals to this audience, we're going to do that. If we'll have to create Metaverse concerts, we'll do that. We already run a theater on Decentralized where we try and sort of showcase a Metaverse experience to people who've never actually been there. So in a way, popularizing Decentralized as well is what we're trying to do. So it's a very interesting phase as a media company sitting in India. Actually, sitting in Bombay is very different from sitting in Bangalore. I was talking earlier to the fellow panelist. Mumbai doesn't talk as much blockchain and Web3. Suddenly you're in Bangalore and it's all about technology. And so as a company, we're also looking at solutions as what does blockchain can help us do process better. Our business enterprise processes, can we start adopting those? And this, in a way, is all linked to business, right? We are running a company. We are here to make, shareholder value. So we're looking at all opportunities within the space to make that impact.
Right, and if I may say so, one of the not so great aspects of the 80s from the Web 0 or Web 1.0 days was the aspect of piracy and equitable revenue share for the artists or for the creators or producers. And that's one of the problems, Central, you guys are trying to solve. So you want to talk a little bit about your marketplace and how you guys are solving for these issues?
Okay, so we are building two brands. One brand is called Oracle Movies. Currently, who owns which movie, which right, that data is not publicly available anywhere. If you want to source a content, okay, so a lot of people have OD platforms. We spend more time on searching the content what I need to watch next. 30 minutes of searching and you search one content, then you skip, that's how it's open. Because a lot of content is not there on OD platforms. So there is subscription OD, transaction, there are multiple ad sponsored, but all the content is not available. This is one challenge, okay. And when the content is not available or not available in India, earlier movies used to release in US, not release in India. We'll have 3 months, 6 months gap will be there. So we had a lot of reasons why piracy was there. MP3 was an exception for a different reason, but piracy started for a different reason. I want to even if I'm willing to pay for content, can I get this content? It's not available. Or if it's available only on this platform, I have to have another subscription. Okay, how many subscription OTT? I have about 5 or 6 OTT subscription. How many do you want? We actually hated buying channels per hour, or we subscribe multiple channels, and we watch very few channels, right? We were complaining about it. So something similar happened. So that's how piracy started, okay. Can piracy be reduced, or can it be tracked? So let's not think of only consumer level piracy. Piracy happens at also operator level. Okay, so you license the content for 3 years, and you're playing for 5 years, 7 years, or you forgot your license is expired, or producer stopped claiming, right? There are a lot of types of piracy available. So we believe, first part, who is the rightful owner of the content? Producer, okay. Another part we believe is, see, we have been employees, we have also, people have different formats, right? Gig workers are there, but creators are a separate part. See, most artists, maybe a generation back, our parents said, don't become an artist. Artists were kind of frowned upon in families. You become successful, great, okay. If you don't become successful, you will kind of, see, most artists died paupers, okay, poor people and penniless, that's the whole thing, right? So they have regrets. So if you want to have a sustainable creator economy, they need to have some income on a regular basis for a longer time, and even the next generation should always cherish it. Hey, my father was a painter, but I am kind of struggling. That is see, very few artists whom we know, right? Okay, we also talk about nepotism in Mumbai and other cities, but very few people actually did it. A lot of generation is moved away from that part. Okay, so this happens a lot. So we believe if you create a creation, think of it like a movie. A movie's copyright life is 60 years. The movie should generate some revenue for everybody associated with, at least the creative part of it. Or people who have invested in some way, they should get some revenue for next 60 years. If they make 5-7 movies in their lifetime, that should sustain for be their, let's say, maybe a pension system kind of thing. Because creators need to be paid like that, not as a gig. Okay, you worked for 2 hours, 3 hours, you paid now. And not having any royalty or benefits in future, that created a whole system where heroes have raised, because they know I can charge money only upfront, right? Producer take all the loss, all the profits, so heroes have raised the raise. But the model has changed, a lot of co-product system is coming in. We believe this kind of system has to come across all the platforms, and how movies are made, that has to come in as well.
Yeah, and that's, again, coming to equitable revenue distribution, that's something that you guys are solving as well with your platform, Zillscale. But, I want to say that Web3 has a learning curve. A lot of times you have to download a MetaMask wallet, you have to buy some ETH, you have to note down a seed phrase before buying some ETH. And obviously there's some limitations in terms of mass adoption there. So how are you guys tackling that, right? That's one of the challenges I'm sure you guys face, unless you guys have a wallet custody solution with your own platform.
Yeah, so thanks, Rahul. So if you see, most good things are not easy. And crypto definitely is not, okay? But can it be simplified? Yes. If you see, there are limitations. If you talk about limitations, there are, in the crypto world, we see limitations. Number one, on-ramping. On-ramping is not easy. There are issues, banks blocking transactions, KYC, AML, anti-money laundering, all this is very difficult. Cost of transaction is very high, okay? It is, chains like Ethereum can be very gas-heavy chains, and it is very cost expensive if you have to transfer anything, if you have to buy anything, okay? Learning curve, even using MetaMask with any centralized exchange has a learning curve of its own, You have to learn a lot of things before you can get used to it. And to make sure that you're not losing money, you have to be aware of smart contracts, you have to be aware of liquidity pools.
Gas fees.
Gas fees, you have to be aware of so many different things, okay? So there are limitations. But can it be simplified? Yes. What are the things? There are certain things which actually, as we educate, as we move forward, there are certain things which are going to probably evolve and going to make it a bit more, user-friendly. If I talk about it, number one, wallets. Wallets can be a bit more user-friendly, okay? And in a way that it is more intuitive for the user to be able to interpret the transactions. Today, it is very difficult, okay? So for example, if you're going to interact with a fake or a faulty transaction, it gives you a warning or blocks the transaction. The cost of transaction can be lower, Okay, there are already options for that. Okay, and on top of it, see if you have to move anything, move funds, it becomes very difficult. So as you move towards interoperability across chains, okay, it will become much more easier to move funds across L1s, L2s, and rollups. So these are some of the things which are going to make it a bit more simpler, make life simple for the people.
And interoperability is a whole different rabbit hole one can go down into, and we can be talking about that forever. But I want to come back to Meru. Meru, you mentioned music NFTs earlier, a few minutes earlier. And one of the challenges is it a sustainable business model, right? Because today I can upload my song on Spotify, maybe get a few million views, and maybe earn $2,000, $3,000, $4,000. Is there a better business model where I sell music NFTs to maybe 50 people for $20 or $30 each and earn the same revenue? And is that a sustainable model? Or should one follow a hybrid business model in terms of working with the Spotifys of the world and perhaps keeping some IP aside to sell as music NFTs and tinkering with that space?
Yeah, so music is slightly different than, I think, all the other media and entertainment IPs, in the sense that if you were to understand how it works, when a movie is released, it's exclusive to theaters, then it's exclusive to OTT. And so, it drives exclusivity and therefore audiences. When a song is released, it's instantly available on all the music platforms, including YouTube, which is free. And so therefore the value loss that happens for that is massive, and therefore the monetization becomes harder. And as we just spoke, the streaming model is broken because, for example, in India you get 10 paisa for one stream on Spotify, and that also only the major labels are able to negotiate that rate. And out of that, 8 paisa goes or 7 paisa goes to the label, and the artist essentially gets 2 paisa per stream. So, at the end, nobody's making money. So when we're talking about NFTs, theoretically, the promise is that it allows for consumer participation and therefore democratization of art. And there are two different ways you can look at it. One is simple patronage, saying this, I used to collect posters and CDs of my favorite artists back in the day, and now I collect NFTs because I want to support it, and I get, for example, I get exclusive access to something, or a community access or participation to events and things like that. And the second is the asset class, which we spoke about. So if I own an NFT, I'm basically investing in the song and becoming a part owner of the IP itself. Instead of the label, the artist is actually saying, I'm releasing 100 NFTs, which means 100 parts to my one song for 100 rupees each. And if you buy it, you own 1/100th of the IP, and therefore the subsequent revenue that you can make out of it, right? And so therefore, that's another way of consumer participation. Now, you have a follow-up question?
No, you're right. The digital collectible, the collectible aspect of music has been lost over the last few years, right? Because when we were younger, we used to collect album covers, and that had a sentimental value. And in this, world of streaming music, where you can just add something to your playlist, you don't really see that anymore, right? So that's something that we're hoping comes back to, the music space, where I'm able to collect maybe the latest album cover of my favorite artist. And is that something Shimaru's thinking about as well in terms of collectibles? What are your thoughts in terms of, minting collectibles from your library of, 4,000 odd Bollywood movies and regional movies as well that you mentioned? And is there a secondary marketplace for collectibles like that?
Yeah, so I think when I was listening to Myro, I'll come back to your question. And one thing we've been dabbling with as an entertainment company is, what does video entertainment mean in the metaverse? Is it volumetric? Is it, what does 3D entertainment mean? And I was wondering, what will music be in metaverse? While Myro was talking, this is a thought. We should try and solve that issue as well. Okay, great. I need to learn that then. So that's interesting. So, coming back to Rahul, so yeah, actually, right, we are working on an NFT project, which is essentially trying to create a model of IP-backed NFTs. While there is a market for, AI-generated NFT, music NFT, we are trying to solve one market demand, which is bringing IPs access to consumers, and IPs can be broken down into multiple parts. For a film and entertainment company, it could range from a dialogue to a character to the entire film maybe as an NFT project. So the main problem statement which we haven't fully yet solved is what is the utility of that? Right. If you buy that piece of NFT, which is a film, as a user, it's not just fandom, right? You got to have more than that. You got to make money out of that. And as the DRM, the digital rights management solutions evolve, I think the use case will come into play. But till then, Shimaru as an NFT company will create IP-backed NFT offerings till the larger issue of monetization for users gets resolved.
You could create a serious fan club out of the digital collectibles, right? So there could be, maybe it's not tradable on a secondary marketplace today. Maybe it is at some point in the future. But I'm just thinking out aloud, maybe if I own an NFT of a character from one of your older movies, maybe as a fan of Shimaru, I can come back, and maybe there's a role for me in your next movie as a small role.
Those are the community projects we also have as part of a roadmap.
Or a meet and greet with the star or whatever, something of those along those lines.
Correct, but it's just that it's your NFT buyer is a global buyer. Somebody could be buying it in Chile, and how do you create that meet and greet opportunity? Is web meeting enough? Those are the questions we're still dabbling with. But you're right. I think we have to give a certain access to the community who's buying the NFT, and that's part of a roadmap.
Right. And there's another really interesting use case or business model in terms of royalties, right? And I want to pick your brains as well as Meru's brains on this. One aspect could be where you, as an artist, you sell your song to a record label who then streams it, and there's a certain royalty payout to the owner who then sells the NFTs to the public, and then there is a royalty payout to the public in the form of, how many times a song played on, let's say, a Spotify or any of these other labels, right? That's one of the other business models. I know it's a little bit more centralized, but that's one of the other business models that can be explored.
I think it should be a hybrid model because Web 2 is already solving for reach. I mean, if you want your consumers to see a video, you're going to put it on YouTube, not on LivePeer or something, because there's 2 billion people already using that platform. And so similarly for music, discovery is still going to happen on Spotify, and the algorithm that they've built is tremendous technology already that exists. So that piece of monetization is negligible, but that is how reach is going to get solved for. And the other hybrid is, like you rightly pointed out, I think NFTs can be used as collectibles, and NFTs can be used as IP ownership, and NFTs can also be used for artists to raise money for their projects, And so there are all these different use cases through which, you can actually do a hybrid model of both Web 2 and Web 3.
Senthil, do you have a few words on that?
Okay, so I have a different take, okay. For certain industries, the core concept, right, do you need a book publisher anymore? If you're a first-time publisher, or first-time book writer, you will not get any advance, big amount anyways. Even if they're printing it, they will print only 500 copies, and which they will charge you in some way. And you are going to gift it to people. If it succeeds, the 500 sells, you will do a 5,000 run or 2,000 run. And it will sell you a bestseller list. And if you do interviews, book signing. And that is a whole cycle how books were being sold for many years. And currently shares, okay. So if you're a first-time writer, self-publishing is straightforward. You do it, anyway you're selling it, you put it on Amazon and you can sell it on Kindle, you can self-publish. So similar model is already coming into music as well. Earlier the problem, why do you need a record label? Record labels had relationship with a lot of clubs. In US, most artists will make money on singing on the clubs If you've seen all the 70s, 80s movies, you'll see in those. Okay. So they made money on that, or selling merchandise, or selling their own bootleg series, which they will make of their own, or re-recording. That is where they made money. Record labels said, okay, we'll give you exposure. We'll do your tours for you. That is how they made money, and they took 80% of it. That's how the model was. Okay. Now what happened, a lot of these small artists who were there and who succeeded well, they signed up with not big labels, they signed up with very tiny labels. But what these big labels guys did was, they acquired these small labels, because this song is it. Taylor Swift didn't sign with big ones, okay? They started. So what happened was, there are a lot of legal loopholes, and what they've done is, a lot of these singers have, same song is available in 2 different versions. In this cassette, this CD, that CD. So artists start promoting their own songs now, because they have a Twitter, they have an Instagram, they have a YouTube. They say, hey, my song is on this one, listen, add this song. And suddenly record labels feeling, okay, hey, I bought the company for this one song and a better version. See, when you were a teenager, when you sung the first song, your voice was different. Now you have a mellowed voice, you have better audio, and that is how the system is coming. We believe the system will come for movies as well. The idea is, it's a participatory one, everybody can do. Okay, see, earlier the cost of production was very high. You couldn't do a bootleg content at home at all. Now what has happened is, for movie industry, it's movie 3.0 is what we are talking about. Movie 1 was film-based one. Okay, you need to have a camera, film camera, you need to have a lot of lighting like this for it to look good. Then you have a stage, then you have production, then theater has to film copies, film it, and the system was managed in a different way, and they need a different system for that. And most money was made in theatricals from 1910, 1922, nearly 2000 was the same model. And then came the digital part. Now you are doing everything digital. Your camera is digital. Your phone, you can actually record a movie with your phone itself. Maybe the quality will look a bit odd, but you can correct it at some point, okay. Similarly, visual effects is done on computers. Your editing is done on computers. DI happening on computers. Music recording, everything is happening on computer. Everything is possible, and if you have a laptop or a Mac or a Windows, you have open source software doing it. 3D you want to do it, Blender is available. If you want to do something AI-based content generation, Stable Diffusion available, DALL-E is available. There are multiple model systems available for generating content for you, okay. So this is changing how content is being made, okay. So at some point, it should not be only person who's putting money, it should be other people also should get the benefit out of it. And that's what we're saying, okay. So they should get perpetually, or at least a 60 years lifetime, they should get some money over a period of time. Not everybody pursues, like, see, what is happening is, if this is your career, okay, you have a potential, and you exceed your timeline, and then your content quality goes down, right? So you should come in when you are at peak, come in here, part of it, do it, and do other things as well, right? You can do stage performance. There are other mechanisms for doing it. And he was mentioning about music part, okay. Why can't we bring back collectible CDs, physical Blu-rays? Music companies don't want it. Or it's possible to bring back those collectibles. I love to have, I have done recording from All India Radio, right? FM was playing in 90s. I have recorded cassettes, right? Bootleg kind of thing, okay, we'll record from friends' cassette, we'll record one song. We've done those kind of things. We should, okay, I'm not saying legalize, illegalize, but I'm saying how can fans connect with the creators? It's possible now because of social media, but again, social media limits reach in other ways. So there are many problems to be solved. Let's see how system plays around.
So yeah, you're talking a lot about the long tail, right? That self-publishing and what these larger big tech players provide is distribution and reach. And you know, one of the premises of Web3 is decentralization. But how decentralized is Web3? Because the natural arc of a profitable tech business is centralization. So in a scenario like that, are we, you know, I know this is a bit of a philosophical question, but are we under the guise of Web3 just moving, you know, from one centralized entity to another form of centralized entities? Or are we going to truly witness decentralization?
See, Web3 is a trustless and transparent ecosystem, okay? Everything is on-chain, and everything is trackable. You can track it, okay? Say we are in a Web3 world. You see an artist, you can exactly tell what is the revenue generation being done by the work of an artist. And not just that, you can, you know, there's a smart contract which will send the artist the exact pre-decided share of that revenue immediately. It will go instantly, without any interference of any human or any centralized body interference. and it can continue to happen forever. And we're seeing this happen with the NFTs, okay? Secondary sales, the royalties on secondary sales are going to the artists, okay? And it is happening, as I said, instantly, without any intervention. Now, is this something which we have seen in the past? Have we seen anything like this in Web 2.2? I don't think so. So what we are seeing happening is we are seeing a growing and developing transparent ecosystem, a Web3 ecosystem, which allows better revenue sharing, better control with the artists, and this is something which will keep on evolving at least for some time.
Can I add 2 words?
Sure.
Sufficient decentralization. I think that's
so decentralization is also a spectrum, basically, is what you're trying to say.
Yeah. Basically, I mean, there's nothing is actually truly decentralized even in this world right now, and I think that's an idealist, way to look at it. It's not happened yet, and it may not ever happen. But there is such a thing called sufficient decentralization, where power is not concentrated in the hands of few people for them to be able to reap all the profits and make all the decisions. Yet it is decentralized enough for enough players to make.
And Animesh, you talked about royalty payments that are instant to the creator, but now there are also platforms that are cutting out royalties, right? Like SudoSwap is cutting out royalties. So do you think, and as a creator, creators don't really, I mean, as consumers, we don't really care, right? We want the cheapest one. If an NFT is cheaper, you want the cheaper option rather than having to pay a royalty. You don't care about paying a royalty to the creator necessarily. So do you think we're going to move, eventually royalties are going to be phased out, or will there be, let's say, like an EIP 2981 model where you have the option to pay, it's like an optional, you have an option to pay a royalty to the creator?
So, as I said, what is this ecosystem offering us? This ecosystem is offering us transparency. This ecosystem is offering us, no need to depend on trust, because that's why we call it trustless, okay? So it is offering you more power. Now, as Stan Lee, the creator of Spider-Man, he said, with great power comes great responsibility, okay? So, there are so many use cases which we have not yet discovered. There are so many use cases which are currently being developed. So, to answer your question, I don't know. I don't know which direction we are going to move. Where is it going to stabilize? But this is evolving. It has already started strengthening the ecosystem. Okay? It has already started giving some more power to those who probably deserve it better. Where is it going to stabilize? That is very difficult at this point of time to take a guess on.
Okay. Okay, I'll generally give an example, okay. So, a lot of people have seen Titanic, probably, okay, 97 the movie came. Movie had a lot of artists, but the US had a good system. So, if a person who speaks even one dialogue, he's considered an artist. If you don't speak a dialogue, you're extra. That's very simple. If you're an artist, you get royalty, okay. 25 years later, there is one scene in the ship before the ship sinks, mother and son, there's one dialogue. You don't even remember that part. A 5-year-old boy with some lady, he has one dialogue, and he's got a scat. That's all he says. And fast forward, okay, 25 years later, he still gets some check from the association, from the artist association, and he gets $500, $1,000. He's not in acting at all. He's doing some other industry. 25 years later, okay, how much scene comes in? Less than 5 seconds. He gets paid now. Compared to that, I'll give another example. In Tamil, there was a movie called Managar Kaval. So, Metropolitan Police, Vijaykanth was the actor. Big hit, AVM Productions. They sold all the rights. Okay. 2021, when we were actually building the part, we heard the news. The director died in front of AVM Studios. He was in paupers, literally he was begging. Second phase of lockdown, something was happening, and he died there. Nobody recognized it because he was poor with beard and everything. Nobody recognized it. He was rewarded when he was making movies, but he lost movies back in the industry itself. Okay, he didn't have any money, family, everybody left him and he wanted to make one more movie. That's the whole thing, he was trying to do that part. I'm saying, why do we need to have a struggle? So what we believe is royalty is not an option. Yeah? It's like, okay, should we pay for food when you go to a restaurant? He's the creator.
No, but do you want to tip
no,
if you
the
want to go to
experience part is a different part. Amazing hotel, yeah? If you're going for food, the food has to be paid for. Food is not free. Royalty is there, okay, part of it. But how do we pay it?
But
Is the artist selling his license? Okay, perpetually, I don't want it. He signs off, that's a different story. But we believe the food need to be paid for. Experience can be paid more, that's fine. But artists need to pay royalty, okay? Because on a longer term, I believe my kids, I have 2 teenage daughters. I don't want them to become employees somewhere, okay, getting bored. They should be creator, maybe part-time jobs, do something interesting, okay. 200 years back, people were not doing single profession. Only very few people we employed as soldiers, everybody had multiple jobs. He will do farming for a few months, he will do thatching work, he will do other things. Everybody had multitasking. In last 200 years, because the factory system came in, we wanted people with certain skills, and that's the model which came in. We had to come back to the lockdown, made people to make other choices. People are protecting their health, wealth, everything over other things, okay. Hey, so you should say, okay, build other skills. You are not your specialty. You are a generalistic person. This whole thing, okay. Find something which you are interested in. You can speak, you can take photos, you can create content, you can review. Find some way to monetize it. And it's not wrong to monetize it, okay. Don't feel guilty about monetizing. Don't pirate. Give recognition, okay. You chose somebody's Instagram post and posting on your account, okay. Tag that person, yeah. He wants credit. Not everybody wants money. But recognition is important. Money comes in later. Recognition is important. Artists care for recognition. People who are great artists, they love to do stage performance because if they do good, they'll get a clap today. Not few days later, okay. Heroes are that. So they need to make money as well. But recognition is important. So royalty comes in later. First, recognize it. Hey, amazing content, yeah. That's very important for people.
I agree with you. I agree with everything you're saying, and we should be moving in that direction. But my question is food royalty or is the tip option royalty?
Whom are you paying the tip for? The guy who served you, not the who cooked, right?
Yeah.
Should the cook get something for the amazing food he cooked, right? So should it go to a common thing? Should you pay on a credit card? Credit card money goes to the bank account. Does the cash go to it? Do they have a cash jar, tip jar? If you have a tip jar, do you want to tip it? Right. So there are ways of doing it, okay? So in US, there are ways where like you go to a Japanese restaurant or something, the chef will sit in front of you, cook it for you, right? I go to Michelin star restaurants, they've tried amazing stuff, okay? But ideas, see, I'm not saying people who do the lighting part, he's doing a creative work. Maybe he wants only salary, but somebody who's a creative person, right? So I'm thinking every group of people can make a movie. Okay, not everybody needs money upfront for it, okay? I don't need a caravan for it. We can reduce the cost of making a movie. Instead of a 400 crore movie, can we make a 50 crore movie, 20 crore movie, which can run on OTT? Amazing artists, okay, so Meera Jasmine, who has won multiple, I think 2 national awards she won in 2000. She didn't act for many years. Now she's out of work. She's willing to act, okay. But that movie may not, because Indian heroes, like Indian men, love to look at unmarried women. So they don't want a married heroine at all, okay. So that's a bad part, but I'm saying, amazing artist, okay. If she has given a good role, she can do it. But theatrical, the movie will not work. Will OTT platform, somebody can get original content for it? Maybe she's okay. Hey, I can get a deferred payment, she'll be okay for it. So if you can get a good content-oriented subjects are required, okay. And that point, royalty or something else will pay for it. If the content is doing amazingly well on Spotify or on music or a revenue share model, they can take money from that.
No, I can tell you're very passionate about this subject, but I just want to, we've run out of time, but I just want to quickly, have the floor open for any questions anyone may have. We only have time maybe for a couple of quick questions. Well, okay, one question, real quick.
I can actually come to you because, what you're saying is very good in theory. In practicality, it will defeat capitalism, in my opinion. When you try to make a product, think from a capitalistic point of view. You try to make the cheapest possible product and the highest possible distribution. Having said that, the ideology behind is very right. At the end of the day, I'm with you. Assuming tomorrow Zomato becomes Zomato is not having shareholders. It has only tokens, okay? The person who orders food through Zomato and is a regular orderer, he gets more tokens, and the delivery boy also delivers on time, he gets more tokens. And then you have this equitable distribution of not only the fact that you can actually, when you're ordering from Zomato, the guy who orders very often, or spends more of his budget into Zomato, will actually get the faster delivery, or let's say he comes to my restaurant, he gets like complete walkthrough without any waiting time. So that's a good thing. Now, think from it from the other side. Would the shareholders who have actually invested in Zomato, because you're ideologically right, you would want that everybody gets parity. The shareholders who get the dividends on the company, who've actually risked their capital, which they've invested and they've earned through hard work or whatever,
would they like to be sharing that kind of profits with the people who are token holders because of the fact that these guys are delivering on time or ordering more? Or would you like to have segregation? That's my first question to you.
Sure. I would like to answer it first. Okay, so 2 parts. Okay, so do you want to Elon Musk or do you want a management-driven company? Okay, let's say Apple under Steve Jobs. Steve Jobs was an asshole, but amazing products. He understood what customers wanted. Okay, Elon Musk is something similar. He's kind of doing amazing transaction. Okay, he bought Twitter. He fired people because the company has to be profitable. Management-driven companies. Okay, let's satisfy everybody. Let's do something else. Management-driven companies operate very differently. Okay, let's change that part. Okay, now you mentioned the Zomato part. If the Zomato guy who's delivering food, he delivered food today, great, you got delivery. What if he gets into an accident? He gets permanently disabled. Who will go to pay it? He's not an employee, right? He's not a Zomato employee. He's a kind of part-timer. He took the risk. He was driving. His bike insurance will cover it. Yeah, you can say that part. No, the idea is, no, all I'm saying is if he has delivered few things, if there's some future rewards are available, anything you do.
What you're saying will actually increment the costs of the company which is living in a capitalist society. And eventually what will happen is that there will be no user because the users always wanted at a cheaper price. So, I disagree with you on that sense.
I'm not saying about everybody, yaar. I'm saying, okay, everybody, all I'm saying is it's a new class of people, right? See, we're talking about people who can subscribe to $10 on a YouTube, subscribe my content, okay. Now okay, Ravish Kumar is out of NDTV, now he's going to go into YouTube now, right? He's going to YouTuber, will have millions of followers, and will ask people to subscribe. He can't put all the content for free. So, should he be paid or not?
But sir is saying that, you have to be decentralized for everybody. Now you want to be centralized for the creator, not for the delivery boy or not some. So, we cannot.
Okay, can I just add? So
Yes.
the hypothetical scenario that you created, that's a very beautiful scenario. Just also on top of it, add the information that maybe the shareholders also hold tokens. Okay? And if the value of the tokens is going up because of this scenario, then they are also happy.
Exactly.
Okay, so they are also happy.
Yeah,
Overall, everybody is gaining.
The more number of people,
if the value of the token itself is going up.
Yes, I agree.
Yeah. Thank you so much, guys. We are out of time, and appreciate the panel and appreciate all your thoughts, and thank you so much for your question as well. Perhaps 2 of y'all can have a conversation outside as well over a nice cup of cappuccino. Thank you, guys. Thanks a lot, and thank you, Financial Express.
Thank you.
Thanks.
Thank you to our esteemed panelists. That was indeed a very interactive and thoughtful session, I must say. Passionate, very passionate indeed. Moving on to our next fireside chat, titled Blockchain in Supply Chain and Logistics. In this session, panelists will explore the potential of blockchain in supply chain and logistics. For this session, we have Uddhav Kumar, co-founder and CEO, Linkit, Ajay Singh, co-founder and CIO, DLT Labs, Vedishwaran Sethuraman, CEO, Param Networks. And to moderate this session, we have Sharat Chandra, co-founder, India Blockchain Forum and research head, Earth ID. Please join me in welcoming our panelists. Over to you, Sharat.
Thanks for the introduction. Good evening, everyone, and welcome to the conversation on blockchain and supply chain and logistics. And I think if you look at blockchain in general, I think supply chain happens to be one of the most widely used use cases, and we have practitioners on the panel who've actually implemented use cases for enterprises. So without any further ado, I would like to start with Vedi first. And Vedi, if you can give us a sense of how you are helping brands and businesses, enterprises navigate the adoption of blockchain in general. How are you managing client expectations, right? And how would you recommend anyone, any business leader, industry leader, how do you approach adopting blockchain in supply chain in general?
Thanks everyone for inviting us and being part of this panel. Good evening to everyone. So at Param Network, we are building a low-code tool for enterprise to build multi-enterprise apps and workflows rapidly. The goal at which we started Param is, when we looked at around 2018, there were a lot of Web3 promise, blockchain promise. I was running an e-commerce company at that point of time, and I wanted to use blockchain in my own business. That's when I kind of discovered this technology is still evolving, right? So what we thought is, why don't we take the technology, mature over the period, rather than, look at all the, fully promised land, go to a promised land from day one, right? So our strategy is to be a bridge between Web 2 and Web 3 world. So think of a Web 2.5 platform. So we are building a proprietary blockchain specifically for enterprise minus crypto, so that enterprise can embrace today, and over the period they can get trained to decentralization, how to build business models, how to build workflows using Web3 as a thought process, and then eventually take them to a real Web3 when the market is ready. So today we have been implementing with big, very large customers, dozen of them over the last 2 years. They have been paying customers for us. The main focus is to build a supply chain collaboration, ensure they can build connectivity between two ERP worlds and exchange data seamlessly and exchange, right? Many use cases, some of the use cases we are working is a unified vendor portal and the customer portal together in a single platform, tracking domestic and international logistics, and finally outsourcing manufacturing visibility. Some of the things we are working, the more I'll share as we go along.
Thanks, Fadi. So let me come to Ajay now. Ajay, you have implemented a supply chain project for Walmart Canada. Can you share some of the learnings from the project, and what do you think, what are the other implementations you see coming up in the future days?
So the very important learning what we had from Walmart Canada is about how to go ahead with a process where a big tech company or an enterprise or a big MNC can adopt blockchain technology for their businesses. Yeah, so the most important learning which we had with Walmart Canada was to actually how to go ahead with the process about adoption of blockchain technology for the businesses of big MNCs, big retail or e-commerce stores like Walmart. So it is very essential to get into their shoes and try to understand what pain point from technology point of view, from business point of view, they are suffering, and until unless you are going to solve that pain point, you may be a very cool kid on the block, they are not going to use your product. So all boils down to, so that's what the philosophy we adopted, that as a product, which we are building on top of blockchain, will be only adopted, mass adopted, or with enterprises adopted, if you are going to solve their major pain points. And one of the very major pain points for any big company, or for any company in today's world is the same pain point which makes them grow. So for any business to grow, right, it is very essential that they are able to collaborate with other businesses around them. It's all in the ecosystem. So let's say if there is an e-commerce company, it needs to interact with their logistics partner, their supply chain partners, their distributors. And if there is this friction in the business network, there will be always problem in growing further, or there won't be seamless scaling happening. So that is what we try to solve through our no-code, low-code platform for Walmart Canada, where they were having a very big frictions around payments, around invoice reconciliation with their fleet partners. And once we have solved that particular thing seamlessly, there was a good confidence on the technology part. We have now solved direct-to-store delivery also for them. We have also onboarded them on last-mile delivery solutions which are coming from us. And it all boils down to how they can seamlessly collaborate with other businesses in more trusted environment, in more transparent yet private way. So there should be a transparency up to the level which is required, but at the same time, the other partners within the same network are also competing for the same thing. Walmart may have 70, 80 vendors who are trying to vie for same business prospect from Walmart. So it was very essential that you remain transparent, at the same time remain private or permissioned in that particular aspect.
Thanks, Ajay. I think one of the main or major key takeaways was low-code, no-code platform. And this brings me to my another question where we have to address the elephant in the room, the recent news about TradeLens getting scrapped. So, and I'll put this to Uddhav and again open it to other panelists as well. So do you think a consortium-led approach of supply chain implementation is going away, and we'll see emergence of more easy to plug in low-code modular platforms coming up? Uddhav, your views, and then we can have Vadi and Ajay later.
Yeah, so definitely this is my point. Yeah, so big elephant in the room, especially in the supply chain side. I'll just give you guys a little context of where Linkit started off from. So we started off in 2017, and we're a supply chain automation firm. And in 2018 is when we started experimenting with blockchain use cases, and TradeLens was actually one of the inspirations. TradeLens was covering the bill of lading, or you could say the document that actually gives ownership to someone when you're transporting goods by sea. We came into the roadside, and that's in fact how we also ended up onboarding our first client, which was CMA CGM. So CMA, of course, has a lot of inland container depots as well, and regardless of what's moved over sea, eventually something gets onto a truck as well. So we came in digitizing the freight contracts, the invoicing, a lot of the financial side, rather not the actual financial transaction, but the document that was underlying the actual financial component of supply chain. Now, coming to TradeLens, see, TradeLens always had, there was always a conflict of interest because of Maersk being the largest, liner. And if you look at end-to-end supply chain, I feel what would have been maybe a better, I feel that the concept was right, but the approach was a little wrong. I feel that they tried going a little too far in the consortium system. I feel that they could have taken it a little, they could have taken a step back. See, consortium doesn't always have to mean all the shipping lines. It could have also simply been a platform between Maersk and Maersk's vendors. That's also consortium, right? So I feel that the consortium supply chain is only going to grow. I don't feel that this is going to do a lot. I don't think it's going to have a very negative impact. In fact, what we might see is TradeLens morphing into just a product of Maersk. That's what we could see. And I feel that eventually shipping lines will want to get onto this because just the movement of documents has always been a pain.
Mm-hmm.
And this doesn't really impact, this is always a cost saving. I think it was just the implementation side. So consortium doesn't always have to mean, the entire industry, but it could just mean them, their transporters, their carriers, people who are directly connected to them, where this sort of privacy, issue wouldn't have even come up maybe.
Right. Yeah, great insights, Uddhav. So this also brings me to another question, and I will bring Vaidi here. So do you think that technology is being oversold rather than we are selling solutions to our customers and clients? And how can we address that?
That's a good question, right? So if you look at it, why blockchain, Bitcoins came, because there was a frustration on, okay, something got centralization, everything got regulated, let me decentralize and stuff like that. So how would you put that case for an enterprise use case today, right? Was it anything centralized in supply chain? We are trying to decentralize here, right? We are trying to, but we got truly inspired by the decentralization or the blockchain concept, that its ability to bring heterogeneous systems to come together and interoperate, right? That's the kind of focus at which we are looking at from when it comes to supply chain automation or bringing multiple enterprises. Enterprises are already decentralized. If your supplier is operating independently, your customer is operating independently, the core anchor enterprise is operating independently, right? The problem we are trying to solve is how do we bring a platform or bring a network on which all of them can come onto a platform and bring a kind of a what we call as a very controlled transparency, right? Or a very selective transparency. It's not like I'm going to share anything and everything, right? So in a way, private blockchain is almost a lot of, it adds a lot of value. I respect the work and especially the inspiring work by DLT Labs with Walmart, but it's still closer to the Web 2 world, right? But the goal at which we are looking is, Web, in more towards the permissionless Web 3 on the other side. The whole consortium actually puts a lot of constraint that, you're bringing one interest group and trying to solve one interest problem, right? Then there's a scalability problem in that. You're over-investing on the network, over-investing on the architecture to solve one problem, right? So it's like saying that you can use internet only for e-commerce. You can't use it for Wikipedia, right? It's something like that. That leads to multiple networks being born in the private segment, right? I think that's where we feel that, more of permission to public, which is more like a 2.5 before you go to a completely permissionless, could solve this problem, right? So the way you look at is, connecting to your question, right? It's not the technology you try to go in there. What problem you're trying to solve? You're trying to give a backbone for an heterogeneous systems to come and share something and solve some specific problems. So once you start looking at this problem, probably you have to come inside out rather than outside in, right?
Yeah, thanks, Vaidi. So if you look at the emergence of ONDC, or Open Network for Digital Commerce, where it's being hailed as the UPI for e-commerce. So, and again, I'll put this to Ajay and get his views on what is the role of blockchain do you see in the ONDC context, or are we kind of fitting something forcefully? There's actually some case, and would love to have your views on that.
So I think there is a very valid use case of blockchain on ONDC. given there are certain problems. See, blockchain, what does one more thing very in a beautiful fashion, which though it has not happened in case of TradeLens, is to make entry barrier low, right? Try to provide certain technology and data point to an audience if they had to get those insights, if they have to get those information or value, right? They will require to invest a large money upfront in technology. A blockchain network itself solves a lot of inherent problem around identity management, around data integrity, around data transparency and privacy. And for anything which is going to run at such a large scale, if a technology is available who is trying to solve the problem, and currently that is the best technology which is solving that problem in the most elegant fashion, it is always the good step forward. What we need to take in cognizance is not to build a high-flown visions without having a proper backing for it. So let's not go ahead with a very large vision on the day one. Instead, trying to have a very small entry barrier on day one where mass adoption can happen, where a lot of people can come and start integrating to it, come and start putting in their value chain on top of it and start using it. So once that particular thing happens, I think that won't be an issue and that won't be a problem.
Yeah, great points. In fact, I can add to that by saying that if ONDC has to gain mainstream adoption, then we have to look at how seller identities or seller scoring can be made available so that, let's say if you're a seller on a Flipkart, you might have some score, but the same score cannot be transported to an Amazon or other marketplace. So I think that's where another blockchain-based scoring mechanism will actually help buyers and sellers make exchange of value easy.
And also try to resolve the conflicts around where people say at a lot of times the reviews or Amazon or Flipkart are getting tweaked, or you can manage it, you can buy it out. So those things, ONDC on blockchain will bring a lot of more transparency on top of it. And the whole blockchain evolves from the part that you need to have more collaborative environment. And e-commerce is such a space where there are a lot of collaboration in place in order for something to be delivered to your home, right? It's not a single company, it's not always a single entity which is delivering that, providing that. So you as an end user also requires a view on what the path has been taken, what the route or how it has come to you. So those problems are also will be solved beautifully as ONDC is on blockchain.
Thanks, Ajay. We have close to 10 minutes, so the next 5 minutes I will try to have closing remarks from all the panelists and leave 5 minutes for audience questions. So coming back to you, can you share some of the implementations you have done for your existing clients or partners, and what are the use cases where you see adoption coming up?
Yeah, so absolutely. I think that, like I said, the very first use case that we found, I mean, if you ask any logistics manager, what is his biggest pain point, it's going to revolve around two things. It's going to be copy-pasting data from a register onto a ERP, which probably costs them crores and millions of dollars, which many times does away with the entire point of an ERP. And then the other one is going to be in terms of the billing, the freight contracts, the invoicing. So like I said, we're a supply chain automation firm. So what we also do is we also manufacture our own IoT devices. So a lot of our blockchain use cases actually revolve around taking in data from IoT devices in terms of when the product got delivered, in terms of cold storage, whether there were any temperature discrepancies. And then we use that to actually sort of have a layer on top of their own billing software, on top of their own contracts to actually be able to automatically implement those. So when a lot of people say that smart contracts, are not actual legal contracts, we're actually doing that. We're actually putting smart contracts into the legal contract framework. So most of our clients, whether it's companies of Aditya Birla Group or it's CMA CGM or one auto part manufacturer, that's the main use case that we've had. We've had a big play of getting their transporters and their vendors on board as well. And then I feel that there was a lot. One of the biggest problems is documentation, right? So one of the other things we also did was we had a blockchain plugin, which is basically like an e-signing tool, like an Adobe Sign. And when we saw a good demand for it, we just ended up launching a product called Link Sign, which is available right now on for free on the web. and it's basically a blockchain signing tool. And that was one of the ways in which you could actually sort of make people understand what blockchain does, because many people don't understand that. So they don't really understand where the use case comes in. So whenever they think of e-signing, they used to think about dongles and, e-mudra and all of that. And what we did was just created this e-signing tool, which anyone could sort of, click a photo, sign, and then if they did any changes to that contract or did any change to that bill, like made 100 into a 10, it would show that the contract or the document wasn't actually verified. So that was a very quick way to actually get people to understand what the power of blockchain was.
Thanks, Sudhav. So, Vedi, as a closing remark, can you help us understand how do you see that option in India vis-a-vis other markets? Because as a company, you're present in US as well. So, do you see more adoption happening there vis-a-vis India, and what can be done to accelerate adoption in our country?
So, obviously, because of proximity in India, all our development has been in the India market. So today, our 90% of our customers are in India. So it's been a long journey, but I think if the only thing is in India, you don't want to sell the technology over here, right? I mean, you need to go and solve the problem. So if you look at it in a good final state of what this technology can offer us, your suppliers and enterprises all coming together, have a good transparency that, because we are collaborating, we are doing a digital transformation together, we are having so much of saving in the product price. The customer is benefiting because I'm going to sell this at less than 5%. My margin is also increased by 5%. Therefore, I'm going to share 1% with you, and I'm going to keep 4% with me. That could be a steady state, right? But to go there, fundamentally today, what you can achieve in an email, and from an Outlook, I can send an email to anybody, and I can receive email from anybody else, right? Back from Gmail, secure network, unsecure network. But that kind of communication platform is still not existing in India or the enterprise-to-enterprise communication globally, right? Today, Oracle cannot talk to SAP, SAP cannot talk to Tally, Tally cannot talk to Zoho, right? So fundamentally, we need the infrastructure. I think the first thing that what we are trying to sell in India is like building this infrastructure, bringing enterprise together and ensuring that they can exchange data very seamlessly, right? Once they have this data exchange, the second step is to build more and more visibility. Okay, what's my inventory which you're going to supply to me there, right? What inventory I shared is actually available in the customer, right? That becomes reconciliation among goods, data, your money, everything, cash becomes much more easier for you. Once you build this visibility, then actually the intelligence sits on top of it, right? So our focus is to take this 3 steps, build a connectivity layer, build a sensible data exchange and visibility session, and then finally bring all the incentive layers and all the things. That's where I think true Web3 will act on it, right? That's the stage at which we are going after.
Thanks, Vedi. And in interest of time, quickly let's go to Ajay. Ajay, what would be your recommendation or suggestions to industry leaders who are looking forward to adopting blockchain for supply chain related use cases? How should they approach it?
So the best way I see is for any business to adopt any technology, right? It should supplement their business. It should try to add either a dollar value to their business or try to decrease the man-hour cost involved, try to reduce the frictions which they are already having in their businesses. So trying to identifying this pain point in a correct manner where the pain point exists, and the pain point should be large enough where you want to invest into a new technology or leaving your legacy system, because ultimately, so there are 2 ways businesses think, whether they are investing for future or they are investing for present, something which are going to give a dollar value to their present business itself. So as a company who is trying to invest in these new technologies should try to gauge in which parameter or which bracket they lie. Are they trying to invest in a technology in a future which currently they may not need, right? But they understand that maybe 2 years down the line we will be reaching such a scale that these problems are going to creep in, and at that time I will be a huge elephant where maneuvering anything will become too heavy. So, or if there is a business who cannot think in that direction, and they see that there is certain current problem, and there are a lot of blockchain solutions which are available like ours or other people like Linkit or Param Network, which are plug and play available, which have a very low entry barrier cost associated to it. They can always try to adopt those things, run certain those things and POC, try to build a metric around it, what they have achieved. Is there something which is giving value to them? if it is happening in today's time and they are not investing for future, they should try to adopt it and they should try to go ahead with those aspects.
Yeah, great insights from all the panelists, and I think it's important to have these dialogues quite often with industry so that we understand their viewpoint and bring forward the point of technology and how it can make sense to them and make it a more outcome-driven approach. So I have close to 5 minutes. Can we have, do we have any audience questions? We can take a couple of questions. Okay, in that case, I will just give the time to Uddhav, and you can use this to share your views. Or what do you think, what is the way forward, how more businesses and industry leaders can adopt blockchain for supply chain?
Sure. So I think Ajay really hit the nail on its head, which was in terms of savings, right? So I'll just give a use case of CMA, for example. So when we approached CMA CGM, their biggest use case and problem statement was billing. And for any logistics company, or honestly any company, one of the biggest pain points is time, right? All they want to do is save time, you save cost. I'll at least fast forward to the result that we had was, and we posted this on LinkedIn also a couple of months back, that they went on record to say that they were able to save 4 hours per man per day. And they had a team of about 10 people, that's 40 hours being saved per day. And the basic reason and the basic way around that was this entire freight invoicing and billing problem. So I think what's important for people to do is before they jump on to the blockchain bandwagon is to jump onto the solutioning bandwagon, which is exactly what you're saying as well, right? Is about trying to actually find that problem. And I mean, if you look from in terms of blockchain implementation, right, it's not a cheap technology. You have, the way I divide it is there are almost 3 costs which are higher. First of all, the educational cost of telling the client what blockchain is, how it can help. Then you have the cost of course, the developers and actually implementing a solution. And then you, of course, have the infrastructural cost. You need more servers, more computing power and everything else. So before you, decide to get on to blockchain, before you actually decide that whether it's a company wanting to implement the solution or a company like us wanting to actually make it, you actually have to first decide and see where the use case and whether there's an actual use case. And of course, the financial side, invoicing, contracting, those are proper use cases. So I think that's primarily what's important, and it's very important to try and educate companies about that as well.
Thanks, Uddhav, and let me thank all the panelists for sharing their views, and let me thank the audience as well for listening to us. Thank you.
Thank you to our panelists for that very interactive session. Moving on to our next panel discussion of the day, titled The Crypto Play. In this session, panelists will discuss the recent trends in the crypto world. And for this session, we have Amit Nayak, co-founder and CEO, SahiCoin, Avinash Shekhar, Chief Executive Officer, ZepPay, Edul Patel, co-founder and CEO, Mudrex, Raja Gopal Menon, Vice President, Wazirex, and Amanjot Malhotra, Country Head, India, Bite. To moderate this session, we have Purushottam Anand, founder, Crypto Legal. Please join me in welcoming our speakers on the stage. I request Purushottam to take it over from here.
Thank you for the introduction, and also I firstly welcome all of our speakers, and also our speaker joining virtually, Amanjot. It's great to be here, and the topic that we would be discussing today right now is the crypto play. So in crypto play, we certainly want to start first with what exactly is happening in the crypto, and there are a few concerns. Say especially in view of the recent developments that has happened, and in that context, I think I would first like to go to. So you can start, and so my first question would be, say, considering the recent developments that has happened, how exactly do you think will it impact the Indian crypto exchanges?
Recent development you are talking about?
I'm talking about, say, the collapse of some of the really big names, basically, in the recent past.
So I think there are obviously learnings around it, and there are some concepts which are validated in a way. So I'll come to the learnings first is that the crypto industry, there are like two kinds of things which are happening. There are two kinds of things which are happening. One is that people are obviously building projects, building solutions to solve for the real world problems. And obviously crypto exchanges provide, in a way, in my view, like a end liquidity so that whosoever is solving those problems can sell their, let's say, or trade in that those crypto. And one thing which happened in last 2 years is that many players, including crypto exchanges, they obviously started giving unreasonable returns, 15%, 20%, 12% returns on stable coins, for example, which you can't earn without risk, in a way. So I think the learnings are not your seeds, not your coins. All the customers should really learn how to manage their own crypto, send to the exchange only when you are trading, basically. And once you have traded, keep in your own custody. Second things learning is, I think the regulation needs to really catch up now. Any new technology brings good things, brings bad things, and we as an industry have to make sure that bad players don't win, bad players are not able to ruin the industry, basically. So in terms of self-regulations, wherever regulations are not available, but more importantly, as we need to be watchdog of ourselves till the time the regulations are not there. So, and this I believe will quicken the path to regulation, so to say.
Okay, I would like to also go to Amanjot, and if you want to add anything on, especially on the part, what do you think would be the impact of these on the Indian crypto exchanges? Like, do you think that there would be some, say, new changes or measures that would be adopted by the exchanges?
I think currently we see that there's a lot of trust issues in the market. So because of all the actions that have been happening in the recent times, so all the users they don't know which company or which brand to trust in that way. So that's something which again the Indian exchanges are also facing the same way. A lot of users have started using cold wallets, have started keeping funds in their own wallets, not keeping it on their exchange wallets itself, because obviously we've seen that a lot of the exchanges have used those funds without even their consent. So I see a lot of regulations coming in, but that will take time. In the meanwhile, I think exchanges will try to regulate themselves as much as they can, because they know that there's a trust deficit. They will try all their actions to make sure that they can build that trust and gain that confidence of the users and keep their funds in their custody, because that is how they will be making money.
Yes, I actually have a very different lens of looking at it. I think I call this, according to me, this is like a great cleansing, right? All the bad actors in this entire ecosystem have gotten like clean sweep, mostly as an output of extreme leverage and extreme greed. That's basically what's happened across the board. As a consequence of that, the players that remain are actually going to strengthen the crypto ecosystem broadly, right? Like, and that's what's happening. That's what we are seeing across the board, right? Like the exchanges that are remaining are coming out and showing proof of reserves. They are more vocal about their policies. They are trying to explain why the things that they were doing were the right things to do in the first place, right? So my understanding, or the way at least all of this has shaped up, is that it's an outcome of just extreme leverage, extreme greed, and all of that has led to like this large, wide sweeping cleansing effect that has removed most bad actors from the broader industry, and has now actually the ones left surviving are probably the ones who are doing the right things, and those then become role models for things to get built on top. And this happens regularly across industries again and again and again. All of them go through this hyper cycle of growth and then some stabilization, then growth, then stabilization again and again and again.
So in a way, do you think there are like say few common traits, in
yeah,
all
like money has a 5,000 year history. Every 5 years you see someone going bankrupt because of stupidity. That's basically what happens, right? Like this is more greed and leverage. We saw this exact same thing happen 12 years ago with the broader financial crisis that happened with Lehman Brothers collapsing, right? That was again an event where there was large amounts of leverage being built up in assets whose value was relatively up in the air. That led to a squeeze, and as a result, the value of collateral falling down. As a result, a lot of loans being offered against that collateral becoming bad loans, and as a result, a lot of large companies falling down. That's the same cycle repeating again and again and again. By the way, like in India, banks are few and far off, but in the US, there are probably 7,000 banks. And every year, 10, 12 banks go down because of this exact same thing. This is not a new phenomenon. It's not some new scam that someone's come up with. It is basic understanding of how you should use your money, separation of church and state, and by that means separation of user funds and your funds, and deciding what do you use what for, etc., etc.
Correct. So you have already highlighted, say, some of the possible, kind of policy or regulatory measures, and also both Avinash and Amanjot talked about the need of regulation, and so we'll go to now Rajgopal sir and see, can he share few things on what may be the possible regulatory or policy changes that may be introduced after the recent developments?
I hope you guys can hear me.
Yes, sir.
Thanks for having us here. I think we should be very careful about thinking that regulation is the panacea for all the problems. Because as Mudit said, the biggest scams that happen in the most regulated markets. Bernie Madoff happened in the most regulated markets. Bear Stearns happened in the most regulated markets. So it's very easy for us to think that regulation is this one brush that will clean up the entire system. Wherever there is men in charge, wherever there is emotion, there is greed, and slip-ups will happen. So this is one such slip-up that has happened because of a particular individual's greed. So it's unfortunate, but it happens, right? Whether it's regulated or unregulated, it happens anywhere. That being said, I think what this will do is it will force governments to act. They have to be seen as if they're doing something. They have to show as if they're being proactive about things. So that will force a lot of governments to act. And Indian government has been particularly sitting on the fence, literally, as it were. And coincidentally, we are the president of G20. And we will be setting the agenda, as it were. And PM Modi and FM Nirmala Sitharaman have already said that we need a concerted action on crypto amongst all countries. So I think 2023 will see a lot of talk first, and then some action towards the regulation front.
So if I may add to that, like definitely I think a lot of governments acting will happen, but what has also happened is that suddenly the users are asking the right questions, right? They are asking questions around, what are you going to do with my money? Where is it stored? Who is your custodian? How are you going to trade? And I think events like this also help do that. They help educate the broader industry to ask the right questions, hold the right people accountable, so that even if your governments don't hold you accountable, your users will, and that will happen again and again and again. And that's why you need to be on the forefront, helping people understand what is going to happen with their assets, especially if you're going to take responsibility of them. Or say that, okay, you're not going to take responsibility of them, and you are just a system through which trades will happen, or some transactions or some storage will happen.
Correct. So regulation, yeah, please go ahead.
One very quick point here, Edgar briefly touched upon it. The cleansing has happened from the industry itself. So it was Cointest, which is an industry publication that is bringing about scoop after scoop after scoop on what is happening here. Whereas the rest of the mainstream media is actually, SBF is doing a victory lap, literally, as it were. So it's a mixed bag of things that you're seeing. So the industry and the participants of the industry are being more proactive, and all other stakeholders will have to get on board and ask these tough questions of all industries, not just the crypto industry.
Okay. I think users will dominate, the faces of this category, where now users will start demanding towards more control of their funds or control over anything where they're deploying their money, and they will seek more transparency from the systems wherever they're investing into.
Okay, so I think the need of regulation has already been highlighted and we have touched upon it. This is also coming up as one of the demands from the, say, user or the customer side. But apart from regulation, since Amit, you do a lot of work even on, say, the consumer interface and what are the expectations. So apart from regulation, what are the other, say, technical or feature-wise demand or expectation that you see from the consumers in crypto?
See, if you talk about the overall category ecosystem, when there was a huge FOMO in the market, right, the basic needs were knowledge, right? Nobody has the right amount of knowledge. And there were a lot of aspirers in the market who want to come and join this category. And the primary reason was greed, like Avinash mentioned, Edul also mentioned, right? The moment sentiment starts changing, right, you are only left with believers, right? Believers who entered and who still believe on the technology which can change a lot of things in future, right? So accordingly, the category needs are also changing right now. So the initial category need was core knowledge and trust. Now it is actually trust, right? Where you have to convert these believers that you have full control, you have full transparency about wherever you are investing, right? Where our funds are, which means self-regulations, which we have already discussed, right? So these are some of the three broad areas where innovations will keep on happening in the current next 1 year of time frame. Especially if you look onto believers' problems, problems like on-ramp, right, is one of the biggest issues. If you cannot come on chain or go off chain, right, you cannot talk about crypto, right? So that's one of the biggest problems which companies have to solve from a user's perspective right now. The other problem is definitely transparency and control. That how fast I can take control on my funds, right? Is something which is yet to be solved for consumer market in the entire ecosystem.
Yeah, so I think to add to that, so Mudrex has been around for like the last 5 years, right? So we've, in an industry that's 10 years old, we've seen now the broader consumer mindset move quite a bit. And if you look back at 2017, 18, 19, most users were actually traders. These were the guys who were wanting to utilize the volatility of crypto and make 5%, 10%, 20%, whatever gains per day. Right? And that is what dominated the majority of the industry, but this started to change. This started to change actually sometime around the summer of 2020 and then continued in 2021. And as of early 2022, majority users in crypto now are actually retail users, right? And the problems of retail users are very different from problems of traders. And most products today primarily focus on catering trader-focused problems, right? How do I give them a more dynamic or a better liquid exchange or these kind of orders and so on and so forth, right? But the problems of retail users are very different. As Amit said, like they don't even understand how to do a basic on-ramp. They don't know what custody even means. What does it mean to have my account on a wallet? And these are very basic problems for vast majority of users to solve for. And as a result, at least what I am seeing is what will happen over the next few years is that more and more and more products that simplify the experience, build trust, make crypto easier to understand, and help separate the signal from the noise for the broader users are what will become more and more and more important. And this is not only true for India; this is true globally. Crypto is like one of the first global asset class where we are seeing participation from world over. So this is what is likely to happen, and that's what we are seeing at our end.
Great. Actually, I'll go to Rajgopal, sir, and because you actually, Amit, also mentioned about, say, on-ramp and some of these functions. And since banking, of course, is one of the support services which is kind of essential for any sector. And we'll come to the specific aspects of, say, the interaction between banking and crypto. But as we know, just yesterday, the retail CBDC was launched. And in that context, I would like to know what do you think will be the implication? How exactly will the CBDC interact with crypto?
Really good question. So I can answer it in two ways. One is establishment is. So currently, there is no ease of doing business for the crypto industry in India. The reasons are very well known. Let's not delve into the reasons. Banking access, regulatory issues, NDA issues, a bunch of problems that the industry faces. And to top it all, you had this 1% TDS, which was supposedly put to track, user funds and users who are not actually showing it in their IT returns. So the CBDC is actually a really good segue. Because it is crypto, because it is trackable, it becomes trivial for the government to integrate it with the agencies, with the exchanges. And then what you can do is that you can do away with the TDS, the 1% TDS. At least that's our hope. Let's see how successful or how our wishes can come true. But it's a really good project, and if the RBI is looking for test cases and pilot cases, crypto exchanges are the best exchanges. Crypto companies are the best companies where you can try out your pilots.
Thank you. Would you like to add anything?
Thanks. So I think 2-3 things. One, I think the CBDC, I don't think it's crypto. I mean, I think just another form of digital currency like UPI, NEFT, RTGS. And I don't think actually has any similarities to crypto. And I don't think that the government is actually will enable CBDC to be traded freely like for crypto exchanges, or it is going to be significantly controlled. That's what I mean. My view is whatever they have published till now. So that is one. Second is that yes, banking has always been a challenge. I've been in industry from 2017 now. So banking was a challenge before RBI ban, so-called ban came. It was obviously a challenge during that 1.5-2 years period, and it has been challenged since then. In terms of ease of, basically the thing is that as of now, even as we speak today, crypto is not illegal in India, and it has been discussed and proved very, very thoroughly in the Supreme Court when this case was going on. So unless government comes and says that okay, we are banning crypto, which doesn't seem to be the case. I think they have been more positive in the last 2 years. Unless that is the case, then there should not be any reason for banks to not give support. But that's not something which we are seeing. Many new crypto projects, they're not getting crypto supports. Exchanges are not getting banking supports. Exchanges are not getting banking support. So what looks like is that it may take
closer to
it may take 6 months, year, more than a year. But I think on the banking side, the likelihood of getting full support is only when the full regulation comes, and I'm sure government will work towards that. But in the meantime, and as we are doing as an association, I think we should continue to do some kind of self-regulation as if we are banks and financial institutions, because we obviously have a duty towards the customers, towards ensuring that the law of the land is followed. So I think it's on the banking, it's still wait and watch.
Yeah, so actually, I would rather not talk about banking. All of us know where it is. No one knows where it's going to go. So let's not touch upon that. People want to invest are anyways investing. Let's actually talk about CBDCs in themselves, right? The value of crypto is that it actually increases traceability. It increases your understanding of who owns what, how money is being transferred, makes all of that public available on a ledger. And with CBDCs and what the e-digital rupee that the RBI is launching, the intent actually is to be able to figure out and make all of these transactions more seamless, more public, more transparent for everyone. And I think the initiative is great, and as Avinash said, it's not necessarily a crypto. It's a great digital banking initiative and a great method to distribute money and a great method to have a larger influence and control over monetary policy. That is what it is more. And it's a technological use case of blockchain in like managing a country's money. Now from the place where I think regulations play a very, very critical and important role is necessarily on the layer when money goes from rupee to crypto. So that's the range, or that's the area where a lot of focus of regulators world over will continue to be. And I think this CBDC wallet, the digital wallet that is being promoted by the RBI is going to be one such gatekeeping point, right? Then it'll help you go from fiat to crypto. And then if you want to go anywhere from crypto outside, you go from here. If you want to come back from crypto to fiat, you come from here and you go from here, right? And having that gatekeeping basically helps improve trackability, improve traceability, reduce nefarious activities using crypto and so on and so forth, right? So all of those get enabled. So in my opinion, it's a great tool not only for broader monetary policy and broader efficient utilization of money, but also potentially for more and more crypto companies and more digital asset service providers in the future. That's the kind of lens from which I look at it.
Yeah, I think there are three things from a government perspective or from an overall regulatory perspective. There is cash in the ecosystem. There is digital money, which we all use on UPIs, and there is crypto, right? And all of these three things have fundamentals aligned to it, right? How many of us think that the CBDCs currently, which is launched, is on blockchain, right? I'm just wanted to understand, is it really on blockchain or it's not on blockchain? It's not on blockchain, right? That defies the concept of crypto. That it's not a CBDC which we think it could be, and which means it cannot interact with the current crypto ecosystem. So thinking that it will talk to crypto with whatever we are seeing as of now is not something which we are, hypothesizing that it will happen. It could happen in the future. The second part, is it changing cash to digital money? Probably yes. That's the bigger problem which the government has to tackle. So they have been like kind of doing this for that, right? The second part to it is, I mean, what else is changing? Why we are still using UPI? Why not UPI can expand? UPI still needs bank interactions in between. One has to note down ledgers in one bank, which moves to another ledger in another bank. With this, probably central bank can control the flow, can see the flow, can keep it private, but still have a trackability with them. That's something which is very important from a central bank perspective, right, which is currently not very fast and possible, and it involves huge amount of investments when it comes to printing cash, transferring cash, rotating cash. It includes huge amount of investments.
Thank you. I'll just take one short question, and then probably we'll try to keep some time at least for 2-3 questions. Amanjot, actually, if you could share, it's really amazing to see that crypto community as such continues to build. Of course, the market conditions are not the best, but projects have been, are being built even today. So if you can share any exciting or say innovative recent segment or product or feature that you would like to share with us.
I think the overall crypto ecosystem is exciting. There are more and new products being introduced. What we can say that after 2023, we will see that the whole community being divided into two parts. One will be kind of regulated, and that will move towards more and more regulation, and then we will see the other side of it, which will be kind of unregulated. Being unregulated, obviously, it will have its own benefits that you can actually do multiple things. So you will see a lot of regulated CeFi products, and you will see a lot of unregulated DeFi products, and you will also see a merger of them, which could be like regulated DeFi products. And I feel like after the collapse of recent institutions such as FTX, we will see a lot of DeFi products picking up, which will bring in transparency to user funds, how user funds are being utilized in the markets, how investments are being done, how money is being made, and then what kind of interest that they're getting. So that will pick up a lot after this, because I would have to use them. I don't want to work with an exchange, because if that FTX is going to collapse till the time it collapsed recently. So it happened in a matter of days itself, and people were not able to take out their funds, so they suffered. And on the other side, we will see a lot of regulations coming. You already see a lot of regulations coming in from the US side. Germany is also trying to do the same thing. We have a different position on the regulations. I'm saying we're kind of playing the catching up game, but definitely there will be a lot of regulations, especially for exchanges and products being launched. You kind of investments products which are being launched to the customers directly, and we can see innovative investment products coming up. I previously worked with a Liechtenstein-based organization where we launched security token offerings, where we raised $5 million and $25 million for a couple of projects, and it was all done in a very regulated way. We kind of filed all the paperwork with the regulators. It was a thick document with more than 100, 200 pages, listed on everything. As it was not as serious as an IPO, but it was close to that, where we kind of listed out every information we gave them. So I think we can actually see those kind of offerings coming into a picture where the companies are working closely with the regulators and launching new investment products for the users. So yeah, and NFTs again, we're seeing a lot of gaming companies and NFTs innovating in the sector. We're seeing a lot of DeFi products built over NFTs, and we can also see a lot of asset-backed NFTs. But as of now, what I'm seeing in the crypto sector is that people are focusing towards utility-based NFTs, and that's going to be the trend for the next 12 to 18 months. That's what I think is going to happen in the next 8 months or so.
Thank you. Rajgopal sir, any say service or any new feature?
Actually, we all think that this is very, very far away, but change happens slowly and then it suddenly happens. So for example, Microsoft is revamping its entire Teams experience to resemble more of a metaverse, and we are already in a multiverse. We spend more than 6 hours looking at our tools, another 8 hours looking at our screens, laptop screens. So so the need to accessorize ourselves in our digital avatars, so which will touch upon. So it will start off very interesting experiments will happen. Reddit is doing something really very interesting, where it's getting more than 300 million people onboarded onto crypto in a very seamless, friction-free manner, and in a manner that is very close to the user's heart. So we are all exhibitionists at this point of time. So you accessorize your avatars, the way you look, and so on and so forth. And Reddit is taking a big leap in that direction. And gradually you'll have firms like Meta and all that, which will also learn the tricks of the trade. And then you have Elon Musk and Twitter. Payments could be powered by Doge. So it's before you know it, maybe in 2023, you have 2023, you have a lot of things happening suddenly, and it could get really very exciting in 2023.
Thank you. And probably the question, we can slightly change the question, and if you could share maybe instead of any exciting feature, if you can tell us if there is one change you would like to see in the market, maybe in the next year, what would that be? We can start with you, Sir Avinash.
So I think with the recent collapse of FTX and other centralized exchanges, I think as an industry, and this is I think not the, it is maybe a first bigger collapse of a centralized exchange, but frauds have been happening in crypto industry from a very, very long time. You had ICO scams happening few years back to now centralized exchanges, other areas. And regulation will always be far, far behind. So what we can do as an industry to ensure protection of retail customers, okay? That's the responsibility I think as an industry we have to take rather than outsourcing it to the government, so to say. And it's happening even today. I have few days back I was seeing a coin from 0 to $2 billion market capitalization in a matter of a week, and then coming back to less than $1 billion next week. And it seems there is already an infrastructure in place to actually do these kind of things. So as an industry, what we can do together to make sure that we are working in an environment which is taking care of a user who's new, who's just understanding crypto, and suddenly he comes and finds himself in these kind of scenarios. So what we can do as an industry to make sure that we move away, or we actually try to minimize these kind of things.
Thank you. Yes, Edul.
Yeah, I think everything is just going to become much, much simpler. People are going to stop using jargons, and people are going to focus on learning and helping their users understand what are they doing much more. That's, I think, going to be the big sweeping change across the next couple of years, broadly. Today, products are very, very complex for most people to even step in and start utilizing. And I think that's the big change that's going to happen.
Thank you. Amit.
I think we were in a marketing dominant space previously. This phase will be going to be more tech dominant. There will be more deeper technologies which solve trust problems of consumers will emerge in the coming time. So that's my thought, that it's builders' time and not marketing dominant time.
Okay. Thank you. We have some time if we can take, say, 2 or 3 questions if anyone would like to ask. We'll come to you, sir, just after that. Yeah.
Okay. So as there was, a huge discussion about how the recent developments have been, and it is more, one of the evolving factors is that it is the responsibility or duty of the consumers to be more diligent. And by consumer, I mean it can be the retail investors, the institutional investors, or the other ecosystem participants who are dependent on, say, exchanges or other service providers. But the thing is that for all the diligence, all the diligence is dependent on the information which is available. So I want to ask from you, given the recent events, what are the changes that are being planned actually? Are there any, in your institutions, are there any additional disclosures being planned, any audits are being planned, so that the information is being given to the users so that they can perform their diligence?
Who is the question directed to?
It is to the panel. Anyone can answer.
Yeah, so I think I can take that up. So at Mudrex, of course, we are doing a lot to make sure that this comes out clear, and so that we can explain to users where the funds are, how are they saved, how are we regulated, what audits we follow, etc., etc., etc. But I think more often than not, users, at the end of the users, it is actually unrealistic to expect that they will be able to do all their diligence. Like, let's be real. That is not going to happen. The only thumb rule that I ask users to, take care of is that if something is too good to be true, it probably isn't. So if it seems too good to be true, you should just ask a couple of more deeper questions. And that's what solves for it. See, it's not like information being more accessible will solve for the problem. Information can be way more accessible, but understanding what that information means also is an important part, right? So the only thumb rule that I would like to tell people to make sure is that if something that they are seeing is too good to be true, it's probably not true. And as a result, they should ask deeper questions. Otherwise, they should just follow basic investing rules of investing in the longer run, making sure that they are doing systematic investing, and so on and so forth.
Thank you. We'll just take last question from here. Yeah, you can go ahead. Please pass the mic. Yeah.
Maybe my question to Amit or Rasgopal. So I just would like to understand the concept behind crypto. So bit of confusion. So for me, the understanding of legal tender is like I can transact to get maybe something material, and the person who is selling the material is also trusting the legal tender. I'm giving it to him because he can go to the other place and then do the similar kind of transaction. So then for crypto, so then why do I need a public legal tender and then a private legal tender? For government, RBI is tightly integrated with government, and then who actually controls export of maybe agri-produce or maybe all kinds of material things. For crypto, they are not in partnership with any of the produce. It's just a legal tender that is a private legal tender. Then for transacting, why do I need 2 tenders? So how do you want me to trust on crypto?
Yeah, again, I can take that up. I'll try and make it slightly simpler. the blockchain technology is nothing but a ledger. It is literally a ledger book, an accounting book that tracks who owns what amount of what thing. Okay. The thing that you track on that blockchain is what we call a crypto token. Today, most of the things that are being tracked are kind of either currencies. In the case of, let's say, Bitcoin, Litecoin, Dogecoin, Shiba Inu, and all of that are broadly currencies. That's their utility. That's the thing that's being tracked. But there are other things that can also get tracked. So, for example, Ethereum, and Ethereum is this popular crypto token that's out there. ETH in Ethereum that is being tracked, it represents your ability to utilize the Ethereum network, and Ethereum network represents compute power. In some other cases, it might track ownership in a particular blockchain. In some other cases, it might track your contribution to a particular network and so on and so forth. So the one key part to remember is that the blockchain technology enables you to track things publicly. The thing that can be tracked can be a wide variety of things. Now, the reason why making it public is important is because in a lot of cases, what happens is that the intermediaries who do the tracking end up capturing a lot of value. And I can give you an example in the case of, let's say, YouTube. YouTube is a platform where a lot of people are publishing videos, a lot of people are consuming, a lot of ads are being played, and YouTube is capturing a lot of the ad revenue instead of sharing it with the individual creators. So it's not only, if let's say if this was open, public, available, there might have been better ecosystems created where this monetary sharing would have been better. Or there might have been better ecosystems created where the allowance of who can go on, who can go off from this system improves. Today, because all the data is centralized, owned by these central platforms, people's ability to decide on what is right, what is wrong, is dominated by these central platforms. Making them public solves for it. The entire broader crypto blockchain movement is more of a democratization of capitalism kind of movement. That's where it's going.
And specifically when he's talking about legal tender, right? So all those citizens where countries are like depleting in terms of economy, they don't have trust from governments and their own legal tenders, where crypto is kind of replacing them for a while. Right? Specifically from an India's case, yes, INA cannot be replaced with a crypto as a legal tender. But what Edul explained is the fundamental over which you can actually exchange any token. It could be as simple as why could education be not free for every individual in the country, right? I have made my 10th class notes, say in biology. If that is on blockchain, it can be transferred, it's open, right? Why would I be charged again and again by publishers every year for reading one particular book or something? So there are multiple use cases which you can deploy on blockchain. Legal tender is one of them, or currency is one of them.
Yeah, it basically enables better economic use cases on the internet. That's what it does. And mostly where a lot of people are creating value and a lot of people are consuming value. That's where it's valuable.
Just one very quick point. I think the gentleman was asked a really valid question as to why do you need crypto, why do you need the blockchain. So the fundamental thing is that everything on the internet is copyable, is duplicatable. Okay, an image is copyable, it's duplicatable. What the blockchain does, or what crypto does, is that it makes it possible for you to prove that I've transferred that image to you. It makes it scarce. So through the blockchain, I can prove that I no longer have that image or that unit or that currency, and I've transferred it to you. So that happens on the blockchain. Okay, so to validate those transactions, you need miners. To reward those miners, you give them crypto, and that crypto becomes a form of currency. It's as simple as that. It's a store of value and a transfer of value. It captures value. That is what a cryptocurrency or a blockchain does.
Thank you. And I would like to thank all the speakers actually for sharing their insights, and thank you all of you for being a great audience. Thank you. Over to you.
Thanks a lot to our panelists for that thought-provoking session. Thanks a lot. We now move on to our next fireside chat of the day, titled Blockchain in OTT. In this session, panelists will discuss how blockchain technology has the potential to solve the media and OTT industry's long-standing struggles with issues such as royalty payment to the artists, piracy, copyrights management, and flawed advertising strategy, among others. For this session, we have Nitin Narkhede, founder, theally.com. Vikram Tanna, COO, Xfinit. And to moderate this session, we have Saurav Raj, founder, Wise. Please join me in welcoming our panelists up on the stage. Welcome, sir. Welcome. Over to you, gentlemen.
Good evening, everyone. So thank you again for being here. And as we kick off the session, I would like to make a small announcement. We have 2 giveaways for the best questions asked. So please pay attention and ask your questions towards the end. We have great experts here in the room. So we'll kick it off with that. Right? So as per media reports, it says that Indians on average consume about 70 minutes of content over the internet. And that happens over 12 times throughout the entire week, and that's a lot of content. And servicing those content is about 46 OTT players, right? So let us start with that, and I would switch to you saying, can you break us what the OTT is for the general audience?
Yeah, so, OTT's been there for a while. These are basically nomenclatures, but it's basically content and technology coming together. Content has its own shape and form for many years. Traditionally, it's been linear television. It moved to satellite, interactive TV, etc. But practically, when you look at OTT versus linear form of content or television largely, the real play over here, if I have to zoom in, it's what the consumer is pushing the media companies to do differentially, right? So number one, the consumer is very smart. Consumer is saying, I want differential content. That's how OTT was born. Primarily, consumers have been used to consuming content on a one-to-many scale. So you look at television, it's a family seating, everybody watches the same content. But what OTT did is created that whole one-to-one interaction, and thanks to pricing, the Indian consumer is very, very sensitive on price. So thanks to pricing, data prices, we are the cheapest in the world, by the way. It started with Jio and then everybody else. But the Indian consumer is price sensitive. I'll touch on how this kind of plays globally as well. You start looking at a one-to-one interaction, you actually jump that whole wave of broadband coming into India, right? With falling data prices, we started becoming a mobile-first country. And that's what actually fueled and sparked the whole OTT economy, saying, can I get content in terms of what I need? I not necessarily need content at a particular hour on television. It has to be video on demand in simple terms. Or it has to be catered to me as an audience and not necessarily what my family wants. So the real factors here, which technology has driven, of course, along with data pricing, is something which the consumer says that, hey, this will bring in mass adoption if you provide me a buffet. A la carte won't work, and you'll have to give me at a discounted price. And that is what India is actually teaching to the world. If you look at Netflix, which actually pivoted from a video library to a online streaming model, has realized that while there are paid users globally, not just in India, you also need to offer consumers an option of AVOD. So that is what OTT is. OTT is the voice of the consumer, which tells you what content I want, what pricing I want. It's very interactive and dynamic. So you really need to be understanding the voice of the consumer, unlike the traditional media.
Right, thank you. That was a great introduction. So as we go deeper, I would like to ask both of you to just introduce a little bit of what you are doing in OTT and how you are bringing that entire personalization experience, that media, that enriched content to the Indian users. You want to go first?
Yeah, thanks. So at Xfinite, we've built like a decentralized entertainment ecosystem. The objective is to reduce the friction amongst all the stakeholders, be it advertisers, be it content creators or users. We've built, in short, like a OTT on blockchain, which kind of drives equitable distribution of value creation. So if I have to expand on this a little bit, it's very, very clear that users are actually driving demand in terms of content. We understand and get that content for the user. But the revenue which comes to us from advertising is distributed. Part of the proceeds go back to users in the form of rewards. So in a way, we are like a watch to earn model, where the revenue is given back to the users, and it's very, very simple. The journey here is not for the niche crypto audience. We are bringing mass adoption to blockchain, which means we give user the time and understanding and let them walk the path to say that, hey, let's treat it as loyalty and rewards in simple terms, the way you use your credit card rewards. So you can redeem it for across major brands, you can redeem it, convert it into donation, you can buy, meet and greets with celebs, you can buy merchandise, and then there is an option where you go with the legal route in terms of do KYC and convert it into tokens as well. So yes, it's bringing more power to the consumer in that sense.
That's good. Nitin?
Right. Thank you very much, and great to be here. Thanks for having me. Okay, my name is Nitin Narakhede, and I am the founder and managing partner for the company called as The Alley. It also holds a brand called as Rightsfully. Our main focus is to kind of develop a complete content distribution ecosystem, which decentralizes the entire content distribution for the creators or distributors or studios. So we are kind of an innovation house, and we have been innovating for last almost 4 years. I've been in blockchain for almost six years, since 2016. And the main focus of the company is to kind of provide a platform, a decentralized network, a single storage for distributing the content, sharing the content, creating the IPs, protecting your IPs, distributing the IPs and the content, and then finally delivering it basically on the OTT streams. So we do all at length on the same ecosystem. That's what we have.
That's amazing. So now I would like to dive a little bit deeper. Typically, many of the institutions that you go and talk to, there's always a discussion that is blockchain a solution looking for a problem. But I think what you guys have been doing is actually solving some of the problems. So while we introduce that, what are the problems that you initially saw in this industry, not only as an industry, but for the various stakeholders? It could be the producers, it could be the advertising companies, it could be the creators, could be even companies like you, tech companies who are playing into this domain. So could you just highlight that for the rest of the audience?
So, overall the challenges for OTT or larger the entertainment ecosystem, let's put it that way, is that there are too many middlemen, right? So you look at the stakeholders. Let's start with the creators, which content comes first. Creators actually have this whole challenge to say that if I'm creating, I'm not able to own the IP, right? Because the IP goes to somebody who's financing it, in this case a production house or rather the music label. Creators is also facing issues if you're a small creator and not a renowned one and you want to just start, right? And these days, everybody's a creator with short form videos, and they've got lots of followers. So they have the potential, if they have the financing, to move to mid form content, if not long form, immediately. They face a lot of issues in terms of getting their IPs registered. They face a lot of issues in terms of financing. And for this, they have to go to middlemen. So what this platform can do is eliminate a lot of stuff, and we'll speak about it later maybe, to say that, how can you help these from a crowdfunding platform for content creators? How can you help them on blockchain through smart contracts establish the fact that, hey, this is their content, so that nobody else goes and claims it? Go and ensure that, they are closer to their fans. Being closer to the fan doesn't mean being on Instagram or Facebook. Being closer to the fan is, how you can actually work together with them, how you can monetize, how the fans can get closer to you in terms of, NFTs, etc., which could be in the form of utilities like meet and greets, merchandise, etc. So there are challenges and there are huge opportunities as well. If you look at users, the biggest of multinational companies have fallen prey to hackers. So your data has actually got leaked out. That doesn't happen on blockchain. You are actually not getting anything in return when you are contributing on the platform, so you can be rewarded for your time and engagement. When you look at advertisers, there's a bunch of advertising happening there. For example, when you go to platforms like YouTube, it's still running mid-roll advertising. You skip a button, the user doesn't like it, nor does the brand like it. So can you become more immersive in that form of interacting with the user? Can you actually avoid frauds? right? I mean, there is so much of ad tech technology today which is detecting bots, but it's not completely eliminated. Blockchain can eliminate that. So I think bunch of problems, but the opportunities are far more than the problems and challenges.
Right. That was amazing. So from the tech side, what do you see as the main challenges of anyone who's trying to get into OTT today, and how do you think tech can solve some of those problems? Any thoughts you'd like to share?
Okay. So I think the tech is quite new in OTT as such, and we are, all of us are trying to kind of see how we can solve multiple problems which exist today in the OTT segment, right? But let's take the picture a little bit larger. You know, I mean, so OTT is just the last leg of it, which is consumption, which is dissemination of the content, right? But it actually starts from, like Vikram was talking about, it starts from registering your IPs, right, as a creator. And if the tech can actually give your credits as a creator back to you when you are at the last leg of the dissemination of the content, that could be pretty awesome thing, right? And let me give you some statistics here, right? I mean, in terms of the creators are 78% of the creators in the world do not know how the content flows. What is the mechanism of distribution, right? And how the money is basically being made in the system. Forget about them getting a share of it. And most of them do not earn. You know, 78% is not a small number, and they don't earn anything. Now, that is where I think if you are connecting these dots right from the point of creation to the point of dissemination, right? And you have a stake in that, and you know that you have a share of that, you have a stake in that till the last point, be it micro, and you would be able to kind of earn from the efforts that you have put in at the beginning of the content production, right? I think that is quite awesome. It may not happen with the theaters as such, because theaters, you break the link of the blockchain as such, right? I mean, because there's no connectivity on the chain. But on the digital thing, it can be a revolution, right? And maybe in future, the way we are targeting, and we are working with multiple Hollywood clients at this point of time, and many of them are studios. The whole focus is on connecting the dots right from the creation stage, script writing stage, to the final delivery on the OTT platform, the way the Lionsgate does today, right? I believe, and we are foreseeing that there'll be many models like that which will get created, where there'll be a chain, independent chain for this distribution houses, studios, taking them, giving the credits to the creators, taking them to the last leg and giving them royalties and what is due to them. And of course, all this will cut a lot of middlemen, and even if there are middlemen, they will be basically be credited duly, right? I mean, there won't be unauthorized kind of credits going to the middleman. So I feel that there's a lot of revolution that is coming in the OTT segment on the blockchain per se, but and we have not seen anything so far because people are reluctant to use it. People are reluctant to apply that, right? And we are, as a company, we are taking baby steps, you know, I mean, we are trying to educate them and then onboarding them on the larger scale. So that's what I believe the tech will change.
Right, amazing thoughts. So just to quote some numbers on this, currently, as per industry reports, the OTT garnered about $3 million in revenues in 2022, and in this market is expected to grow up to 12,000 crore over the next few years, right? So here is the big question, right? And we talk about media entertainment. We talked about people not getting due credits, a lot of money going to the middleman, and there's a lot of advertisements as well. So the question is, where actually is the money going to come from and who's going to get it, right? And part of that, the second will be using technology. How do you ensure equitability and distribution of that revenue across the entire flow? So why don't we start with you?
Yeah, so, you know, if you look at money, there are different streams of revenue. I'm sure everybody in this room will relate to their own consumption patterns in terms of content, right? There is a SWOD where you just pay up money and subscribe a service for a month, a quarter, or a year. There's a AVOD, you watch content for free. Classic examples for SWOD is Netflix. AVOD is basically YouTube. And then there is TVOD, which is pay-per-view, which is not very big in India, but did happen quite well in the US earlier, not so much now with price sensitivity. So these streams of revenue will continue, but I think what is being seen very, very prominently as the OTT industry is maturing is that the SWOT piece is growing, but it's plateauing. We've seen that with Netflix, we've seen with a lot of people, to suddenly change and pivot their model saying, hey, there is saturation here, now let me also open up my content. So one needs to be flexible and dynamic in that sense. If you look at Hulu internationally, they've been doing that, right? So you get onto a platform and say, hey, this is the content where you pay, this is the content where it is free, or more so, there is a large opportunity to say that, okay, I'm not just going to be in one place. I see the world actually moving across the ecosystem and circular economy. So can I actually distribute it at the right places? And these partners may not be your competitors, right? So it could be telcos, it could be OEMs. Because all these guys are actually now trying to make money through different revenue streams, right? So if you look at telcos, they've set up teams here in India, right from 150 to 250 people, each of the telcos, I'm talking about the top 2 to 3 telcos over here, to say how do we monetize it in AVOD? Because the CPS is not working for them, it's plateaued, right? So clearly one will have to think of making content more immersive. It's already happening in the OTT space, and Web3 is going to be a big trigger in terms of how do you make it more immersive. Of course, the traditional ones will continue. There's a content recommendation engine, but can you create a commerce recommendation engine and drive content drives commerce? So just imagine users coming on AVOD, watching content. The recommendation engine is throwing not just content, but also probable solutions of what you are likely to buy in the middle. So just imagine there is a breakfast scene in a movie. It's shot 2 years back, and I'm talking about ad tech actually driving this growth, right? So you don't tell the consumer to take a break. And through AI, you figure out, through celeb recognition faces, through the table, that it's a breakfast table and it's not a dinner table, for example. You figure out that there is space on that table and put a pack of Kellogg's for our audience through digital. It's happening. But can you do it differently by bringing in all the stakers together? Or put in juice over there and not necessarily cola because it's breakfast time. So I think content drives commerce is going to be extremely important, but it has to be through proper UI, UX. Right? And it's going to be very, very important for this to be driven through AI and ad tech coming in together with free content coming in.
Okay, can I add to that, please? If that, yeah, okay. I think there's, I'll come to my question later, but just to add to that, I believe as a technologist, right, I mean, there's definitely a play in AVOD, but I personally believe there will be no play in future in SVOD. And you will move towards a fractionalized viewing as such. You know, so it may not be directly proportional to pay-per-view, but it could be proportional to what you want to watch and what you want to pay for, right? I mean, so it can be fractionalized viewing, fractionalized payments, and that would be the key way to attract people for the advertisements, and that's where I think the AI will play the greatest role in getting that interest very, very quickly of the investors when they are looking at these fractionalized viewing, right? So as such, I mean, what I mean by this is, there's a movie, right? I mean, I'm just going to take an example. There's an OTT platform. Today you are subscribing to that and watching everything that is on the platform. And you don't want to watch that. Maybe you want to watch something in the other OTT platform, right? Now, is there a way to do that today? The answer is no. And is there a way to do that in near future? The answer is yes, right? And that's where we have patented a process called as micro-distribution, which would enable anyone to kind of quickly hop into the another platform and start viewing that specific piece of content that he's interested in. But this trend of subscription-based, which we are already seeing from the way Netflix has kind of reducing the subscription fee just to gain the market share, that may not be the trend in the future, but you will see a fractionalized viewing and fractionalized payments going forward based upon the choices that you make for watching.
Right, wonderful thought. So payments, blockchain as a technology will definitely empower more people, more distribution of not only the content, but also the returns, the value, the money, and hopefully we all get to see that. We're closing down on the last 5 to 6 minutes, so one of the big interesting thoughts which also keeps me up is with more and more content coming in. I mean, on the media side, on the movie side, you have the media boards, the censorship, which kind of regulates the content which comes on the big screens, right? Now, as more of this goes towards user-driven content generation, I mean, how do you see a kind of a open source model where content can get moderated for certain media types? Because today even 5-year-olds have mobile phones in their hands, right? So would like to get both of your thoughts on the same.
So look, with more power comes more responsibility, right? So you have to be self-regulated first of all, rather than jumping onto regulators, because if you don't do that, you will see regulators becoming stricter, and then we all sit and say, hey, it's tough, let's make it ease of doing business. So we've seen this across. OTT today started off by showing a bunch of shows which was beyond what was acceptable on the television piece in terms of censorship. But today, it's completely regulated. A lot of short format videos, format apps are also regulated. So you'll have to actually deep dive in each, before a startup starts any such platform, in any form of video, I'm saying, not just long form content, you'll have to ensure that there is self-regulation in terms of, figuring out that this is the right age for this kind of content. India is a diverse country. You need to be very, very mindful in terms of, what you are talking about, different languages, different regions, etc. You'll have to be very, very mindful about when you're talking about a particular topic related to a region or a religion, so on and so forth. So it's very important to kind of drive that, because if you don't drive that as an industry, you will have reverse implications. You rather form an industry body, do it on your own, and that's what OTT industry has been doing. While there are different kinds of shows which may not play on television, it's pretty much there, and there is Internet and Mobile Association of India, which forms like a industry body along with the OTT players, and similar things are very much required in this space.
Wonderful.
Okay, so Vikram has a view from the business perspective, and I'm sorry, I take it from a technology perspective. But as a technology, it goes against censorship if you are using a blockchain, right? I mean, but the way to deal with this is, so of course the story is true if you are actually viewing the content in India, and you have to follow certain guidelines and stuff like that. But what is really key here is that if you are able to kind of do a censorship on any of the content, probably you're not on a blockchain, right? I mean, so you are still managing it in a central way, in some shape and form. If you can do that in a way where AI can manage that stuff for you, it's great, fantastic, right? I mean, then you have a solution to that in kind of doing it as per the regional preferences, cultural preferences, and stuff like that. But our thought is basically that you will have an ability to kind of create different kind of communities which will be interested in looking at certain kind of a content where the censorship may not apply, right? I mean, and that's where probably the connection from the creation to this dissemination to the OTT as a endpoint would possibly be formed. So we are looking at as a very hyper local, very specialized form of offerings in the OTT, which will come in as form of the OTT platforms in future. And you may not see a very generalized OTTs as you see today.
Wonderful. So with that, I'd like to close. Audience questions, quick. Yes, sir. You're in the chat.
Hello. We will be incentivize the customers what type of the content they'll be viewing, and how you'll establishing the identity. And the B part is, as other gentleman said, that they'll be fractionalizing the content, and the two OTT platforms can share the contents. So in these cases, is there some protocol or is some standards are being there among the two OTT platforms?
Is this directed to me or him?
First part is directed to you, second part is directed to him.
Okay.
Quick.
That is smart. That's called 2-in-1. It's extra chance of winning the prize. So, no, very good question actually. When you look at rewarding consumers, don't think of it as pure play to earn the way gaming does it, right? Because here you have to spend time on the platform watching it. The thesis is very simple. We want to drive equitable distribution of revenue. That's the vision. The vision is not for people to keep coming and watching content, you keep giving away stuff. It's going to be algorithm behind which what we make revenue, a part of it goes back to it. And what we're trying to build in over there is experiences which money can't buy beyond just, tokenizing time and attention. So that's very important. We're giving a plethora of things, and over a period of time, this reward recommendation engine will also help us to bring the content drives commerce experience alive. So we'll understand what content you want. We'll understand what rewards you want. So we're mapping you from an overall perspective in terms of how do we tokenize time and attention. This is also input for us, not just a reward in terms of what kind of content to acquire or create, what kind of reward partners to get on board. So there is a lot of in-depth feedback which we get when consumers tokenize their time and attention in the real sense. We also do this across platforms, and I'll leave the second half of the question to Nitin, but we also do it across platforms where there's simple API integration going in. So at the moment, we've got 11 million users. This is almost at zero marketing cost, and this is through partnerships, right? So we are integrated, for example, with JioPhone, where our content goes in, the consumption happens. In version 2, we'll start giving them rewards as well. We are integrated with SpiceJet as in-flight entertainment for their airlines, so on and so forth. So bunch of partners, but really the thesis over here is to say that how do we spread across ecosystems, may or may not necessarily be other OTTs, but it does work together as a circular economy as far as it's our content and our rewards.
Yeah, so quickly on the second part of it, see, the one part is that you are doing an API integration, that which is happening today. What exactly Vikram was talking about, you connect to Jio and you are on, right, with API integration. The second part is that you are on chain, right, on both the platforms are on the chain, and you are connecting to something called as IPFS, which is completely decentralized storage. It could be Filecoin, right? And that way you really do not need an API connection. What you need is basically hopping onto an ability to do a multi-chain hop, right? And connecting to the data. So that's exactly what I was talking about, that probably the future is all about that. All the content will be on the decentralized storage. And then all the platforms will be getting the content based upon the user preferences from there, right? And that's where your AIs will have to work on AWOD models and monetization models and stuff like that. So they will have to become smarter based, as compared to what it is today.
Right. So thank you. I hope that answers your question. Any last thoughts from anyone? Go ahead. Last.
Yeah, so my name is Smriti Chaudhary, and I have a question. As in traditional finance, when it goes on blockchain, it's called DeFi. It's a beautiful word. So blockchain on OTT, what do you think it should be called? Great.
Yeah, I named that already. I called it DDI, so decentralized distribution. So I'm already using it, by the way.
What would you call it?
Any coin?
Well, for me, Web 2, anything, right, including OTT. Web 2 is a house, and a house can be rented. And Web 3 is a home. You can own it.
Great.
Right. Thank you so much. Ladies and gentlemen, please put our hands for Vikram and
thanks a lot.
Nitin here. Thank you again.
Thank you so much to our esteemed panelists. Thanks a lot. Thanks a lot. Ladies and gentlemen, we now move on to our last panel discussion of the day, titled The Game of Lending. In this session, panelists will discuss how blockchain mortgages, business loans or bonds, and how crypto lending is changing the way we use financial technology. For this session, we have Swapnil Pawar, founder ASQI, Dipesh Karki, co-founder and CTO, Lending Club, Deepak Ghadge, co-founder Meta Mentors Advisory. And to moderate this session, we have Prasanna Lohar, Chief Executive Officer, Blockstack. Please join me in inviting our esteemed guests on the stage. Welcome. Over to you, gentlemen.
Yeah, good evening. I think it's been a long day for everybody out here, and looks like everybody must have got a lot of knowledge around blockchain and various other use cases of blockchain since morning. I think this is a very prominent topic, lending or lending game, or how do we really utilize DeFis or cryptos or blockchains around the way we have seen lending since so many years. I think if you look at the overall banking model, right, which is a regulated banking model, we have seen how lending happens in a bank branch. We have to reach there and fill up the form, wait and watch for 10, 15 days, and after that you may not know, right, whether it will happen or not. I think from there on, lending has moved on to the digital model, which is on mobile phones or internet banking. We can raise a request, and people are there to really honor your request or meet you on the ground and say this is your credit card, or this is something EMI option for you, or a home loan or a personal loan, car loan, secure lending, unsecured lending. There are various business models we have seen. But the way technology changes, or the way the human behavior or customer behavior is changing, lending is, the way we have seen payments is changing, right? Payment is becoming more and more 24/7, on the spot, immediate. Similarly, I think lending is also moving from the traditional lending to the digital lending towards more and more intelligent autonomous lending, right? And it is well supported by regulators, banks, many more new technologies, AI, ML, blockchain, and so on. So today we have a prominent panel out here who will teach us what is meant by lending, how all of a sudden traditional lending is moving for P2P or unsecure or secure or regulated lending all about. Which are all those use cases are coming up? And maybe we'll address some of those questions. What is DeFi lending and how it has to be regulated and so on. So we have Dipesh, we'll start with you. Maybe you can touch base. What is this lending all about? How, say example, Reserve Bank of India, or in a banking terms, say example, there is a 100 rupees deposit. That particular 100 rupee deposit will be circulated until its values go to 3.44. That's a norm for banking. What does it mean? Say example, 100 rupees will become 344, and maybe that 100 rupees went to another bank, again has a value of cascading value. That is how banking is moving transparently, and that is why it was an imbalance in 2008. Since then we said, why not to have some kind of a crypto-based payment or a banking ecosystem in form of a Bitcoin. But the aspiration was there, but couldn't meet up because regulator or banks are far more ahead for providing the actual service to the customers. So Dipesh, your initial thoughts around what was the lending and how all of a sudden lending is getting changed? What is your aspiration as a Lenden Club, and what's your journey all about? Yeah.
Thank you, Prasanna. So, first, I would like to say that coming here made me realize that I believe I'm the only curious child here. Everyone else is expert with regards to Web3 digital lending in the the blockchain space, right? And I'm the only one coming from the digital lending space. So, thank you for giving me this opportunity. I've got a lot more to learn than to teach you anyone, in fact. So I'll definitely talk about it, but not sure if I'll be able to teach you on the very topic. Nevertheless, I think it will be fun to understand on how the journey has evolved with regards to changing the mindset of Indian customer sets from a traditional physical to 100% digital lending as on today, right? So we started Lenden Club in 2015 with an idea of bringing both investors who are looking to invest in an instrument and borrowers who are looking to get a loan to a digital platform. So with that idea, we started Lenden Club as one of the first P2P lending platform in India. The very challenge that we faced at that time was, outrightly customer rejecting us, saying, "Hey, where is the physical form? Where do I sign?" Right. So that was a mindset change that we had to fight through. And that was just one kind of mindset change. Apart from that, there were not many infrastructure, to guarantees from customers, right? There were not enough APIs, maybe a mandate or setting a standing instructions back then. So there were a lot of challenges back then for sure. Even the KYC was a large part of such challenges. But in the span of last 5 to 7 years, things have changed drastically thanks to the regulators who have been pretty much conscious yet pretty much progressive with regards to bringing in right kind of regulations. As on today, so I remember we disbursing our first loan in about 61 days of listing it in our platform, as opposed to today wherein we are doing more than 55 or 60 loans every minute. So that's the speed at which we have been innovating as on today, right? The first loan that we disbursed was of 2 lakh rupees, and today we have disbursed more than 10,000 crores.
Excellent. So what is your NPA ratio?
So our NPA, again...
and maybe you can talk about what is meant by NPA.
Yeah, so NPA simply means non-performing assets, right? So again, I believe majority of you guys already know about it. Nevertheless, when you talk about lending, that's the first question that every person asks. But we try to explain it in a different way, wherein we use the term default adjusted return, which on an average our investor is making up to 12% in our platform. That is as near as our platform's average. The idea of making such type of return is the use of hyper diversifications of any kind of investments that an investor is making in our portal. So because of which we're able to bring the return to such a stable value, yet at such a high margin to our investors. So the default on our platform, because the journey is 100% digital, definitely there are some defaults, but then what we've done is we've made sure we have tightened our screws during the underwriting so that the bad kind of profiles are already filtered well. And trust me when I say this, Prasanna, there are profiles that we have found are valid and proven by the financial institutions, yet are a fraudulent profile. So it looks like it's not just me, but then there are the innovative banks and financial institutions that are also taking these challenges to make some mistakes, learn from it, and fixing it, and trying to make another mistake.
I think that's how banks are now learning. It is not only traditional, but it's like a partnership model, right? Since last 4 or 5 years, we could see that if you stand in a Chroma, right, you have an opportunity to do lending with some of those partners, or you have another digital model like co-lending or something like a peer-to-peer lending and so on. So I think Swapnil, very good journey out there with a Neural. Your initial remark around a Neural, how you have started the journey around lending,
Thanks, Prasanna. For me, I was always in the investing side of things. In quant hedge fund, that's what I was doing before I started on this journey. And obviously, a lot of faith in quantitative logic in that context. And we thought we'll apply that to credit also. But it's a very different ballgame, as you can imagine. What got me onto this journey was the simple question, can you use Ethereum to do a small business loan? And my answer in 2017, when I first tried to write a Solidity code to that end, was no, we couldn't. Because all loans in DeFi are over-collateralized. So you have to have crypto yourself to start with before you can borrow more. So for all the noise around DeFi, what it has been is leveraged crypto trading. Now, if that's the case, how do we actually use blockchain tech for financial inclusion? That was the starting point of our analysis, and that's how we set up Neural as a layer 1 blockchain, because we found that the challenges essentially are not tech as much as legal and compliance. And the biggest one is, of course, identity. The anonymity of current blockchain, layer 1 blockchains, prohibits a lot of fintech businesses from adopting. I can tell you, for example, if Lending Club were to think of going on Ethereum, they would be like, everybody's anonymous. What do you know about this person? And that also has a linked point that they can't do anything other than secured loans. Because it's anonymous, you can't do anything other than secured loans. And that already excludes about 90% of small businesses. So how do we make unsecured lending happen on blockchain? That's the problem we're trying to solve. And in that journey, we made 2 major bold steps. One is identity on blockchain. Neural is one of the few chains which actually enforces KYC at a blockchain protocol layer itself, not only at application layer. So all wallets on Neural are KYC wallets. You also know whether the natural persons are legal, which jurisdiction are they in, are they accredited or non-accredited. so on and so forth. And if they are legal person, then who are the UBOs, ultimate beneficial owners? So that a fintech platform can actually be compliant or be comfortable about being compliant if they use Neural without having to solve for it themselves. But the crucial part still remains, how do you do unsecured loans? And that's where in DeFi, if you borrow and you default, you lose your collateral, sure, but there's no other repercussion. And we want to actually take that away and say there will be a repercussion if you repay also, as well as if you don't repay. And that means it's like a decentralized credit bureau. We wanted to set that up. And so in Neural, it's essentially, there's something called a trust network. It's like a social graph of relationships between individuals and small businesses. So you can infer from that if someone has been generally honest or generally dishonest, and also what is that individual's social capital, so to speak. That's what we want to formalize and use in lending as well as many other situations which require counterparty assessment.
Yeah, I think wonderful. So, Deepak, your initial remark around lending, how it is changing for last few years, how all of a sudden DeFi is becoming so prominent world in the lending world. May not be in India, but outside of India, it has become some business model for many companies. Yeah.
Yeah, thanks for having me here. And it's a very important question. Obviously, DeFi, if you look at it from 2020 onwards, it started picking up. And last year, it hit the highest level of 180 billion. And then things have happened around that. Now, what DeFi provides is the speed of lending. And because like in the traditional or even digital lending, where the banks, you have to go through the operational hours. What DeFi does is 24/7 you can run this protocol, and then you can, the lender and the lendee can always do the transaction. If the collateral is safe and if you are protecting the investor's interest, this protocol is obviously here to stay. And there are many business models which will come and business processes which will come in. Like we have for millennials where they need micro lending, right? For buying a gadget or something where you can pledge against a salary, advance salary. And you can lend this on a 24/7 or any medical emergencies if somebody wants. You generally go to a peer or a friend, right? So when you don't find that, probably DeFi is one of the best protocols to use. See, there is one story which I just wanted to start, just share it here, is how Kotak made it big because of the discounting factor itself. When they started, the fixed interest rate was around 6 to 7% and the lending rate was 17%. What they did was they discounted the 17% to 16% and they placed the invoices against the Tata. One of the trusted group was Tata's Nelcos. And now Nelco had 1% discount against the banks. And they used Kotak's network, and Kotak family promised the investors that they will give 1% more, or 0.5% more than the fixed banking fixed interest. So for the investor, if you can secure that funds and if the monies are returned on time, if you show value to them, you can increase the liquidity pool. If the liquidity pool is safe, then you can obviously lend faster, and you can build trust. And if you can build a governance around that, you can build credibility scores, and which will help other platforms to use those scores. I think that is a moving trend which we will see in India. Also, we will see this adopting once CBDC comes into picture, and if that comes into the DeFi protocol, I think we will see a faster adoption. And if you look at micro lending, I think that's a quick win for DeFi to get into the become much better adoption.
Yeah, so in a regulatory aspect, it's a Reserve Bank or a central bank decides the rates of lending, right? And based upon banks to bank aspiration, they play around that repo rate and so on. Who decides the rate in DeFi?
So basically, it should be between the two parties.
Yeah, so that's a problem all about, or could be a learning opportunity all about. So going ahead, there are a lot of challenges in current traditional model of lending. error-prone, long, lengthy process, lot of maker-checker, and lot of filing process. From there on, banks have really moved their technology stacks onto digital stacks internally, as well as they partner with partners like Linden Club. Gone were those days. Now you are buying some tickets on Make My Trip. You have a loan available there, right? You are standing in any shopping mall. You have a loan available there, right? And EMI schemes are available. All of a sudden, we could see last 2-3 years there was a model of a buy now pay later. Eventually, understood by RBI, they done some kind of changes, right? So there are a lot of tractions are happening, right? So in my view, on long term, RBI also understand power of DeFi or a technology behind that. We need to see how we marry the technology aspect to the regulatory aspect to bring on a large scale thing. So in between what they have done, why not to have apart from collateral lending or a mortgage lending, let's have or let's study some alternate data which is available in the public domain, which is relevant to that business or relevant to that person, right? So what are those similar kind of use case models, Swapnil? I think you guys are driving it really well. So which is that prominent use case which you have moved it from a normal traditional business model to the blockchain based using the technology and giving a larger opportunity for operational excellence? Yeah.
Certainly. So before the answer, I'll just say my favorite recommendation to all fintech businesses is if you don't need to go to blockchain, don't go to blockchain. Blockchain is a very expensive affair, and it is also going to be a lot of drain on your tech team's bandwidth. So use it only where it actually adds value, and that list is neither exhaustive nor zero. It's somewhere in between. It adds value in some specific areas. Let's just focus on those. And my two examples, one covers decentralized audit, and second covers collateral authentication. Right? So what the collateral authentication is, warehouse receipt financing. So farmers bring the goods to the warehouse manager gives them a receipt, and they go and borrow against it. That's the happy flow. The sad flow is they forge the receipt. There is no goods in the warehouse. And they go to a bank anyway and get a loan and then default on it. And the bank says to the warehouse, where's my goods? And they says, this is a fraudulent receipt. Second is, the receipt is genuine, but they actually collaterate two banks. One's with, let's say, a scheduled commercial bank, and one more time with the local cooperative bank. If they don't default, it's okay. But if they default, one of the two is going to be holding a loan which is not backed by collateral. So most banks stay away from it because of these reasons. What we are trying to do now is the warehouse receipt is a token on a blockchain, on Neural. So the farmer has a physical receipt also, but that has a QR code which queries the chain from any simple phone. It doesn't have to be any specialized software. So anybody can see that, one, is this token actually representative of warehouse receipt? Two, is it already mortgaged or not? And so both things are solved. Lending is actually, the lender is that much more comfortable in actually giving loan. Secure that this is a valid token and not already mortgaged to someone else. And after it's mortgaged to me now, it will not be mortgaged to someone else again. So that's one use case, which is collateral authentication. And we just stop there. Right? That's already a big value add. And second case is where SME comes to a bank or a DeFi lender or a TradeFi lender and says, this is my property and I want to borrow against it. This is not a Bitcoin or Ether that you can verify very quickly that this is genuine. And verifying that is a very cumbersome task anyway. So bank or a TradeFi, DeFi lender may not have the expertise. So what you do is essentially appoint a panel of 50 lawyers, which are already available on call, and send to them anonymously this doc and get their votes, whether this is valid or not, and let the community decide that this is actually a legitimate document or not a legitimate document. And that becomes like the validator DAO, if you will.
Excellent.
So yeah, those two good cases.
I think that's how there are DeFi protocols available, and DeFi protocol mostly not regulated, but although there are a lot of learnings, how do you utilize same protocol technology in normal banking who is regulated. That's a very good example, Swapnil, and good to see that not only warehouse financing, but many more collaterals can come under the same engine which we have.
Invoice in particular.
Yeah, invoice discounting and yeah, absolutely. So I think typically banks, what is that banks are looking for, right? So banks are looking for better customer experience for their customers, better onboarding, ease of onboarding rather than wait for a longer period, internal operational excellence. Banks are looking for very most important as far as the lending is concerned, less of NPA, rather Zero NPA. That's how the performance of the banking is measured, rather than how many savings account or how many deposits they have made at the end of the day, right? So how blockchain will help, right? So Deepak, any views around how blockchain can really help for all these aspiring?
See, one of the things which blockchain will help with DeFi is definitely the NPS will come down because it is open, transparent, and like Swapnil said, if you can trace the asset and it is not mortgaged with multiple areas. And today in traditional lending where we've seen all the defaulters happening, they're flying out of the country, then you cannot bring them back. So all those things should stop with DeFi. If you have proper due diligence, you've done your KYC, if you have done your checks, and if it is not mortgaged against multiple banks, where, see, all frauds which have happened is because of human greed. Technology is beautiful, so technology has got blamed because of human greed. And whatever has happened in the current recent times, it's all, no technology can control human greed. And if we can build an ecosystem and a governance across decentralized platforms, ecosystem, all blockchain platforms can come and build the trust into the ecosystem. I think we have a long way to see this
So you
change.
mean to say that all banks should come under one single chain, where, say, example, Mr. Malya goes to bank A and says that, let me please give me a loan. Loan is approved. But with the same collateral, he goes to the bank B. Bank B says that, oh my God, you already taken a loan for the same collateral with the bank A. That's how blockchain can really help to that chain, where all the banks are on the same lending chain. Or another example, there are some ecosystem called as a syndicated loan lending, where a large scale or a large ticket value of a loan is given by 2-3 banks. So the payout can happen, and every bank is aware the payout has happened. So how it can happen? With the help of a so any views, Swapnil, on that?
So I would say not just necessarily a single chain, but interoperable chains.
Interoperable.
The good news about Web3, the good part is very interoperable. Most of the tech is very interoperable. So for example, I tell a lot of my application layer partners that just be aware of how to handle a JSON file. That's it. Because I don't care if you use Python, JavaScript, use some new language that you invented, that's fine. We'll talk to each other in JSONs. This is my data, this is the signature. You verify the signature using your version of SHA-256. As long as the underlying protocol is the same, the abstraction is same. Languages, you use Oracle.
Despite that, they make sure that they make their payments on time, to keep a good credit bureau score, right? Doesn't matter even if it is reported a month later or so. And then there are other type of customers who are not comfortable using the newest technologies with regards to making payments. So for them, UPI is definitely one of such revolutionary solutions that's available. And now with the advancement of UPI mandate, I'm sure we'll be able to onboard a lot more customers, even the NTC, new to credit customers into the ecosystem. We have built a different kind of underwriting to analyze these customers and even to make sure that the collection mechanism for these customers are well handled. And the third one are the ones who try not to cooperate. For them, I mean, we have used a lot of NLP-based calling solutions, to make sure that, calling n number of customers at this scale, right, wherein we are more than 6 million, we have a customer base of more than 6 million customers. So calling these many customers would not be feasible at a time. So we do have NLP-based natural language processing used in order to, remind customers of the upcoming payments, keep different degree of follow-up, making sure that you're not violating the regulations, right? Being a regulated body, right? So these are some of the innovations that we're doing over the last couple of years. COVID being one of the blessing in disguise, wherein we did a lot of innovations with regards to these technological innovations. And we also did a lot of tie-ups. In fact, I'd be proud to say that we are the first and the only P2P lending platform to be offering loans through Google Pay as in today.
Yeah, excellent. I think we are running short of time. But in interest of time, RBI or in Indian context, many other regulators has opened up windows, right, for how to do a better lending. They have announced guidelines for digital lending, primarily considering the end user, customer. Now, customer will have a transparent process, who is lending them. All of these lenders should have a credit license. I think here onwards, digital lending is a game for banks, not only banks, for all the supporting partners. They may use blockchain, they may not use blockchain, but ultimately regulator will come into their home and will see how the lending is really happening, along with the right compliance and the regulation in interest of a customer. I think it's very easy for any new tech company to create a better experience, onboarding experience, use available data, collate or collaborate with the banks with their APIs, their lending stack, and create a better business model. So any startups out here, they can really try it out, right? And it is a very successful model. I think last 2 year, digital lending companies has almost 30 to 40% out of the.
So sorry to cut you in. Sorry, actually we are running out of time and our.
Yeah, that's my last remark which I am speaking. Sorry to disturb you. So in the sense, if you see the overall adoption or overall investment raised in the last 1 or 2 years, lending is a good business model ahead of payments and ahead of any other insurance and so on. Because in India, there are larger game around lending. There are larger customer, almost 80% of customers still look for a better lending, right? SMEs and so on. And the government, banks are now agenda or aspiration to use co-lending, partner lending, many more other models. Account aggregator is going to change a lot when it will be operated with SBI and many other banks. So wonderful discussion today, Deepak, Swapnil, and Dipesh. Yeah. So thank you so much, organizer, for giving this opportunity. Thank you so much. If there are any questions, we are around. In the interest of time, let's have this discussion offline. Okay. Thank you.
Thanks, everyone.
Thanks a lot to all our panelists present here. Thanks a lot, sir. Well, given the enthusiasm that we've seen here, we will soon bring hackathon in emerging technologies to the city of Bangalore. Okay, moving forward, we now bring you to our last session of the day, titled Business Imperatives of Metaverse. For this session, we have Nitin Gaur, Global Head of Digital Asset and Technology Design, State Street, who will be joining us virtually. Here he is. Over to you, sir.
First of all, it's really an honor to be a part of this conversation. A lot of familiar faces that I've been following, especially for some of the last conversation, and certainly interesting to chat. I'm going to spend now and the last session between you and whatever plans you have in the evening. I will say this: another landed in Bangalore or Bengaluru. I grew up in that. It's my hometown, so please consider it. I'm there. I'm going to spend some time on talking about business imperative metaverse. I'm spending, can you all hear me? Okay. I've been spending some time figuring out that besides the element of the AR, VR modalities, what are the business imperatives? How do you make money from Metaverse? What are the sort of the tenants and the entities involved in understanding the digital asset ecosystem? So this deck that I have prepared for this presentation reflects some of that learnings and understandings, both in terms of practical work, but also in terms of thought leadership piece, where as we begin to evolve the space and as this begins to take shape, that it's not just about gaming and AR and VR, there's some serious business imperatives that are yet to be discovered in the space. So having said that, a few things, right? And I've been now spending some time with some of the thought leaders in the industry, both from blockchain perspective, but also in terms of academics, economists. If you define what metaverse is, which is a very fluid definition today, that if you apply things like cyberspace, and this is the few definition that we research into what people are talking about, who are the entities who are defining what metaverse is, you'll find that if you replace things like cyberspace or virtual space or sort of these ubiquitous cyber virtual entities, the notion of metaverse remains the same. This is by Wired magazine. I did this experiment myself in terms of how we define metaverse and by the definition of some of the pundits in the space. And the second bullet that you see here is on snow crash, which was the original definition, the introduction of the word metaverse, which is a hypothetical iteration of this sort of singularity model, where you have a single universal and immersive virtual world that sort of amalgamates the AR, VR, but also your physical and real world that we live in. And that resonates with a lot of thematic elements of where we are with what snow crash, the illusion also of snow crash, has been quite vocal in the space. And if we look at what Forbes has talked about, very generic, that you're suddenly mixing, this is what mixed reality is all about, is virtual reality and AR, and looking into sort of immersing yourself into where the gaming ecosystem relies today versus where things are moving. So I did this collection of, and if I'm in person with you all, I would actually ask you to raise your hands to talk about how many of you can truly define and understand metaverse. Because a lot of metaverse conversation, as you can see, the backdrop of this slide is about an AR, VR element. So it's not just about the modalities of how you access the ecosystem, but there's a bit more serious element to this in terms of underlying convergence of Web3 and creator-led economies and blockchain that facilitates movement of value. And that's what I came here to discuss, is my understanding of how I define this space, having been in this space for over a decade. So that journey begins with the first step, and I have a few parts of this presentation where I'll spend some time in what you may have already discussed all day today, some of the, so think of this as a summary deck, where we look at tokenization as one of the foundational elements of what sort of relies upon transfer value in the ecosystem, is ability for us to be able to ensure that we are ensuring that there's a digital asset in the ecosystem. The digital asset is represented from tokenizing an asset, and the token represents an asset. And this is not just an asset that comes from incentive economic systems. These are Bitcoin, Ether, and many of the layer 1 protocols, but also representative assets. And these are tokenization of existing asset classes, what you begin to see now in terms of non-fungible tokens, and tokens that represent your identity, in future represents your healthcare. We begin to look into what an asset is. So the process, which is tokenization, the product, which is token, and the asset that is what is represented by tokens, are the three constructs I'm dealing with here. And this becomes central to what the new world of metaverse is defined as. It's not just about a modality of access mechanism through AR through your phone, or VR through your goggles, or a mixed reality mechanisms where I could be in a physical location and still be able to use some of these gadgetry that allows me to access the ecosystem. It's more about things of value that's emerging in that ecosystem. And that's why I begin to focus more on assets, servicing of assets, digital rights management, only because in many cases this is evolving into the creator-led economy that And that's essentially some of the foundational tenets of Metaverse as we see it. Next thing I would like to focus on is three constructs which are oftentimes in blockchain ecosystems are discussed separately, is the notion of digital assets, smart contracts, and blockchain itself. So blockchain, as you know, is a foundational technology for transaction systems. Smart contract provides business ruling elements, and digital assets are sort of either induced tokens. These are tokens that are being induced that represents either an identity or it represents something of value in the system, whether it's a gaming construct or whether it's a healthcare record, for example, as I mentioned earlier. But these three constructs, the digital assets, smart contracts, and blockchain, are no different. They are part of the same equation, that they don't exist in isolation. So you can't have a token and not have blockchain. You can't have blockchain and not have token. And you certainly need certain smart contracts to be able to ensure that some governance mechanisms. And decentralized autonomous organizations, as you may have heard all day, are a sort of smart contract. So I just want to sort of lay that out for more sort of level setting, that these are all part of the same coin and they don't represent different constructs altogether. Of course, these are constructs that represent in most DLT blockchain systems per se. Now, there's one slide that I would like to take away from this, introducing digital assets and smart contracts, is this particular slide. If you look at the term metaverse, we use the term portmanteau, which is basically amalgamation of two words, is meta and verse. And if you look at the word itself as metaverse, meta is a self-descriptor, and verse is the shortened version of universe. And where this comes to life for me, and this is how I define it, is by illustrating this to a story. That imagine you are wearing a VR goggle and your biometrics identifies you as an individual that unlocks your wallet. Suddenly you're able to spend your time in gaming and you earn reward in form of an NFT, for example, non-fungible token, because it's unique. And you're able to financialize these non-fungible tokens through a DeFi protocol. You then look into understanding as to how can you convert the DeFi, whether it's inversion into some of the elements of financial primitives, borrowing, lending, buying and selling and using exchange mechanisms, converting them into, let's say, stable coins, and eventually converting them into fiat. Now, for all this to work, you need a few underlying constructs. Of course, there's interoperability challenges that we've been dealing with for almost over a decade in the blockchain world. But the fact that your identity in the gaming world, which is unlocked with the wallet that you own through a mechanism of your biometrics, which is, let's say, this iris scan, and eventually your identity being able to traverse through these different universes. So gaming is a different universe, decentralized financing is a different universe, looking into creating content, which is what we do with decentralized social media, is a different universe, and eventually connecting to the existing financial system is a different universe. So these are all different universes. And the self-descriptor, which is the meta element of this entire equation, is the ability for you to traverse not just the token, but also the identity that is allowed to be able to go into these different ecosystems, preserving not just your identity, which is you identified in all these ecosystems exactly how you would if you had a driver's license or passport or Aadhaar card, for example. That's essentially where this is heading. But for all this to work, we need to solve a few things. We need to solve interoperability, which allows us to be able to move these assets to the ecosystems. We also need to be able to solve for valuation. So for example, if I'm taking an in-game asset and converting them into a, let's say, a stable coin that I can subsequently convert it to deposit into my bank account, well, the value of the asset has to be known, because at the end of the day, somebody is collateralizing it, or somebody is buying it from you, and no one's going to buy an asset that they don't know the value for. The valuation mechanism has to be known. So not only you're dealing with what blockchain has done now quite well for a decade in terms of verification validation systems, of moving these assets to these different ecosystems, but having a seamless mechanisms to preserve your identity as you move the assets, provide verification validation of these assets as you provide an exchange mechanism, provide the valuation between these different ecosystems. That is the challenge that we're dealing with, and that is the true value of So you do want to discern between the fact that your AR, VR are simply modalities. This is entry points into the ecosystem. But at the end of the day, what we as an industry are building is around a value transfer ecosystem, is all around the ability for us to be able to transfer value multiple ecosystems. And the foundation of these things, we use the word Web3, and I'll spend some time on Web3 in a minute and define some of the foundational tenets. But the ability for me to do all these things, of course, rely on some level of maturity, which many of us, not only in the room, but around the world, are working towards. But you have a reliance upon the constructs around wallets and tokens and DeFi and layer 1, layer 2 sort of protocols per se. So if there's only one slide I think I would focus on is I spend a lot of energy trying to be able to understand what the ecosystems around it. And then eventually you have the elements. And I think I've been given 7-8 minutes to drive this. But the idea behind Metaverse elements is the fact that you have technologies, and it's not a single technology, it's user interactivity, it's AI, it's blockchain, it's edge, it's combinatorial elements of technologies. You are in between as an individual, but then you take an avatar which represents you and your identity, and then the identity is then interacting with these truly digital ecosystem. What I want you all to take away from this slide is that we all have been talking about digital transformation now for over, I would say, a decade. But what Metaverse brings to life is the shift in our thinking from digital transformation to transforming digital, which means we've been digitalizing this world for quite some time. It's time to transform the digital itself, which is the ability for us to have a digital handshake, engage in digital transactions, engage in digital verifications, and there are many drivers for that. Of course, the demographics, the changing mindsets, the cultural elements, and the next generation is driving the need and demand for some of these things. And what you see on the left-hand side here are some of the things that are driving the elements that are driving this technology per se. So some of the benefits, I spent some time, of course, high-cost industries which have high labor costs, high-end skills needed. Space tech is a perfect example, going after specialized skills that require you, whether it's specialized healthcare, specialized automotive, specialized aeronautical industries. We can begin to now see digital twin, for example. So while 3D printing enabled the ad hoc manufacturing, especially in context of space tech, we begin to now see some of the benefits of Metaverse is ability for us to be able to treat the notion of digital twins, the immersive commerce, creating new business model and having a one-to-one customer interaction as some of the primary drivers of this technology per se. So one thing that comes up in construction of Metaverse, which is I would say, ecosystem evolution, which relies upon the underlying tech, is the Web 3.0. And to get to Web 3.0, you need to know the evolution. I'm sure many of you in the room, if you're familiar with what's happening in the blockchain ecosystem, Web 3.0 oftentimes is defined around the elements of, let's say, the ability for us to have creator-led economy, which means that suddenly now, what Web 1.0 was, where we simply consume content, Web 2.0 allowed us to interact with the web, which made us comfortable with transacting on the web. Suddenly we had HTTPS, we suddenly had some of the constructs around elements of being comfortable buying airline tickets, buying banking on the net, and then led to evolution of big tech, which then had its advantages that we were able to connect effectively, but also has disadvantages in terms of misinformation, disinformation, and the leak of data, because we used what was information networks to move things of value. So Web 3.0 was aiming to solve the issue which Web 2.0 was breaking through its seams, is to be able to address the notion of the fact that suddenly you're in control of your data, you're in charge of your consent for your healthcare records, but also every like that you do on social media. It's your data, and you have the ability now to monetize the data. And remove some of the elements of the challenges around cybersecurity risks that goes with it. So Web 3.0 was an all-encompassing term to deal with it. And Web 3.0 also, because of the fact that it deals with value transfer, deals with some of the enabling of the end user. Of course, the end user is not ready yet, But the thesis behind Web 3.0 is to close some of those gaps, both in terms of defining new use cases, technology, and business models that go with it. Again, I have short time, so the idea is to inspire, not to educate. So you'll get the deck, and you can look into some of these other elements. But the Web 3.0, again, relies upon wallets, tokens, DeFi, layer 1, layer 2 protocols for scalability, security, financialization of the token asset classes, and wallet that gives you an accounting mechanism. These are constructs of pillars that build upon a governance framework, and Web 3.0 is an amalgamation of these technologies that go with it. I'll not spend much time on token. I think you must have enough conversations that token is a token is a token, but the industry has looked into defining the different characteristics of a token. Again, I'm sure you all have familiar with some of the token elements. I'm trying to race against the time that I've been being reminded behind the scenes. But the business imperatives, and this is another slide I would like to take home with you, is what gives token its value? How does the industry commercialize itself and make money from it? So it's not just about, and this is a difficult month for all of us, what happened and what transpired since March with 3AC Voyager and Celsius debacle with what's happening with FTX. But we have to go back to basics and what gives token its value. And just like TCP/IP, which was a transport layer protocol for information dissemination, these layers are now emerging as the value dissemination sort of protocols from a blockchain perspective. So we always talk about this fact that internet was there to move information and blockchain is there to move value. So this protocol layering is coming from that perspective, that layer 1 is layer 1, layer 2, layer 3, layer 4. What I want to focus on here, and I won't go through all the layers to be succinct in terms of time, but what I'm focused on, who's the next Amazon in this space? So for Amazon to become who they are, which is the ability for you to order something and it shows up at the door the next day, or in some cases the same day, they go through 60 or 70 different systems. That includes payment systems, tracking and tracing, logistics, shipping, and you name it. There are about 70 systems that they coordinate so you can get your order the next day. I'm trying to focus on who are those entities that have the potential of being the next Amazon in this space. Also keeping in mind the investment that needed on the underlying layers. So that's the intent of this particular deck. And just like you have sort of different universes, like NFT and gaming and DeFi, I just took an example that each of those universes, which is why it's Metaverse, that each of those have their own stack. So in this case, you have the different stack, and I have this stack for NFTs and for example, for gaming ecosystems and what's being evolving now in information dissemination ecosystems that lets you monetize your data that you own. But you also have an emergence of a lot of companies that are raising funds who are not token-based companies and token-based models, but they service the industry so they can build the bridges between the existing system and the new system. And this is more in terms of finance and DeFi because you now have regulatory compliance and other elements that have to coexist. And what you see on the right-hand side, the vertical adjacent support services. So these are also valuable startup companies who are providing valuable services with very high valuation mechanisms. So you should look into those elements that go with it. I have 3 more minutes, so I'll just quickly wrap things up. Here's the market, and I did some research in terms of what Citi and Goldman Sachs and JP Morgan have all. If you look at the numbers, it's staggering from anywhere between $8 billion to $13 trillion from Citi. And when we compare to internet, I think that the reason why you have this staggering valuation mechanism is because every of these think tanks and consulting firms, financial institutions are trying to understand not just the disruptive element of blockchain and DLT-led Web 3.0 ecosystems, but the fact that you are now dealing with banking unbankable assets, ability for you to be able to, borrow money from the ecosystem on your own future earning potential. We've seen that glimpses of that with basketball players and everything else, and you as an individual, me and you as an individual, being able to raise funds in our own reconnaissance. I think that's where things are going, where we are trying to figure out as to what happens when we are suddenly bringing all kinds of things of value in the ecosystem and you are dealing with financial primitives, where DeFi protocols and financialization of these tokens, what it's leading to. And spend some time on this, because I think this is where the opportunity is, not just for traditional entities, but the entire ecosystem that's building new products, new services, new technologies. And and this is where you're heading, and what's driving the change essentially is not just technologies that are going into it and the maturity of these technologies, but also the valuation of concepts and changing demographics, economic models, cultural goals, newer sort of what the industry calls degens, and I'm going to call them as digital natives, are driving the ubiquitous shift at a global scale that we all are dealing with this at the same time. And last thing I would say is, $471 trillion, the global sum total of all the bankable assets. These are your homes, your cars, your mortgage, your bonds, securities, and all the things that banks are used to value and provide financial services. But you also have a huge element, which is what the ecosystem around the other side of hybrid and non-fungible tokens represent. That is non-bankable asset. And that is where we see this massive valuation coming from, is ability for you to take your art, your patents, certificates, your heirloom, your family's history and ability for you to be able to monetize your healthcare records. These are new business opportunities. There's no business model for it today. And this is where the disruption goes with it from that perspective. I put this together in terms of a typical strategic focus on how do you define a metaverse strategy. I'll stop there. Yes, there are challenges. Final slide from my perspective, the way I try to categorize the industry is in 3 I's. It makes it easy to understand and explain. Is infrastructure. These are layer 1 protocols, cryptography, the cloud infrastructures that needed to build this. Instruments, a token is a token is a token, but instrument represents value, and they represent distinct value of different kinds in the ecosystem. And of course, the fact that everything is moving towards real-time movement of assets and visibility of data, you need intelligence, which allows for not just data ownership components, privacy preservation components, but also using AI and machine learning in high gear, not only to get appropriate statistics from business perspective, but also things like financial crimes, financial analysis, value at risk, and many of the other elements that go with it. So I'm going to take a pause here, Shashank. I know it was a rushed element, and it doesn't do justice to the topic. But again, the objective of this was to inspire, not to educate. But hopefully in the next session, I'll get some chance to do this face-to-face. So I'll pause here, Shashank, and give it back to you. Financial Express team, does this make sense? Or I'm going to feedback in.
Check. Thanks a lot, Nitin, for that lovely presentation of yours. Thanks a lot. Ladies and gentlemen, with this, we close the second edition of India Blockchain Conclave 2022. We would like to thank our supporting partner, Asset Mantle, and exhibitors, ZV, Mudrex, Metaverse Blockchain Solutions, and Param Network. And I would like to thank all of you for being such a fabulous audience throughout the day. I would urge you all to proceed for the networking cocktail. Thanks a lot, everyone. Have a great evening ahead.